The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. Without objection, all members shall have 5 legislative days within which to submit additional materials to the chair for inclusion in the record. We will now proceed to today's business. I recognize myself for an opening statement. Good morning. Today's markup covers a wide range of bipartisan priorities: leveling the playing field for smaller financial institutions, improving housing, modernizing crowdfunding exemptions, and continuing our work to bring clarity to the digital asset ecosystem. Last week, this committee held a thoughtful and constructive hearing on our digital asset market structure legislation, the Clarity Act. As we all know, for years, the digital asset ecosystem has been plagued by regulatory uncertainty. The absence of clear rules of the road have not only stifled innovation, but discouraged entrepreneurs and confused investors and consumers. Digital assets and blockchain technology have the potential to fundamentally reshape how we interact with the internet. These innovations can unlock opportunity, empower individuals, and expand access to the financial system. But we need a regulatory framework in place in order to experience those benefits. The Clarity Act addresses this head-on. It draws clear lines between the SEC and the CFTC, providing jurisdictional certainty. It fosters innovation and protects consumers. Today, and moving forward, we have the opportunity to bring long-desired and much-needed clarity to the digital asset market. We will also consider bills designed to support small businesses, provide more oversight of HUD, protect the privacy of homebuyers, and much more. For example, Representative John Rose's Homebuyer Privacy Protection Act would protect potential homebuyers from unsolicited sales tactics. Representative Monica Dela Cruz's HUD Transparency Act would require the Inspector General of HUD to testify annually before Congress, providing us much-needed transparency. Representative Dan Meuser's amendment for Crowdfunding Enhancement and Small Business Support Act would increase access to capital for small businesses and startups. Each bill considered today is aimed at reducing barriers, empowering communities, strengthening accountability, and ultimately will pay dividends for the American people. I thank the staff, the members from both sides of the aisle, from both the Financial Services and Agriculture Committees, for their months of time and diligent work to get these bills where they are today. I yield back. I now recognize the ranking member of our full committee for an opening statement.
Good morning, and thank you, Chairman Hill. As we sit here, Trump has violated the sovereignty of my state of California, federalizing the National Guard and sending the Marines into Los Angeles. This is completely unacceptable to Los Angelinos, but should also be unacceptable to you, because Trump also said he wants troops everywhere in America. As Trump perverts our National Guard and military, he is also perverting basic ethics standards and conflicts of interest through his use and abuse of crypto. As a result of his crypto schemes, his net worth has skyrocketed to $5.6 billion, of which, according to Forbes, $1.2 billion is from his crypto scams. This is while our constituents are struggling to pay their mortgage or rent and put food on the table. And Republicans are making Americans' lives worse by ramming through this big, ugly bill to slash funding for food stamps, Medicare, and Medicaid so that billionaires like the world's worst ex-boyfriend, Elon Musk, can get a tax cut. This isn't Trump derangement syndrome. This is Trump destruction syndrome, because everything this president touches, he destroys. This committee should be focused on this unfolding coup, thievery and bribery, and the economic crisis hitting American families. Instead, Republicans are jamming through the Calamity Act, which will not only legitimize Trump's corruption, but also creates enormous loopholes that expose investors to fraud and weakens our national security. This bill is bad for startups, giving even more power to mega banks and crypto giants. And despite industry's requests for clarity, this bill creates vague new definitions that will result in endless litigation. And while the bill's sponsors say this is the most significant rewrite of securities laws since 1933, the committee hasn't bothered to invite the chairman of the SEC to testify. In fact, this same SEC chair has refused to provide Democrats with his thoughts on the bill. I suppose he's decided that if he can't say something nice, he won't say anything at all, or Trump won't allow him to say anything. It is for this reason that Democrats are doing everything we can to make sure the public knows what's in this bill. We held a Minority Day hearing to give voice to investor advocates, securities experts, and national security experts. We've written several letters demanding investigations into the numerous schemes the president and his family are engaged in. Yesterday, committee Democrats hosted a page turn, which academics and experts. I've also introduced my bill, the Stop Trump in Crypto Act, to block the president, vice president, members of Congress, and their immediate families from engaging in crypto corruption and blatant conflicts of interest. And today, we're offering several amendments to stop the harm in this bill. But let's call this bill what it is. It is a rushed, complicated, unnecessary legislation that ignores the rampant crypto corruption happening down the street while leaving our nation's investors out to dry. We need to go back to the drawing board on this one. It is ironic that as we consider the Calamity Act, which is sure to lead to the next financial crisis, if passed, we're also considering Mr. Green's bill, which responds to the failures of the second, third, and fourth largest banks in American history. And after today, I urge the chairman to bring up the other Democratic bills that respond to those bank failures, many of which the Republicans have supported. I'm also pleased that we will consider Representative Beatty's bill to strengthen minority depository institutions' efforts alongside other community financial institutions so that they can continue to support small businesses and help underserved communities thrive. Passing this bill today is affirming this committee's commitment to MDIs and other small lenders. With that, I yield back the balance of my time.
The gentlewoman yields back. Pursuant to notice, I call up H.R. 2808, the Homebuyer Privacy Protection Act, which was introduced by the gentleman from Tennessee, Mr. Rose. The clerk will report the bill, which was distributed in advance.
H.R. 2808, to amend the Fair Credit Reporting Act to prevent consumer reporting agencies from furnishing consumer reports under certain circumstances and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. The gentleman from Tennessee has an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report the amendment.
An amendment in the nature of a substitute to H.R. 2808, offered by Mr. Rose of Tennessee, designated as Rose TN 014.
Without objection, the amendment is considered read and will serve as base text for the purposes of amendment. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you very much, Chairman Hill and Ranking Member Waters, for holding this important markup today. And I would also like to thank the committee for including my bill, H.R. 2808, the Bipartisan Homebuyers Privacy Protection Act, which currently has over 80 co-sponsors in today's markup. Before I discuss the specifics of my bill, I want to extend my heartfelt gratitude to Congressman Richie Torres, who has been an outstanding co-lead and steadfast advocate for the Homebuyers Privacy Protection Act. This has been a long journey to get H.R. 2808 into today's markup, and I applaud Congressman Torres's unyielding advocacy to put a stop to the scourge of abusive mortgage trigger leads. The Homebuyers Privacy Protection Act is designed to eliminate abusive marketing via trigger leads. My bill would target trigger lead abuses while allowing mortgage servicers and originators to maintain relationships with their existing customers. Trigger leads occur when a consumer applies for a mortgage, whether a primary home purchase loan or a refinance loan. An inquiry to a credit reporting agency by the lender is a quote-unquote trigger that notifies the credit bureau that the consumer is interested in applying for financing. The trigger lead is then sold by the credit bureaus to data brokers, including other lenders, without the consumer's knowledge or approval. The Homebuyers Privacy Protection Act would allow trigger leads to be permissible under the Fair Credit Reporting Act only in limited circumstances during a real estate transaction. Under our bill, a consumer reporting agency may not furnish a trigger lead to a third party unless the consumer has opted in and the third party is a federally insured depository institution, a federally insured credit union, or is the originator or servicer of an existing mortgage of the borrower. If a consumer has a pre-existing relationship with a covered entity, then they can also furnish a trigger lead. In response to stakeholders' feedback, including from my colleague from California, Congresswoman Young Kim, the ANS we are considering today includes a GAO study on the value of trigger leads received by text message. Over the years, I have heard from individuals from all walks of life about their deep-seated frustrations when it comes to being inundated by abusive mortgage trigger leads, being contacted dozens or even hundreds of times a day after applying for a mortgage is simply unacceptable. Many abusive trigger leads occur in nearly all hours of the day and night. This is especially true if the trigger lead user resides in a different time zone than the individual they are contacting. It is also important to note that many of these merciless trigger leads come from unscrupulous companies that misrepresent the important fact that they are not affiliated with the mortgage company the individual initially applied with. Another important factor to consider is that when consumers get flooded with trigger leads, they often blame their mortgage originator, despite mortgage originators having no role in selling their information. This can easily sour an otherwise positive relationship between a borrower and their mortgage originator. Lastly, I want to emphasize just how much support there is for this legislation. I have a letter here dated June 9th, 2025 from 43 attorneys general and members of the National Association of Attorneys General supporting this bill. I also have a coalition support letter dated today that has been signed by 16 different supporting organizations, including the American Bankers Association, America's Credit Unions, the Broker Action Coalition, the Center for Responsible Lending, the Consumer Federation of America, the Housing Policy Council, Independent Community Bankers of America, Leading Builders of America, the Mortgage Bankers Association, and the National Association of Mortgage Brokers. Additionally, I also have a support letter from the Mortgage Bankers Association. Mr. Chairman, I ask unanimous consent to insert the text of all three of these letters into the record.
Without objection.
In closing, I urge each of my colleagues to vote yes on my ANS to H.R. 2808, the Homebuyers Privacy Protection Act, and I yield back the balance of my time.
The gentleman yields back. The chair recognizes the ranking member of our full committee, Mrs. Waters, for 5 minutes.
I move to strike the last word.
Gentlewoman's recognized.
I want to thank Representative Rose and Representative Torres for the work on this bill and appreciate that our committee is taking action to improve data privacy in the mortgage market. No one likes being blasted with unwanted calls or text messages for credit product options that you did not ask for. However, we're not debating this bill in a vacuum. As I said last week, I find it rich that any Republican would claim to support data privacy when they have done nothing about Trump letting Elon Musk and his Doge minions steal the sensitive data from hundreds of millions of Americans. Musk has taken everything from our personal health records, consumer data, and business records to Social Security numbers and tax data, and we still don't know what they've done with our data. Now that Trump has turned against Elon, perhaps committee Republicans will start doing their job and find out what Elon has done with our data by investigating the data Elon and Doge obtained from the Consumer Financial Protection Bureau and the Treasury Department. With respect to H.R. 2808, I want to acknowledge the work of our former colleague, Representative Lacey Clay, who helped pave the path for first introducing a bill to curb abrasive trigger leads back in 2020. Let's discuss what a trigger lead is. When consumers apply for a mortgage loan or seek to refinance their mortgage with a bank or credit union, their credit is pulled from one of the credit bureaus like Equifax. The credit bureaus then sells your information to other financial institutions without your permission with a so-called trigger lead, notifying them that you are seeking a mortgage. Those firms then quickly bombard you with phone calls, text messages, and other communications with mortgage loan offers, many of which may be misleading, deceptive, or predatory. Importantly, Representative Clay's bill to curb this harmful practice had no exceptions and simply required a consumer to opt in before their information is shared with other companies when they apply for a mortgage loan. I still think this is a better approach and one that committee Democrats argued for when the committee considered former Chair McHenry's private data seat bill. We should put consumers in the driver's seat to fully control the use, sharing, and selling of their own data. That said, this bill is still a positive step forward. That goal of strengthening data privacy protections and is supported by a number of groups, including Consumer Federation of America, National Consumer Law Center, National Association of Home Builders, Independent Community Bankers of America, and America's Credit Union. So I urge members to support the bill, and I yield back.
Gentlewoman yields back. The gentleman from South Carolina, Mr. Timmons, is recognized.
Thank you, Mr. Chairman. I move to strike the last word.
The gentleman's recognized for 5 minutes.
Thank you, Mr. Chairman. It's refreshing to see this committee engage in policymaking. This really is a great bill. I strongly support H.R. 2802, the Homebuyers Privacy Protection Act, legislation I've proudly championed alongside my friend Mr. Rose since early last Congress. This bill gives homebuyers greater control over their personal information while preserving their ability to shop for competitive mortgage rates. Specifically, it prohibits the use of mortgage credit inquiry data for marketing purposes unless the consumer has given explicit consent, thereby curbing the sale of so-called trigger leads. As someone who recently went through the mortgage application process, I experienced firsthand the overwhelming volume of unsolicited calls and text messages triggered by the sale of my personal data. So I refinanced a house. I got a home equity line of credit 4 or 5 months ago, and then I just closed on a house, a couple weeks ago. I've probably gotten no less than 1,000 calls and text in the last 4 or 5 months. And as somebody that gives their cell phone number out to their 800,000 constituents, my phone already rings a lot. So to get hundreds and hundreds of phone calls a day promising me better interest rates or whatever it is, it really is just outrageous. And we need to act, and I am so happy that we are. I know I may sound like a broken record, but my personal experience underscores why this legislation is so urgently needed. We must protect consumers from this flood of unwanted and, in some cases, predatory communications. I look forward to advancing this bill out of committee today and ultimately sending it to the President's desk to ensure future homebuyers do not face the same barrage of intrusions when applying for a mortgage. And with that, Mr. Chairman, I yield back. Thank you.
The gentleman yields back. Who seeks recognition? The gentleman from Missouri is recognized to strike the last word.
Mr. Chairman, I move to strike the last word.
Gentleman's recognized for 5 minutes.
Mr. Chairman, trigger leads often occur when a customer applies for a mortgage and a credit bureau, without the consent or knowledge of the patron, sells that information to other lenders. Consumers have experienced a sharp increase in the volume of unwanted calls, texts, mails, emails, solicitations from lenders that consumers with whom consumers have no relationship. I have constituents who've applied for mortgages and are receiving dozens or hundreds of trigger lead solicitations. Some are confusing or even designed to deceive the consumer into believing they came from the lender to whom the customer originally applied. Additionally, trigger leads can damage the original lender's relationship with their customers, who often mistakenly believe it was their lender who sold their information. I support the Homebuyers Privacy Protection Act and applaud the work of Congressman Torres and Congressman Rose for advancing this legislation. Thank you, Mr. Chairman.
Gentleman yields back. The gentleman from South Carolina. is recognized.
Thank you, Mr. Chairman. Move to strike the last
The
word.
gentleman is recognized for 5 minutes.
Just want to thank John Rose for putting this forward. Folks, those of you who've never maybe bought a house, have rented all the time, I don't care whether it's commercial or residential, this is just an example of paperwork we sign. There is no other industry that gives away your private files like the credit bureaus, and to get money on it is just wrong. You will not, and this is my line of work, you will not find a home builder, you will not find really a lender, you won't find anybody that would oppose Mr. Rose's bill at all. So I hope it's in bold print that they never really pick out the fine language about not wanting to be in. So I'm hoping that by passing this, they don't have to worry about that. This is a good bill. Thank you for all the work you've done, Congressman Rose, and I yield back.
Gentleman yields back. Gentleman from Illinois is recognized.
Thank you. Move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I support H.R. 2808, the Homebuyers Privacy Protection Act, which will protect the privacy of mortgage applicants and prevent them from being bombarded by unwanted solicitations and scams. Legislation will curtail what are referred to as trigger leads in the mortgage industry. This practice, while meant to provide consumers with competing offers of mortgage products, often results in consumers being inundated with spam. Trigger leads often also result in the widespread sharing of consumer data with an unknown number of legitimate and illegitimate lenders. So that's why I, along with a bipartisan group of more than 80 co-sponsors, support this legislation, which will protect consumers' privacy and curb the abuses that have come with the sale of trigger leads. I'd also like to note that, this is sort of the tip of the iceberg. There's a lot of oversharing of personal data, and we have to get our arms around this. This does not happen, frankly, in countries that have a comprehensive financial privacy regime, which we do not, and so we're left with these little Band-Aid after Band-Aid after Band-Aid to the worst abuses. But this legislation has widespread support from consumer advocates as well as from mortgage, banking, and real estate industries. I support the bill and yield back.
Gentleman yields back. Gentleman from North Carolina.
Move to strike the last word.
The gentleman, Mr. Moore, is recognized for 5 minutes.
Thank you, Mr. Chairman. I'm proud to also support this important legislation to end the abusive use of trigger leads in the mortgage market. Trigger leads occur when a consumer applies for a mortgage and a credit bureau sells that information to competing lenders, often without the consumer's knowledge or consent. This practice undermines consumer trust and exposes families to misleading solicitations, bait and switch offers, and even outright scams. Borrowers are flooded with unwanted calls and emails from lenders they don't know, driving confusion and encouraging poor decision-making and eroding confidence in the home buying process. It's time we stand up for consumer privacy and promote integrity in our lending system. Honest lenders who cultivate long-term relationships should not be undercut by bad actors exploiting trigger leads. By ending this predatory practice, we can restore fairness to consumers and create a level playing field for responsible mortgage providers. I want to thank Congressman Rose and Mr. Chairman, you as well, for your leadership in this important legislation. With that, I yield back.
Gentleman yields back. The chair recognizes the gentlewoman from Ohio, Ms. Beatty.
Move to strike the last word.
The gentlewoman is recognized for 5 minutes.
Thank you, Mr. Chairman. And I would also like to voice my support for my colleagues' bill and the Home Buyers Privacy Protection Act, which I am proud to say I am also a sponsor of. Let me also say that I associate myself with the words of Ranking Member Waters. You have heard a lot about this bill this morning. It's putting consumers back in control of their personal information. And right now, when someone applies for a mortgage, their data can be sold without their knowledge, leading to all of those unwanted calls that we've heard my colleagues talk about, and certainly some confusion. This bipartisan bill is also a means to end that abusive practice while preserving the legitimate offers of credit. And it ensures that the home buyers can focus on what they should be focusing on with their new home ownership. And that's enjoying that home ownership with the confidence and privacy that they deserve. So I'm a proud supporter of it, and I do urge my colleagues all to vote in favor of this bill. Thank you, Mr. Chairman and Ranking Waters, and I yield back.
Gentlewoman yields back. Is there further debate? I now recognize myself for 5 minutes. I support H.R. 2808, the Homebuyers Privacy Protection Act. This bill updates how personal data is handled during the mortgage process. When a prospective homebuyer applies for a mortgage, it can trigger the sale of their personal information to other lenders, often without their express knowledge or consent. And as we've heard today, this is known as a trigger lead. While there's technically an option to opt out of this practice, very few individuals are aware of this happening, let alone how to stop it, as indicated by the gentleman from South Carolina, Mr. Timmons. As a result, individuals already navigating one of the most time-consuming and complex financial decisions of their lives may face an onslaught of hundreds, sometimes thousands, of unsolicited phone calls or text messages. These calls often come from an unknown lender, and in some troubling cases, from callers posing as the individual's original lender or misrepresenting the terms of an offer. And if that's not just confusing, it also creates the opening for deceptive actors to exploit individuals during an incredible and important, stressful financial moment in their lives. H.R. 2808 modernizes the system by putting clear, common-sense guardrails around the sale of trigger leads. Under the bill, credit reporting agencies would only be allowed to furnish a trigger lead to a lender which the individual already has a relationship, such as the originator of their current mortgage, the servicer of their mortgage, or a financial institution where they have an existing account. Additionally, a third-party company may receive an individual's trigger lead only if they can document the individual has consented to share their information. This ensures Americans have better control over their privacy and financial data and not unknowingly get caught up in a sales race. This bill strikes the right balance. It protects individuals from abuse and confusion while still allowing legitimate competition and choice in the mortgage market. As the committee continues broader efforts to update federal standards for financial data protection, we should apply these same principles across the board, giving Americans more control over who can access their personal financial information. I want to thank Mr. Rose and Mr. Torres for their tireless work on this issue over the past 2 Congresses. I'm pleased to see this bill advance to a markup, and I urge my colleagues to support it. And I yield back. Does anyone else seek recognition?
Mr. Chairman, I have an amendment at the desk.
Just a moment, Ms. Kim. Hearing none, we'll now move to amendments. Does anyone wish to offer an amendment to the substitute?
Yes,
Ms. Kim?
Yes, I have an amendment at the desk.
We'll pause while Ms. Kim's amendment is distributed. Mr. Sessions?
Mr. Chairman, thank you very much. I would reserve a point of order.
The gentleman from Texas has reserved a point of order. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2808, offered by Mrs. Kim of California, designated as Kim CA 035.
Without objection, the amendment is considered read, and the gentlewoman from California is recognized to discuss her amendment.
Thank you, Chairman Hill. We have all heard stories. Consumers apply for a home loan, and within hours, their phones are ringing nonstop. I know that buying a home can be an extremely stressful and frustrating process. And the last thing you want is something that adds more stress and confusion. That is why I've always said that we need to stop the phone calls, but still preserve tools that allow consumers to shop around. Unfortunately, this legislation before us today does not actually put the consumer first. Instead, we're cutting corners in ways that will make housing more expensive for consumers rather than less. The data shows that when consumers shop around for mortgages, 45% of them receive a lower offer. However, more than 50% of home buyers only get one loan offer. When properly utilized, pre-screened mortgage offers serve as a valuable tool to put offers in front of consumers that are lower than the rates that they are considering. In Orange County, the average home that a working family owns costs close to $1.5 million. Just half a percentage point difference in an interest rate could save you over $150,000. Unfortunately, if today's bill were to be passed into law, it would be our constituents who would suffer the most as they lose a key tool to compare offers. We should be stopping phone calls, going after bad actors who are illegally using trigger leads to blow up your phones with more calls, not taking away pre-screened mortgage offers from locally owned institutions that want to compete and give home buyers the leverage that could save them thousands of dollars. So, Mr. Chairman, I intend to withdraw my amendment today, and in doing so, hope that you and my friend from Tennessee, Mr. Rose, will continue to work together with me to improve this legislation. I truly believe that we can find a solution that puts the consumers first and that both protects and empowers them throughout this process. But before I yield back, I would like to ask for unanimous consent to submit this comment letter from the Consumer Data Industry Association.
Without objection.
Thank you. They talk about the the provisions in the Homebuyers Privacy Protection Act in the record. So thank you for allowing me to do that. And with that, I yield
Would the
back.
gentlewoman yield? Would the gentlewoman yield?
Yes.
I just want to thank the gentlewoman for working and her advocacy from her point of view and her working with Mr. Rose and Mr. Torres on the bill, and appreciate her offering and withdrawing her amendment, and I yield back to the gentlewoman. Does the gentlewoman yield back?
Yes, I do.
The gentlewoman yields back. Is there further debate on Mr. Rose's amendment in the nature of substitute? And first, let me ask the gentleman from Texas, do you still insist on your point of order?
Mr. Chairman, I'll remove my point of
The
order.
gentleman removes his point of order. Ms. Kim, just a point, you do withdraw your, you do confirm that, yes.
I withdraw my
The gentlelady has withdrawn her amendment. Mr. Barr,
Move to strike the last word.
the gentleman's recognized for 5 minutes.
I want to thank both of my colleagues for their collaboration, their work, both the author of this bill, Mr. Rose, and also for the collaboration and input from my friend from California, Ms. Kim. Let me just thank Mr. Rose for his steadfast dedication to protecting Americans' financial privacy. The home buying process is complicated, it's stressful, and in communities across Kentucky, I hear from constituents who feel overwhelmed not just by the process, but by the flood of unwanted calls and messages that often follow a mortgage credit check. Under the current system, it is too easy for third parties to exploit consumer data without permission by using trigger leads to aggressively market financial products, sometimes in deceptive or misleading ways. This hits our veterans especially hard, as they often move more frequently and may not have time to sift through dozens of unsolicited offers. This bill, H.R. 2808, will allow the use of trigger leads only in narrow circumstances, such as when the consumer has expressly consented to the sharing of their data, or has an existing relationship with the lender, such as through a current mortgage or account. It's a targeted, bipartisan measure, and it respects a consumer's right to control how his or her personal data is shared. I want to thank my friend from California, Ms. Kim, for her support of competition and choice. I also support competition and choice in mortgage lending, but that competition must be accommodated consistent with consumers' control over and rights to their own personal financial information. So I support Mr. Rose's common sense privacy measure, and I urge my colleagues to do the same. I yield back.
Gentleman yields back. Is there anyone seeking recognition? Seeing none, there be no further discussion or amendments to the bill. The question now occurs on the adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye. Aye.
Aye.
All those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it. For what purposes, gentlemen from Tennessee, seek recognition?
I'd like to request a recorded vote.
A recorded vote has been requested. All those in favor of a recorded vote, raise your hands. A sufficient number having raised their hands, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. The vote on this question is postponed. We'll now move to the next bill for consideration. Pursuant to notice, I call up H.R. 2835, the Small Bank Holding Company Relief Act, introduced by the gentleman from Florida, Mr. Donalds. The clerk will report the bill, which was distributed in advance.
H.R. 2835, to raise the consolidated assets threshold under the Small Bank Holding Company Policy Statement and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. The gentleman from Florida has an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report the amendment.
An amendment in the nature of a substitute to H.R. 2835 offered by Mr. Donalds of Florida, designated as Donald 061.
Without objection, the amendment is considered read and will serve as the base text for the purposes of the amendment. The gentleman from Florida, Mr. Donalds, is recognized for 5 minutes to explain his amendment.
Thank you, Mr. Chairman. The Small Bank Holding Company Relief Act raises the consolidated asset threshold of bank holding companies to qualify as small bank holding companies from $3 billion to $25 billion. It does not change capital rules and regulations for subsidiary banks. Raising the asset threshold for small bank holding companies frees up bank holding companies to make equity investments in subsidiary banks, thereby raising capital levels and enabling lending in support of local economies. Small, mid-sized, and community banks are vital economic engines for businesses of all sizes throughout the country and play an important role in restoring Main Street America. Community banks make up about 99% of all banks and employ nearly 700,000 Americans. 60% of all small business loans are made by community banks, and 80% of banking industry agriculture loans come from community banks. A healthy, diverse, small, mid-sized community banking sector drives competition that ultimately benefits consumers. Small banks and their holding companies need regulatory relief to grow and compete with their larger peers, allowing them to operate with slightly elevated debt levels to pursue pro-growth mergers will allow them to compete more meaningfully. Codifying the regulatory asset threshold in law, like the $3 billion mark, means that when economic conditions change, those thresholds may be updated, like this legislation seeks to do. Economic conditions have significantly changed since consolidated asset threshold was last increased back in 2018, and this legislation would bring much-needed regulatory relief and long overdue flexibility to hundreds of smaller financial institutions across the entire nation. Adjusting for inflation is one way to potentially revise the threshold, but when you consider that the value of assets held by U.S. commercial banks has risen around 42.5% since the last time this threshold was raised, it is clear that we need to go further. So let's face it, I think this is a great piece of legislation. I hope that we have full support for it today. I want to thank Chairman Hill. I want to thank committee staff who've had an open door on this legislation, and we've had a great conversation. I look very forward to the rest of this debate, and I yield back the balance of my time.
The gentleman from Florida yields back. The ranking member of the full committee, Mrs. Waters, is recognized.
Thank you. I move to strike the last word.
Gentlewoman's recognized 4 or 5 minutes.
I strongly support our community banks, including our rural banks, our minority depository institutions or MDIs, and our community development financial institutions or CDFIs. To that end, I'm pleased that Chairman Hill agreed to consider one of our Democratic bills to do so at this markup. Representative Beatty's bill will codify and enhance Treasury's Mentor Protege program to ensure community banks of all stripes, including rural banks and MDIs, can be partnered with the larger banks to receive the advice and support they need to grow and thrive. Unfortunately, Representative Donald's bill is a different story. It will significantly increase the asset threshold for the Federal Reserve's small bank holding company and savings and loan holding company policy statement without any rationale or evidence to justify the increase. The Fed's statement was first implemented, that is, the Fed's policy statement was first implemented in 1980 to help the smallest banks with less than $150 million in assets acquire other small banks. It allows these small holding companies to take on much more debt than they typically to finance the acquisition. As it has evolved with time, the policy statement also exempts these small bank holding companies from certain capital requirements and reduces their reporting requirements. Congress has raised this threshold several times, ultimately to $3 billion in 2018, where it stands today. Now, I could be open to a much more modest increase to account for inflation or consider more enhanced ways to improve the scope of a policy like this instead of resorting to an asset threshold. But no justification has been provided to the committee thus far to support dramatically increasing this threshold from $3 billion to $25 billion, which represents a staggering 833% increase. A $25 billion threshold would not only cover small community banks, but it would cover many mid-sized banks also. In fact, it would cover roughly 98% of all bank holding companies and savings and loan holding companies. Republicans posted an earlier version of the bill at the committee's first hearing on community banks in February that proposed the threshold to $10 billion, just $10 billion, not $25 billion. However, I found it increasing that none of the witnesses, including several bankers that were on the panel, said a single word in support of this bill. There were no questions asked and no discussion of it in the testimony we received, including no mentions of any studies or other evidence to justify increasing the threshold to $10 billion, let alone $25 billion. Republicans often say regulators should do all kinds of impact studies and cost-benefit analysis before issuing a new rule. Well, where's their studies and analysis that members can point to here? Without further due diligence, I urge members to reject this deregulatory bill disguised as a community bank bill, and I yield back.
The gentlewoman yields back. Who seeks recognition? The gentleman from Kentucky, Mr. Barr, the chair of our Financial Institutions Subcommittee, is recognized.
Thank you. I move to strike the last word.
Gentleman's recognized 4 or 5 minutes.
Thank you, Mr. Chairman. Thank you for bringing this important piece of tailoring legislation to the markup. And I thank my friend from Florida, Mr. Donalds, for his leadership on this. And I'm proud to support H.R. 2835, the Small Bank Holding Company Relief Act offered by Mr. Donalds. This bill simply updates the asset threshold in the Federal Reserve Small Bank Holding Company policy statement from $3 billion to $25 billion. It's a long overdue adjustment that better reflects the scale and scope of today's banking landscape. Since the last bipartisan threshold increase in 2018, The total assets held by U.S. commercial banks have grown over 40%, from $16.7 trillion to more than $24 trillion. Yet the definition of a small bank holding company hasn't kept pace. In Kentucky, particularly in the rural communities I represent, community banks play an outsized role in supporting small businesses, family farms, and local economic development. Unfortunately, these same institutions face disproportionately high regulatory costs. Raising the threshold under the Fed's policy statement helps level the playing field and gives these banks flexibility to grow responsibly. This bill doesn't remove oversight. It only applies to well-capitalized institutions and excludes those with significant non-bank or off-balance sheet activities. The policy already has strong guardrails in place, and the Fed continues to monitor leverage, capital, and dividend practices. This is not, as the ranking member would suggest, a deregulatory free-for-all. It's about modernizing an outdated framework so that small, well-managed banks can access capital and expand services without being held back by rules written for a different era. When we let outdated thresholds drive regulatory policy, we end up hurting the very institutions that are most connected to their communities and least responsible for systemic risk. This bill also reflects the simple economic reality. Rising asset values, inflation, and industry consolidation have all outpaced the current $3 billion threshold. If we don't adjust it, we risk stifling small bank growth and discouraging new entrants into the market. Bottom line is we need a diversified banking sector. And if we don't enhance tailoring, then we risk greater consolidation, which actually creates systemic risk. Providing this targeted regulatory relief in a bipartisan way is a common sense fix. It will strengthen community banking, strengthen financial stability, strengthen the American banking system, and it will not weaken oversight. I urge my colleagues to support it. Let's make sure small banks have the tools they need to thrive. I yield back.
Gentleman yields back. Is there further debate? I recognize myself for 5 minutes. I support H.R. 2835, the Small Bank Holding Company Relief Act, introduced by Mr. Donalds of Florida. This bill fits squarely within the committee's goal of trying to update regulations so they better reflect today's banking system. Small bank holding companies face real challenges with accessing funding, especially when they're trying to grow through acquisitions. While the Federal Reserve traditionally expects bank holding companies to be strong enough to support their subsidiaries without relying heavily on debt, it also recognizes that smaller banks often need to use debt financing out of necessity. Back in 1980, the Fed set a policy of allowing small bank holding companies to use up to 75% debt for acquisitions. But since 2018, that threshold has not been updated, even as the value of the assets held by commercial banks has increased 43%. If adjusted for this growth, the threshold would now be nearly $4 trillion. This bill simply updates the threshold to reflect today's banking landscape. It helps smaller, less complex institutions stay competitive and continue to serve their communities. When regulations don't evolve and fail to account for risk properly, it's smaller banks and their customers who frequently suffer most. We need rules that support a healthy growth and competition across all sizes of our banking system and not be blocked by unnecessary government red tape. I thank Byron Donalds for introducing this important bill, and I encourage our members to support it. And I want to echo a comment that Chairman Barr made about the Federal Reserve's leadership and discretion here. This is not green-lighting the use of debt in every instance, because this is for well-capitalized, well-managed, highly rated financial institutions subject to the approval, obviously, of their primary regulator, both for the structure of an acquisition, for example, and the use of debt and equity in that matter. This simply just gives the freedom for those growing, small community and mid-sized institutions to have the flexibility of using this rule effectively, subject to their primary regulator's oversight. So I do encourage a yes vote, and I yield back. Does anybody seek recognition? Hearing none, we'll now move to amendments. Does anyone wish to offer an amendment to the nature of substitute? For what purpose does the gentleman from Illinois seek recognition?
I have an amendment at the desk.
Dr. Foster has an amendment at the desk. We will pause while that amendment is distributed. Gentleman from Kentucky.
Reserve a point of order.
Gentleman from Kentucky is reserved a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2835, offered by Mr. Foster of Illinois, designated as amend H.R. 2835-3.
Without objection, the amendment is considered read. The gentleman is recognized to discuss his amendment for 5 minutes.
Thank you, Mr. Chairman. Well, I oppose the underlying bill as written because it arbitrarily increases the asset threshold for bank holding companies and savings and loan companies to be exempt from important prudential safeguards. It does so without any cost-benefit analysis and without any real knowledge or understanding of the past history of banking crises. This legislation increases the existing threshold for banks to qualify for the small bank holding company policy statement from $3 billion to $25 billion, a more than 800% increase. This 800% increase is justified neither by inflation, which might argue for an increase from $3 to $4 billion, which is what my amendment does, or by total assets, which would argue perhaps for a 42% increase in this number, not 800% increase. As a result, this would allow roughly 98% of bank holding companies to take on additional debt to finance acquisitions, seek exemptions from risk-based leverage capital rules, and have less frequent regulatory reporting requirements. What could possibly go wrong? These requirements were implemented to ensure that banks and their holding companies remain financially stable and able to serve their customers in times of stress, such as such an arbitrary adjustment of $25 billion is worthy of a lot more examination than we're giving today, especially when past congressional action has simply roughly followed inflation and resulted in significantly smaller increments. Congress last year increased the threshold, and I guess last increased in 2018 from $1 billion to $3 billion. And if adjusted for inflation, as I said, that $3 billion should be increased to roughly $4 billion today, which is what my amendment does. And it also directs the GAO to conduct a study to better inform the effectiveness of the threshold that's set under the small bank holding company policy statement, including its effects on community banks, on competition, and on the safety and soundness of these institutions. GAO would be asked to explore how the consolidated asset threshold under the policy statement interacts with other regulatory obligations of community banks and savings and loan holding companies. Finally, my amendment would ask the GAO to recommend alternatives to the existing thresholds and ways to ensure that its requirements evolve perhaps more automatically as with market trends to support small banks and savings and loan and holding companies for the communities they serve. I believe that it's important to gather additional information before making such an enormous change to this threshold and to consider alternatives that can more thoughtfully address the challenges of small holding companies that they're facing today. Finally, we should not assume that just because these firms are quote-unquote small, if $25 billion can be considered small, and therefore that they cannot collectively threaten the safety and soundness of the financial system. We've been down this road before. During the savings and loan crisis, triggered by, by a previous wave of Republican deregulation, more than 1,000 banks failed, holding more than $519 billion in assets, which was a lot of money back then, and nearly half of the existing thrifts failed. The cost to the taxpayer of this S&L bailout was 1.7% of GDP, which would correspond to over $500 billion dead loss to the federal taxpayer today. And so while I support efforts to help community banks, I do not believe this legislation hits the mark. I encourage my colleagues to support my amendment that will provide valuable insight to the effectiveness of the existing policy statement and provide alternative solutions that may better support safety and soundness of the community banks that serve our constituents. Thank you, Mr. Chairman. Yield back.
The gentleman yields back who seeks recognition. Gentleman from Florida.
Thank you, Mr. Chairman. I move to strike the last word.
Would the gentleman suspend just a minute? Mr. Barr, do you still insist on your point of order? The gentleman from Kentucky withdraws his point of order and now recognize the gentleman from Florida, Mr. Donalds.
Thank you, Chairman. Look, in short, I think we have to be careful not to just be focusing on the size of the increase, but on the impact this actually means to community banking and small banking throughout the United States. I'm glad that the gentleman raised what happened through the S&L crisis. We can also raise what happened in this body roughly 15 years ago, where small banks across the country were hit with the regulatory burden that the large, systemically risky banks were hit with after the financial collapse of 2008. And so you had small banks across the country who had to deal with the same regulatory impacts, even though they did not cause the issues that occurred during the Great Recession of 2008. They simply did not. What this does, it gives those banks more flexibility to be able to operate, to grow in size, and to actually serve communities all across the United States. Small businesses are growing in this country at a rapid pace. They need access to capital, and they are finding fewer and fewer doors because of the regulatory environment in banking brought to us by Washington, D.C. So moving the threshold from $3 billion to $25 billion not only takes into account asset growth that we've seen since 2018, it also prepares small banks for the future of America's economy, which is slated to grow. Because of the tax policies that the House of Representatives is now in negotiation with the Senate over, extending President Trump's tax policies, actually bringing in more reform policies, some deregulation policies, changing energy regulations to allow more development here in the United States. There's other pieces of legislation dealing with new forms of our economy that will be growing over time. The community banking system needs to be prepared for that and not have to come back to Washington year after year after year, not looking for relief, but looking for common sense. And so we have to prepare the banking system in the United States to actually be prepared for the future of America's economy, not be stuck in the past simply because we are afraid to look at things like what the threshold is for small banks. The Federal Reserve policy statement already includes meaningful guardrails. It applies only to bank holding companies that are not involved in substantial non-bank activities, do not engage in significant off-balance sheet activities, and do not hold material debt or equity securities other than trust-preferred securities. So as Chairman Hill said and Chairman Barr said, this applies to banks who are already operating soundly, and they continue those sound practices to continue to do further work. So I would argue that this is the right legislation at the right time. We have to have a robust community banking environment in the United States. The truth of the matter is we do not have a robust community banking industry in the United States. We have one under stranglehold by the federal government. It's time to change that. The biggest reason I argue for this is because it's not just for the banks. This impacts small businesses, no matter what city of America you're in. This impacts family farmers, no matter what county in America you are in. This impacts the little guy. This impacts people trying to grow their businesses. They typically are doing work with small banks. They are not doing it with Bank of America. They are not doing it with Wells Fargo. They are not doing it with Citi. And they have a different regulatory structure that continues to apply. What this legislation does, it gives room to small banks, to community banks, so that they can meet the needs that the American people are asking for. You go to any city in America, and I've been to a lot of them. You go to any state in America, and I've been to a lot of them. When you talk to small business owners, the number one thing they're asking for is access to capital. This legislation gives them an opportunity to have that access. We should be forward-looking into this and not be thinking about what has already occurred in the past, especially, like I said at the top of my comments, small community banks, small banks, they were not the problem. They were not the problem. They are the solution. This committee should give them the relief that they deserve. I yield back.
Gentleman yields back. Ranking member of the full committee.
I move to strike the last word.
The gentlewoman is recognized for 5 minutes.
I thank Representative Foster, our ranking member of our Financial Institution Subcommittee, for offering this amendment. Again, we've seen no evidence justifying a massive increase of 833% to $25 billion for a policy statement that is designed to help the smallest banks. In fact, Jones Day provided a legal analysis back in 2017 when Congress was considering raising the threshold when it was $1 billion, somewhere between $2 billion and $5 billion, and the law firm wrote, and I quote, "Size increases are meaningful, but many institutions at these levels may not meet the qualitative factors set by law," quote unquote. The law firm explained various other activities may disqualify them, given how larger banks tend to engage in more securities activities. Ultimately, Congress decided to raise the threshold $3 billion, but this analysis raises questions about who really would benefit with a massive increase to $25 billion. If we adjusted the current threshold for inflation, it would be about $3.8 billion today. This amendment will account for that by increasing the current threshold to $4 billion. The amendment also requires the Government Accountability Office to do the kind of impact study the supporters of this bill should have done in the first place to justify further increases. In particular, this GAO study will give Congress more data and analysis to help us explore legislative options to make the eligibility criteria more dynamic and the policy statement more effective in a way that promotes the safety and soundness of banks. This could mean permanently allowing for the asset threshold to increase based on inflation, or considering different thresholds or criteria, like allowing larger entities to qualify if they are well rated by their examiners. Since holding companies covered by the policy statement are also exempt from certain capital leverage and reporting requirements, we should also be mindful that in considering additional changes to the policy statement, I urge members to support this amendment. I yield back.
Gentleman yields back. Is there further debate on Dr. Foster's amendment? If there's no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. We will now move on to the next amendment.
Mr. Chair, request a recorded vote.
The gentleman from Illinois has requested a recorded vote. All those in favor of a recorded vote, raise your hands. A sufficient number having raised their hands, a recorded vote is so ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. We'll now move to the next amendment. There being no further discussion, there being no further amendments, without objection, the previous question on the substitute is ordered, and recorded votes on the pending amendments have been postponed. Once those votes are taken, the committee will immediately vote on the adoption of the amendment in the nature of a substitute, and then consider the question to report the measure. We'll now move to our next bill for consideration. Pursuant to notice, I call up H.R. 3672, the Securities Research Modernization Act, introduced by the gentleman from Texas, Mr. Williams. The clerk will report the bill, which was distributed in advance.
H.R. 3672, to amend the Securities Act of 1933 to expand the research report exception to include reports about any issuer that undertakes a proposed offering of public securities.
Without objection, the bill is considered read and open to amendment at any point. The gentleman from Texas has an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report the amendment.
An amendment in the nature of a substitute to H.R. 3672 offered by Mr. Williams of Texas, designated as Will TX 038.
Without objection, the amendment is considered read and will serve as base text for the purposes of the amendment. The gentleman from Texas, the one and only Mr. Roger Williams, is recognized for 5 minutes.
Thank you for that introduction, Mr. Chairman.
The coach.
Access to capital is one of the biggest challenges facing businesses across America. The ability to attract investment is essential to growing hiring and ultimately contributing to the economy. And one of the most valuable tools in that process is research. When companies go public, research reports help inform investors, improve transparency, and increase the chances of a successful public offering. Under current law, emerging growth companies can benefit from research reports during the IPO process without these reports being deemed an offer. That policy has worked. It has improved visibility to encourage investor interest and help the EGCs compete in capital markets. So my bill builds on that success. It simply says, or simply applies, that effective approach to all companies pursuing a public offering, not just a narrow group. Companies of all sizes and sectors should have the same opportunity to benefit from effective research. Expanding the safe harbor strengthens investor choice, promotes market transparency, and reports business across the country as they grow and seek public capital. So I want to thank Representative Cleo Fields for leading this bipartisan effort with me, and I urge all of my colleagues to support this common sense solution. With that, I say thank you, and I yield back the balance of my time.
Gentleman yields back. Who seeks recognition on Mr. Williams' bill? Ranking member.
I move to strike the last one.
The gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Chair, the Securities Research Modernization Act would allow broker-dealers, the entities that trade securities for customers and for themselves, to draft their own research reports on any security without their reports qualifying as a general solicitation. Currently, the law only provides for this in relation to emerging growth companies, or EGCs. We permitted this exception because EGCs are new companies that may not have a lot of analysis available in the market. But this bill extends the privilege to all issuers, no matter how large or well-known they may be. This is concerning on several levels. Let's first break down what we're talking about. A research report is simply a document, usually written by an independent financial analyst that discusses the merits of purchasing a particular stock. A general solicitation is a fancy way of saying that an investment product is being advertised and offered to the public. When something qualifies as a general solicitation, a broker is obligated to provide investors with disclosures about the issuer of the stock's underlying business, risk factors, and financial condition. By exempting broker-drafted research reports from counting as a general solicitation across the board, as this bill does, investors will be left with far less information about the stocks they are considering buying. Not to mention, investors will have fewer options to sue a broker when they make investment decisions if the product is not covered by regulation best interests, which requires brokers to only offer investment advice in the interest of their customers. Furthermore, when these research reports are produced in-house by a broker, there can be a conflict of interest in terms of what information they choose to include in these reports. This is because brokers often earn a commission when their clients buy a stock, so there may be a strong incentive to include misleading or overly positive analysis to boost sales of the stock. A prior version of this bill, which was included in a large Republican package in the 118th Congress, did not receive a single Democratic vote in both markup and the House floor. It was also opposed by multiple investor advocate groups, including AARP, the North American Securities Administration Association, or NASAA, the Consumer Federation of America, Americans for Financial Reform, and Public Citizen. For these reasons, I cannot support this bill and urge all members to vote no. Thank you, and I yield back.
Gentlewoman yields back, seeks recognition. The gentlewoman from Missouri, the chair of our Capital Markets Subcommittee, Ms. Wagner, you're recognized.
I thank you, Mr. Chairman, and I'm proud to support Congressman Roger Williams' bill, H.R. 3672, the Securities Research Modernization Act, one of our many very strong capital markets bills. This is a smart and targeted update to our securities laws, one that reflects the growing challenges that public companies face in securing independent research coverage after going public. For investors to make informed decisions, they need access to independent research. And for companies, especially smaller public companies, research coverage is often the difference between vibrant secondary market activity and a stock that's effectively invisible to investors. Over a decade ago, the Jobs Act recognized this reality by creating a limited safe harbor for research reports about emerging growth companies. What H.R. 3672 does, Mr. Chairman, is simple, but it is powerful. It expands that same common sense protection to cover any issuer pursuing a public offering, not just EGCs. This change will improve research availability, it'll increase transparency for investors, and it will help small and mid-sized companies attract capital with fewer artificial barriers. It doesn't impact analyst regulations, investor safeguards, or the substance of disclosures. It simply clarifies that publishing research in the context of a public offering is not by itself an offer under the Securities Act. That is a modest legal clarification, but one with real consequences for market participation and efficiency. I commend Congressman Williams for his leadership, and I urge my colleagues to support this bill, and I yield back, Mr. Chairman.
Is there further debate on Mr. Williams' bill? I recognize myself for 5 minutes. I'm proud to support H.R. 3672, the Securities Research Modernization Act, introduced by my good friend Roger Williams of Texas. You know, many years ago, I chaired a small cap publicly traded company, and one of the biggest challenges to both small cap companies that have been referenced, but also, as Chairwoman Wagner points out, all companies is trying to have adequate, robust coverage for investor research. A big company, a famous company might have, I don't know, I'm going to round a number, 15 analysts covering it. But a smaller cap stock or a new company or a company that doesn't have a high profile has a hard time attracting research coverage. But we want informed investors, and we want a vigorous market that has a narrow bid-ask spread for every stock. And you do that through robust investment research. And I just remember how challenging it was to even attract the attention of investment analysts across the investment community. And just like we want to have a vigorous competitive banking system with a lot of banks of all sizes, we want a vigorous broker-dealer community, broker-dealers of all sizes that are attracted to small cap, mid cap, large cap, and of course, unicorn-sized companies. So this is a great step in that direction. And the Jobs Act of 2012 recognized that importance of abundant research, particularly for small public companies like I referenced. But as Chairwoman Wagner pointed out, we need to expand that. So with over a decade of marketplace experience, this provision of protecting EGC research reports has been proven a success. If we didn't have the emerging growth companies as a part of our IPOs, our initial public offerings over the last decade, we would really have anemic numbers of initial public offerings. And this is just one of those barriers to recruiting more public companies for our American citizens to have choice in investing. So based on that success of the emerging growth company use of research, it's time to expand it. And that's exactly what Mr. Williams' bill does. It expands that safe harbor protection for research reports to cover all securities from all issuers. To be clear, research analysts remain subject to robust regulation, including the SEC Regulation Analyst Certification and the conflict disclosure requirements that FINRA promulgates, and FINRA rules also review that and protect any anti-fraud violations as well. So these protections remain untouched by this bill. This bill will promote and increase access to investment research. I think that's important to a robust capital market. It's important for more choices for American citizens to have as investment potentials in their individual retirement accounts or in their company retirement accounts. All this is important, and the more market participants we have, the lower the cost of capital for companies that want to go public. So I commend Roger Williams for his common sense bill. I thank Chairwoman Wagner for shepherding this through her subcommittee. I urge all my colleagues to support the legislation, and I yield back. Does anyone else seek recognition on Mr. Williams' bill? Hearing none, we'll move to amendments. Does anyone wish to offer an amendment in the nature of a substitute? There being no further discussion or amendments to the bill, the question now occurs on the adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay.
Request a recorded vote, Mr. Chair.
In the opinion of the chair, the ayes have it. For what purpose does the gentleman seek recognition?
Request recorded vote.
Mr. Williams requests a recorded vote. All those in favor of a recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. A vote on this question is postponed. We'll now move to our next bill. Pursuant to notice, I call up H.R. 3645, Amendment for Crowdfunding Capital Enhancement and Small Business Support Act, introduced by the gentleman from Pennsylvania, Mr. Meuser, the chair of our Oversight Subcommittee. The clerk will report the bill, which has been distributed in advance.
H.R. 3645, to amend the Securities Act of 1933 to raise the offering amount threshold from when issuers using the crowdfunding exemption are required to file financial statements reviewed by a public accountant who is independent of the issuer and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. The gentleman from Pennsylvania has an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report the amendment.
An amendment in the nature of a substitute to H.R. 3645, offered by Mr. Meuser of Pennsylvania, designated as H.R. 3645 ANS.
Without objection, the amendment is considered read and will serve as the base text for the purposes of amendment. The gentleman from Pennsylvania, Mr. Meuser, is now recognized to explain his amendment for 5 minutes.
Thank you, Mr. Chairman. I move to strike the last word.
Gentleman's recognized.
I urge my colleagues to support my bill, the Access Act of 2025, H.R. 3645. Regulation crowdfunding, Reg CF, has been one of the great bipartisan success stories to come out of the Jobs Act. It gives the smallest of businesses a shot at raising that critical first $25,000 to $250,000. This is capital too small for venture funds and too risky for traditional loans, yet absolutely essential for hiring those first employees and opening the doors. Since Reg CF launched, more than 5,000 companies have raised over $2 billion while maintaining one of the lowest fraud rates of any SEC exemption. But there's a catch. The moment a founder tries to raise more than $100,000, they must shell out in the neighborhood of $15,000 for an audited financial review, a significant portion of the very money they're trying to raise. This threshold is outdated and should be modernized. This higher threshold works. We saw the proof during COVID when the SEC temporarily lifted the audit threshold to $250,000, offering spiked, capital moved faster, and investor safeguards stayed strong. The Access Act simply locks in that proven $250,000 threshold and importantly lets the SEC elevate it
up to $400,000 when inflation or market data warrants it, without waiting on another act of Congress. I want to thank Chairman Hill, Ranking Member Waters, and my colleagues across the aisle for their collaboration. We kept rigorous investor protections in place while still giving small business the flexibility they need. We have shown that promoting entrepreneurship and protecting investors are not mutually exclusive. In fact, they go hand in hand. Bottom line, the Access Act keeps capital and future wealth in our local communities, reduces the red tape for the smallest of entrepreneurs, and future-proofs regulation crowdfunding, all without sacrificing a single investor safeguard. I urge my colleagues to vote yes, and I yield back.
The gentleman from Pennsylvania yields back. Who seeks recognition? The gentlewoman, the ranking member of our full committee, Ms. Waters, is recognized.
I move to strike the last word.
Recognized for 5 minutes.
Thank you, Mr. Chair. I support this bill, as it builds on the work former Chair McHenry and I did to create a functioning crowdfunding security in our marketplace. Regulation crowdfunding, or Reg C-F, which was first created by the Jobs Act of 2012, allows qualifying businesses to raise up to $5 million in a 12-month period from potentially thousands of investors, including from retail investors. As the rules currently stand, if a business wants to raise $124,000 or more using crowdfunding, their financial statements must be reviewed by an independent public accountant. While I'm a strong proponent of having publicly disclosed financials that are reviewed or audited, hiring an accountant can be expensive, and we do not want to make it prohibitively costly for small businesses to have access to capital. During the COVID-19 pandemic, the Securities and Exchange Commission, or SEC, temporarily raised the limit to $250,000, and I support making this permanent. By raising the current limit to $250,000 and giving the SEC the discretion to raise it up to $400,000 at the recommendation of the investor and small business advocates. This bill balances the needs of small businesses with the needs of investors. And I'll note that the CEO must still attest to the accuracy of the financial statements, but doesn't need to go through the expensive formal auditing process until the company has the financial wherewithal to do so. So I want to thank Mr. Meuser and Chairman's staff for working with my staff to ensure this bill mirrors the temporary actions of the SEC, and urge all members to support it. I thank you, and I yield back.
The gentlewoman yields back. The chair recognizes the chair of our Capital Markets Subcommittee, Ms. Wagner of Missouri.
I thank you again, Mr. Chairman, and I am indeed pleased to support H.R. 3645, the Access Act, authored by Congressman Meuser. Yet again, another strong capital markets subcommittee bill, and I'm so pleased we're able to come to a bipartisan agreement on this piece of legislation. For many small businesses, regulation crowdfunding, or Reg CF, is the only realistic path for raising early-stage capital outside of friends and family. Unfortunately, the structure of the current rules often treats these micro issuers like they're conducting multi-million-dollar offerings, and that is simply a mismatch. The Access Act makes a simple but important change. It updates the financial statement review threshold to better reflect the modest size and risk profile of most Reg CF offerings. This is not about rolling back investor protections. It's about right-sizing compliance to fit the scale of capital being raised. When regulatory costs exceed 10% of the funds an entrepreneur is trying to raise, the rules aren't serving anyone, not issuers, not investors who want to access early-stage deals. We've already seen this policy tested in the real world. The SEC's temporary relief during the pandemic proved that higher thresholds can work without compromising integrity. This bill puts the common sense into law. I commend Mr. Meuser for his work, and I urge my colleagues to support the Access Act, and I yield back, Mr. Chairman.
The gentlewoman yields back. Who seeks recognition on Mr. Meuser's ANS? I recognize myself for 5 minutes. I'm proud to support H.R. 3645, the amendment for Crowdfunding Capital Enhancement and Small Business Act, the Access Act, as introduced by our Oversight Subcommittee Chair Dan Meuser. Regulation crowdfunding, Reg CF, was created by the Jobs Act of 2012. And as the ranking member noted, this has been a strong place for bipartisan cooperation over the past decade to try to find helpful options for startups and small businesses seeking to raise small amounts of money while avoiding the most costly aspects of Securities and Exchange Commission registration requirements. In fact, since 2016, Reg CF has supported over 6,500 startups. Additionally, nearly $2.4 billion in capital has been raised through 8,400 investment rounds using that crowdfunding exemption since 2016. That's a big statement. This has been a big help to angel investors all around the country. It's been absolutely validated, the good work that former Chair McHenry and former Chair also Waters worked on around the Jobs Act. It's demonstrated that crowdfunding is a viable way to raise capital without producing significant regulatory or oversight challenges. Currently, issuers using the exemption under Reg CF must file financial statements reviewed by an independent public accountant for any offering over $100,000. But the average cost to file those statements is around $10,000, which is a significant expense. You're trying to raise capital to move your business forward, and it's eaten up by legal fees and accounting fees just trying to move ahead. And this is the secret to what we're doing in this committee, in this Congress, on access to capital, whether it's access to capital like Mr. Donald's amendment to the Bank Holding Company Act to be able to borrow more money in small bank holding companies, or Mr. Williams' a bill that we just talked about that lowers the cost for capital by raising the ability to have more people doing investment research reports on small business. Here we go to crowdfunding, angel investing, the very startups that the Jobs Act was meant to improve, and we want to recognize that we want to give them a better shot at doing that and lower their upfront costs in their capital raise. The SEC experimented with this by amending Reg CF during the COVID-19 pandemic, and during that temporary relaxation of Reg CF's requirements, the crowdfunding exemption continued to work as intended, and the SEC did not report any increased abuse or exploitation of crowdfunding exemptions as a result of this temporary relief. So it makes complete sense with the leadership from our friend, the sponsor of this bill, that we try to take the success from that temporary relief and make it permanent. Under Mr. Meuser's bill, issuers using crowdfunding exemption will only be required to file financial statements to be reviewed by an independent accountant for offerings over $250,000 as opposed to that current threshold of $100,000. I commend Mr. Meuser for drafting a bill that surgically right-sizes our security laws to lessen the burdens on those small businesses raising small amounts of capital. I urge my colleagues to support this legislation to help small companies grow, hire, and innovate, and I yield back the balance of my time. Does anybody seek recognition? Hearing none, we'll move to amendments. Does anyone seek to offer an amendment to Mr. Meuser's amendment in the nature of a substitute? There being no further discussion or amendments to the bill, the question now occurs on the adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye. Aye. All those opposed shall be signified by saying nay. In the opinion of the chair, the ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it. For what purposes does the gentleman from Pennsylvania seek recognition?
Mr. Chairman, I ask for a recorded vote.
A recorded vote's been requested. All those in favor of a recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, a vote on this question is postponed. We'll now move to our next bill. Pursuant to notice, I call up H.R. 225, the HUD Transparency Act, introduced by the gentlewoman from Texas, Ms. Dela Cruz. The clerk will report the bill, which was distributed in advance.
H.R. 225, to require the Inspector General of the Department of Housing and Urban Development to testify before Congress annually and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. The gentlewoman from Texas has an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report the amendment.
An amendment in the nature of a substitute to H.R. 225, offered by Ms. De La Cruz of Texas, designated as H225ANS.
Without objection, the amendment is considered read and will serve as the base text for purposes of amendment. The gentlewoman from Texas, Ms. De La Cruz, is now recognized for 5 minutes to explain her amendment.
Thank you, Mr. Chair, for bringing this important piece of legislation up. H.R. 225, the HUD Transparency Act of 2025, is a good governance bill to require the Inspector General of HUD to testify before Congress annually. Given the amount of federal dollars sent to HUD, the housing affordability discussion cannot have effectively without HUD's commitment to be good stewards of our tax dollars. Unlike several other federal agencies under this committee's purview, the HUD Secretary currently has no requirement, again, that is no requirement to testify. This bill will ensure members on both sides of the aisle have a formal oversight mechanism for HUD, which is transparency we are currently lacking and have previously agreed that we need with the unanimous passage of this bill out of committee and on the House floor last Congress. Prior to 2023, it had been 5 years since the committee received testimony from the HUD IG. With thousands of full-time employees and an annual enacted gross discretionary budget authority of over $77 billion in 2024, it is Congress's responsibility to conduct meaningful oversight of HUD and its programs. Our committee relies heavily on the work the HUD Inspector General does and the role it serves as an independent third-party voice when they testify about issues key to their mission, which is to safeguard HUD's program from fraud, waste, and abuse, and identify opportunities for HUD programs to progress and succeed. A key point I would like to make is that this legislation is not about questioning the importance of HUD programs. In fact, my majority Hispanic and largely working class district relies on the critical programs HUD provides. This bill is working to increase transparency and ensure these programs are running well. I look forward to working with my colleagues on both sides of the aisle to continue ensuring American taxpayer dollars are used for impactful and well-run programs, and that those programs, like the ones provided by HUD, are sustainable for when our constituents need them. Thank you. I yield back.
Gentlewoman yields back. Who seeks recognition? Ranking member of the full committee, Ms. Waters, you're recognized.
Move to strike the last word.
Gentlewoman's recognized for 5 minutes.
Mr. Chairman, oversight is a core function of this committee. Inspectors general play a critical role in providing transparency about the functions of government, as well as holding government officials accountable. They're able to do this because they're independent of the officials they oversee, and until recently were only removed for cause. However, earlier this year, President Trump fired 17 IGs across the government, including the Department of Housing and Urban Development. That vacancy has remained unfilled. The bill before us would require the testimony of the HUD IG annually, and while I'm supportive of that, is the chairman going to invite the acting IG to testify? I've repeatedly asked that the acting CFPB director testify, but the chair rebuffed my request, stating that he plans to wait for a confirmed director. Based on the chair's track record and the president's aversion to accountability, I think we'll be waiting a while for this testimony. In addition, this bill ignores the real and urgent challenges facing HUD and our housing market. Where are the pieces of legislation that seek to end the affordable housing crisis? Where are the bills that address our homelessness crisis? Where's the legislation pushing back on the president's budget that would cut $27 billion from the HUD budget and end Section 8? There's also no mention of the president's plan to use cryptocurrency to make HUD payments or an investigation into Doge's access to confidential information. This bill also doesn't address the recent rollbacks of critical civil rights protection, including the repeal of the affirmatively furthering fair housing rule and the equal access rule. These are issues the committee should prioritize and direct the IG to examine. So while I support the intent of the bill, we must finally take up legislation that addresses the housing crisis and pushes back on Trump's dangerous actions to undermine HUD. With that, I yield back.
The gentlewoman yields back who seeks recognition. Housing and Insurance Subcommittee, you're recognized for 5 minutes.
Thank you, Mr. Chairman. First, I want to express my support for Congresswoman De La Cruz's legislation, the HUD Transparency Act of 2025. This bill will aid our committee's oversight of the Department of Housing and Urban Development by requiring the HUD Inspector General to testify in front of our committee annually. I will note the HUD IG has testified in each of the last 3 years, including this year. Those hearings have all been constructive, and they provide a forum for this committee to track challenges within the agency that reinforce our role in this committee, both in oversight and policymaking. When the HUD OIG testified this year, they raised very important issues like, number one, the health and safety challenges in HUD-assisted housing, number two, increasing access to affordable housing, number three, mitigating counterparty risk for the FHA, and finally, number four, oversight of disaster recovery dollars. A number of these issues present opportunities for our committee to legislate this Congress, and they will be items that we can check on when the Secretary Turner testifies before the committee. I want to thank my colleague, Ms. De La Cruz, for her work on this legislation, and I urge my colleagues to support the bill. I yield back the balance of my time.
Gentleman yields back who seeks recognition.
Mr. Chairman.
The gentleman from North Carolina, Mr. Moore, you're recognized.
Thank you, Mr. Chairman. I just want to speak in support of this bill as well. One of the questions that we had a few months ago had to do with the disaster relief in North Carolina and how HUD funds were being used, particularly last year. And so I think more transparency in this process is warranted. And as Western North Carolina rebuilds from Hurricane Helene, and we know HUD's going to be a critical part of that rebuilding, I think this legislation, Ms. De La Cruz, is a great step in that direction. So I would urge the body to support it. Thank you. Yield back.
The gentleman yields back. Who seeks recognition on Ms. De La Cruz's bill? I recognize myself for 5 minutes to strike the last word. I want to thank the gentlewoman from Texas for offering this common sense accountability measure. I wholeheartedly support it. We hear a lot of talk from both sides about how when the other side occupies the White House, it's Congress's job to hold them accountable through greater oversight hearings. Well, in our case, what could be a better tool for both sides, regardless of who's in charge, than to have the independent Inspector General of HUD testify before the committees of jurisdiction every year. We rely on the invaluable work of the Inspector General to bring our attention major issues requiring this committee's oversight. The HUD Office of Inspector General is one of 12 original OIGs enacted into law, reporting not only to the HUD Secretary, but also to Congress. It serves as our eyes and ears in bringing forth audits, evaluations, investigations, and other reviews of programs and operations of the federal agencies. The task of the HUD Inspector General is no small one. The OIG has uncovered multiple instances of waste, fraud, and abuse. Much of it involves substandard conditions and even life-threatening issues with public and HUD-assisted housing, impacting thousands of households annually. This hits close to home in my own district, where just last week I sent a letter to the HUD Inspector General asking for an investigation into the decade-long problems with the Little Rock Housing Authority that has resulted in the impending foreclosure of 240 units of public housing and millions in unaccounted for public housing dollars. We rely on the OIG to report to us on whether taxpayer funds are spent appropriately and where the money could be put to better use, and that is something on which we should all rely. By requiring annual testimony by the HUD IG, this committee can ensure that these issues continue to receive attention that they deserve and take the necessary timely actions to address them. I urge my colleagues to support H.R. 225, and I yield back the balance of my time. Does anyone seek recognition on Ms. Dela Cruz's amendment in the nature as a substitute?
Mr. Chairman, I have an amendment at the desk.
Just, gentlewoman would suspend a moment. Hearing none, we'll move to amendments. Does anyone wish to offer an amendment? Gentlewoman from Texas?
Mr. Chairman, I have an amendment at the desk.
For what the gentleman has an amendment at the desk, we'll pause while that amendment is distributed. Gentleman from Texas?
Mr. Chairman, I reserve a point of order.
The gentleman from Texas reserves a point of order.
I'm sorry, Mr. Chairman, do I keep hearing the gentleman from Texas?
Called on the gentleman from Texas because he reserved a point of order.
Oh, I thought you were referring to me.
I would never refer to the gentlewoman as a gentleman.
Well, I wanted to correct you if that's what you were saying.
God bless.
But I take it back.
A point of order has been reserved. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 225, offered by Ms. Garcia of Texas, designated as H.R. 22502.
Without objection, the amendment is considered read. The gentlewoman from Texas is now recognized to discuss her amendment.
Thank you, Mr. Chairman. And first, I want to agree that this is a good government bill, and I'm glad to see the other side of the aisle be very concerned about transparency. I hope that concern stays through this whole markup, especially when we start discussing the Calamity Act. But I see this amendment as making this good government bill even better. The bill would require the HUD Inspector General to testify on an annual basis. And we should also make sure that not only do they discuss the items that were discussed in the bill, but that we also ensure that we make the best of the committee time with the AG to address pressing housing and affordability issues that families across the nation are facing. My amendment will require the HUD IG to study and report to Congress the impact of DOGE, otherwise known as Department of Government Efficiency, on the Department of Housing and Urban Development. DOGE has called for and carried out the termination of staff in field offices, including offices that administer public housing vouchers, project-based rental assistance programs, and homelessness assistance. DOGE also called for the termination of staff in offices that enforced fair housing laws, just as Secretary Turner repealed the furthering fair housing rule and the equal access rule. As a reminder, the affirmatively furthering fair housing rule is designed to help identify and address barriers to housing. The equal access rule required housing facilities and services funded through HUD's program to ensure equal access to individuals regardless of their gender identity. These were two sensible rules that help historically underserved communities access housing because everyone in this country deserves a roof over their heads. The study detailed in my amendment would investigate the impacts of DOGE and these repeals. At a time when our nation faces the worst affordable housing and homeless crisis, we cannot let DOGE and Secretary Turner take away housing programs that serve communities. This is contrary to the HUD's mission, which there's no mention in this bill We should look at how HUD's roles, efforts, or progress towards its mission to create strong, sustainable, inclusive communities and quality, affordable homes for all. Access to safe, dignified, and affordable housing is not a privilege. It is a basic fundamental right. It is a right that everyone deserves. We cannot continue to stand by without understanding the impact that DOI's actions will have on our constituents. The bill as currently written requires the Inspector General to focus on waste, and abuse in his testimony before the committee. I agree, but let's make sure that it also studies it all. Let's require the IG to study the abuse of power by DOIG and the waste of meaningful policies like the FFHR rule and the Equal Access rule that were meant to protect Americans across the nation. Otherwise, we will just keep perpetuating the fraud that everything is fine in housing in America. There's no homelessness. All we have to do is cut fraud, waste, and abuse. I say let's study it all. Let's include a review of what the impact of DOIG has had on all these housing policies. I urge my colleagues on both sides of the aisle to support this amendment, and I yield back the balance of my time.
The gentlelady yields back. Does the gentleman from Texas insist upon his point of order? He withdraws his order. Is there further debate on the amendment? For the gentlewoman from Texas, Ms. De La Cruz, is recognized for 5 minutes.
Mr. Chairman, if I can interject, it's nice to see an all-Texas debate here this morning. I think this is a historic day.
And I would personally love to see an all-Texas kumbaya, so let's see what we can do.
Let's see what we can do.
Texas Jamboree time. Ms. De La Cruz, your 5 minutes.
Oh, well, on that note, I can say that all of us here in Texas, Ms. Garcia and myself agree the importance of having the Inspector General come before us and testify. I don't think that the amendment is necessary because when the Inspector General is here, we are free to ask him any questions that we would like. I don't think that we need a specific amendment to ask about this specific service or concern. We can ask a multitude of questions during the time that the Inspector General is here. It is important that we agree on both sides of the aisle, including Texans, that the Inspector General come here to talk about the importance of housing, make sure that there is no fraud, waste, and abuse, and that the funds that are allocated to HUD are being used properly. Thank you. I yield back.
Gentlelady yields back. And for what purpose does the ranking member seek to be recognized? Ranking member is now recognized for 5 minutes.
I strongly support Representative Garcia's amendment directing the HUD Inspector General to examine the harmful actions by the Trump administration at HUD. Since the start of the new administration, Republicans Trump and Elon Musk and his Doge minions have launched a full-scale assault on HUD at a time when the U.S. is facing one of the worst housing and homelessness crises. They have repealed fair housing regulations, halted civil rights enforcement, closed field offices, and accessed sensitive, personally identifiable data on housing discrimination, including on sexual assault victims. We must understand the consequences of these actions and ensure HUD's mission is not compromised. So I thank Ms. Garcia, and I urge my colleagues to support this amendment. Thank you, and I yield back the balance of my time.
Gentlelady yields back. Is there further debate on the amendment? Seeing no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye. All those opposed shall signify by saying nay. Nay. And in the opinion of the chair, the nays have it. The nays have it, and the amendment is not adopted.
I ask for a recorded vote.
For what purpose does a gentlewoman from Texas seek recognition?
I ask for a recorded vote.
A recorded vote is requested, and all those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of the Rule 3 of the committee rules. Further proceedings on this amendment are postponed. We'll now move on to the next amendment.
Mr. Chairman?
For what purpose does the gentlelady from New York seek recognition?
I have an amendment at the desk.
We'll pause while the amendment is distributed.
Mr. Chair, I reserve a point of order.
The gentleman reserves a point of order. Point of order has been reserved. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 225, offered by Ms. Velasquez of New York, designated as Velaz Q 043.
Without objection, the amendment is considered read. The gentlewoman is recognized on her amendment.
Thank you, Mr. Chairman. My amendment is simple and straightforward. It takes a strong bill and makes it even stronger. This bill is all about transparency and accountability. In addition to requiring the HUD Inspector General to testify before this committee, my amendment requires any federal receiver or monitor overseeing a public housing authority over the previous calendar year to also appear and present testimony before Congress. As many of you already know, my home city of New York is home to the nation's largest public housing authority. The New York City Housing Authority, or NYCHA, provides affordable housing to more than 528,000 residents. It is home to 1 in 17 New Yorkers. NYCHA has more than 177,000 apartments in 2,411 buildings across 335 conventional public housing and PAC developments. It also operates the nation's largest Section 8 program. Yet, unfortunately, many of NYCHA's units are in a very difficult state of disrepair due to a lack of capital investment. Republicans and Democrats are to blame. NYCHA residents suffer from a consistent lack of hot water, insufficient heat during the winter months, rodent and insect infestations, broken elevators, and widespread and recurrent lead and mold problems. But NYCHA's problems are about more than just the conditions of the units. It's about the operational challenges of NYCHA as well. Residents can wait days or even weeks for basic repairs. Tenant association presidents often have to call the NYCHA's headquarters in Manhattan to receive basic services and consistently call my office for intervention. While my team and I are always ready and able to assist, the situation remains unacceptable. NYCHA has been under the imposition of a federal monitor since 2018. While NYCHA has made improvements to the conditions of its unit as well as its operation, it has also suffered setbacks. Last year, 70 current and former NYCHA employees were arrested and charged with bribery and extortion offenses. It was the largest single-day bribery takedown in the history of the Justice Department. I have heard my colleagues on the other side of the aisle say for years that taxpayers aren't getting their money's worth from this agency. I agree. Taxpayers deserve better, but so do residents. Residents deserve better. I have always understood that turning NYCHA around will take years, not months. I am committed to NYCHA's future, and I will do everything in my power to return NYCHA to the agency it once was. New Yorkers like to say that I am NYCHA's biggest champion, but I'm also its biggest critic. It is a title I wear proudly. If we here in Congress are going to ensure that taxpayers and residents get the services they deserve, and ensure efficient use of funds. We must hear from the monitor directly and hear how he's working to achieve this result. While the monitor meets regularly with NYCHA officials, city council members, and HUD staff to provide updates, he has not appeared once before either our committee or the Senate Banking Committee. My amendment will change that by requiring annual appearances before our committee. The costs of the monitor are high, and transparent performance and reporting will facilitate accountability. While the monitor publishes quarterly reports that consist of observation by its team and outside contractors, this report lacks clear, consistent metrics for evaluating success, and it is not clear how the monitor judges success. Public reporting and appearances before Congress of the data is essential for transparency and accountability. Again, while I'm committed to NYCHA for the long term, there are key questions we must ask the monitor in order to achieve that result. I want to thank Representative De La Cruz and Chairman Hill for working with me on this amendment. I also want to thank Ranking Member Waters for her tireless effort to improve our nation's affordable housing system. Thank you. I yield back.
Gentlelady's time has expired. Does the gentleman from Texas insist upon his point of order? Gentleman withdraws. Is there further debate on the amendment? Congresswoman from Texas, Ms. De La Cruz.
Yes. Thank you, Mr. Chairman, and thank you, Ms. Velasquez, for your amendment. I think that we both agree that what has happened in New York is simply unacceptable and that the residents do deserve better. I do agree with you on that. And what I would like to do is work together to find some solutions where we can bring justice for the residents that deserve safe housing in New York. And so if you would agree to remove your amendment, I would like to work together on something that would help the residents of New York live in a safe environment and hold the Housing Authority in New York accountable.
I much appreciate your commitment to work with me, and at this point, I will withdraw my amendment with the assurances that you are going to work going forward with me.
Yes, ma'am. Thank you.
Does the gentlelady yield back?
I yield.
The gentlelady yields back. With that, does the gentlewoman from New York withdraw?
Withdraw my amendment. Thank you.
Gentlelady withdraws. Are there additional amendments? The ranking member.
I have an amendment at the desk.
We will pause while the amendment is distributed. Gentleman from Texas? Gentleman reserves a point of order. Point of order. A point of order has been reserved, and the clerk will report the amendment. An amendment to the amendment in the nature of a substitute to H.R. 225, offered by Ms. Waters of California, designated as H.R. 22503. Without objection, the amendment is considered read, and the gentlelady is recognized on her amendment.
Mr. Chairman, I don't believe all of us have a copy. I don't know whether the front row.
We will suspend until the gentlelady gets a copy of the amendment.
Thank you, Mr. Chairman, I have one now.
With that, the ranking member is recognized.
Thank you very much. HUD plays a vital role in providing safe and affordable housing to families across the United States. Unfortunately, Trump and his administration are trying to force crypto down the throats of people living in HUD-assisted housing. ProPublica reported in March that Trump's team at HUD were planning to treat HUD-assisted households as guinea pigs in their plans to launch a untested initiative to make payments to households using stablecoins, a type of cryptocurrency. My amendment would direct the HUD Inspector General to investigate HUD's plans to require that HUD payments be made in stablecoins, a type of cryptocurrency. If HUD does move forward with this, I, for one, would want to know if HUD is using Trump's own stablecoin, how they choose the stablecoin, and what fees are being paid into the president's pocket. This idea is preposterous, but requiring an investigation into it is just basic oversight. Back in April, I sent a formal letter to HUD demanding answers about the use of crypto and blockchain in agency operations. To this day, we have received no response. HUD has ignored a direct inquiry from Congress. That kind of silence is unacceptable. And unfortunately, the chair has not invited the HUD secretary to testify about this or anything else. Families depend on HUD programs to keep a roof over their heads. We cannot allow speculative financial tools to put that stability in jeopardy. This is not about stifling innovation. It is about protecting the millions of families and ensuring that HUD continues to provide safe and affordable housing for all. Until Congress sets a framework for responsible use of cryptocurrency, HUD should not proceed. Housing is not a test case. To ensure accountability and prevent another kickback to Trump and his family, my amendment directs the HUD IG to investigate the use of crypto in any of HUD's programs and operations. I urge my members to support my amendment, and I yield back.
The gentlelady yields back. Does the gentleman insist upon his point of order? The gentleman withdraws his point of order. For what purpose does the gentlelady from Texas seek recognition?
Yes, thank you, Mr.
I
Chair.
will assume the gentlelady is moving to strike the last word
Moving to strike the last word.
and recognized for 5 minutes.
Thank you. Yes, thank you for this amendment that you have given Ms. Waters. I do believe that we are able to ask the Inspector General to have and conduct any kind of investigation on cryptocurrency or on the Housing Authority in New York. And so while I think this is valuable as an amendment, I don't think it is necessary to add it to this bill that we know is good governance. This is something that we can ask the Inspector General to do by simply writing a letter. And once we've written the letter and given the Inspector General a deadline to respond to that letter, then once the Inspector General is in front of us, we can ask more questions concerning this specific subject. While I do think that it is important information, I do not believe that we need to add it as an amendment to the bill.
Will the gentlewoman
Thank you. I
yield?
yield back.
Will the gentlewoman yield? Will you join with me in writing a letter?
Just a moment. The gentlelady, do you yield to the ranking member?
Yes, I yield back.
Do you will you yield time to the ranking member?
Thank you for yielding. I would like to
Ranking
respectfully
member's
ask you to join with me in sending the letter to the Inspector General, to HUD, to get the Inspector General basically to respond to the letter that I have sent.
I'd be happy to connect our teams together so that we could see what a good solution for both of us would be.
Thank you.
Does the gentlelady yield back?
I yield back.
The gentlelady yields back. Is there further debate on the amendment? Seeing none, if there's no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye. All opposed signify by saying nay. Nay. In the opinion of the chair, the nays have it, and the amendment is not adopted.
Recorded vote is requested.
The gentlelady has requested a recorded vote. A recorded vote is requested. All those in favor of the recorded vote, raise your hand. Seeing a sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the Committee on Rules for the proceedings on this amendment are postponed. We'll now move on to the next amendment. Seeing no further amendments without objection.
Oh, no.
Okay.
No.
Seeing no further amendments without objection, the previous question on the substitute is ordered and recorded votes on the pending amendments have been postponed. Once those votes are taken, the committee will immediately vote on adoption of the amendment in the nature of a substitute, and then we'll consider the question to report the measure. We'll now move on to the next bill. Pursuant to notice, I call up H.R. 3709, the Advancing the Mentor Protege Program for Small Financial Institutions Act, introduced by the gentlewoman from Ohio, Ms. Beatty. The clerk will report the bill, which is distributed in advance.
H.R. 3709, to amend the Financial Institutions Reform, Recovery, and Enforcement Act of 1989 to establish a financial agent mentor protege program within the Department of Treasury and for other purposes.
All right, without objection, the bill is considered read and open to amendment at any point. The gentlewoman from California has an amendment, well, on behalf of the gentlewoman from Ohio, the ranking member has an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report the amendment.
An amendment in the nature of a substitute to H.R. 3709, offered by Mrs. Beatty of Ohio, designated as Beatty 013.
Without objection, the amendment is considered read and will serve as the base text for the purpose of the amendment. The ranking member is recognized for 5 minutes on behalf of Representative Beatty.
I move to strike the last word.
You are recognized for 5 minutes.
Let me thank our colleague and our former chair of the Diversity and Inclusion Subcommittee, Representative Joyce Beatty, for her strong leadership on this bill to support our community banks and credit unions across the country, including our Minority Depository Institution, or MDIs. H.R. 3709 will codify and enhance the Treasury Department's Mentor Protege Program, which pairs larger banks with smaller ones so they can have a mentor they can get advice and support from to grow and thrive. The House previously passed a similar version of Representative Beatty's bill by voice vote in 2020 during the Trump's first term, and the House subsequently passed it several more times during the pandemic. However, we are debating this at a time when President Trump has attacked anything that relates to diversity, equity, and inclusion. Trump has even attacked our community financial institutions in seeking to wipe out the CDFI fund. I'm so pleased that Chairman Hill agreed to take up Representative Beatty's bill to continue our longstanding bipartisan tradition to support MDIs alongside other community financial institutions like rural banks. Let me remind members that during Trump's first term, I worked with Ranking Member Velasquez, and when Treasury Secretary Mnuchin, we worked with him to secure a $60 billion set-aside for MDIs and CDFIs and other community financial institutions to provide Paycheck Protection Program, that is the PPP, loans to small businesses in the second round of the program. We knew that the MDIs and other small banks and credit unions really helped to get those critically needed funds to the smallest of businesses, which enabled them to keep their lights on during the pandemic. We then worked together to pass a historic $12 billion package of capital investments and grants that the Treasury Department deployed to CDFIs and MDIs. I and other committee Democrats have a number of other bills that we believe will support all of our community financial institutions, including rural banks and MDIs. These include reforms on deposit insurance, the formation of de novo banks, and programs to support our young entrepreneurs and help community financial institutions with their technology challenges. We stand ready to work closely with committee Republicans to advance them for the benefit of these institutions and the committees they serve. Let's start by passing H.R. 3709. I urge members to vote yes, as many of you have done before, and I yield back my time.
And does anybody else seek recognition on the?
Mr. Chairman, I move to strike the last word.
The gentlelady from Texas is recognized.
Thank you, Mr. Chairman. H.R. 2709, the Advancing the Mentor-Protege Program for Small Financial Institutions Act, supports small banks and credit unions by codifying the Financial Agent Mentor-Protege Program at the U.S. Department of Treasury. This program pairs up small and rural financial institutions with large banks and credit unions, providing resources, training, and technical assistance to help them better serve their communities and become financial agents to Treasury themselves. Small financial institutions, including minority depository institutions, that are the front lines of serving low and moderate income, underserved, and minority communities. These institutions know the financial needs of their communities best and provide essential financial services like mortgage credit, small business and auto loans, investment banking, and more. Despite the vital nature of these anchor institutions, they are struggling, and we need to help them. There are only 151 MDI banks left in the United States, a figure that has dropped more than 30% since its peak in 2008. MDIs, small banks, and credit unions, and rural financial institutions generally have much higher expenses and are often forced to merge with other institutions to survive. Codifying the Mentor-Protege program at Treasury will go a long way toward preserving and strengthening these institutions and ensuring that they continue to provide critical banking services to communities in need. I'm proud to support this bill, which has passed on suspension twice before, has the support of the Independent Community Bankers Association, the American Bankers Association, America's Credit Unions Association, and the National Bankers Association. Of this, we can all agree. So supporting small, mission-driven credit unions and community banks directly benefits American consumers and the economy as well. I urge my colleagues to support this bill, and I yield back.
Gentlelady yields back. Does anybody else seek recognition? I will recognize myself to strike the last word. And I think there's been a general concern on the steady decline in the number of small institutions throughout the country, and I know that I've seen that in Michigan as well. And in 2018, the Treasury Department launched the Bank Mentor Protege Program to foster relationships between the nation's largest banks and its smallest banks. But yet, as we have seen, those smaller institutions, especially those in rural areas, are vital to the growth and development of the communities that they serve, yet they are often lacking in the access to critical resources needed to compete with those larger banks. So throughout this Congress, we've heard from community bankers who say that post-crisis financial reforms have made it harder for them to survive and continue offering low-cost services to their customers. This voluntary mentorship program allows large banks to share expertise and resources with small banks, helping them raise capital, build skills, and grow, not just survive. And with that, I yield back. Does anyone else seek recognition? Hearing none, we'll move to the amendments. Are there any amendments at the desk? Being no further discussion or amendments to the bill, the question now occurs on adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye. Aye. And all those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it, and the amendment is adopted. The question now occurs in ordering of the bill as amended to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye.
Those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it.
And now a recorded vote.
Now a recorded vote is requested. A recorded vote is requested. All those in favor of a recorded vote, please raise your hands. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the Committee on Rules. The vote on this question is postponed. We'll now move on to our next bill. Pursuant to notice, I call up H.R. 3633, the Clarity Act, which the chair has introduced. The clerk will report the bill, which was distributed in advance.
H.R. 3633, to provide for a system of regulation of the offer and sale of digital commodities by the Securities and Exchange Commission and the Commodity Futures Trading Commission and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. There is an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report the amendment.
Amendment in the nature of a substitute to H.R. 3633, offered by Mr. Hill of Arkansas, designated as Clarity ANS FSC.
Thank you. We're going to pause here momentarily for the chair's return.
Without objection, the amendment is considered read and will serve as base text for the purposes of amendment. I now recognize myself for 5 minutes. I rise in strong support of the Clarity Act, a landmark bill that creates much-needed regulatory framework for digital assets. This legislation is a critical step towards providing legal certainty, protecting consumers, and ensuring that the United States remains a leader in digital innovation. Digital asset technology is evolving rapidly and holds enormous potential. However, its growth in the United States is being constrained by a fundamental problem, a problem that this committee has grappled with for the better part of 4 years: the absence of clear and consistent rules and regulations governing its use and development. This uncertainty not only slows innovation, but it also puts consumers and investors at greater risk. At the heart of the issue is the lack of a clear definition of when is a digital asset considered a security under the oversight of the Securities and Exchange Commission, or a non-security or digital commodity under the authority of the Commodities Futures Trading Commission, the CFTC. Neither agency currently has full jurisdiction over the spot market transactions, which represent the majority of activity in this space. The spot market gap has created a regulatory void where intermediaries operate without clear rules or protections. Rather than offering clarity through formal guidance or rulemaking, the Biden administration, through the SEC and then chairman, Gary Gensler, pursued instead a strategy of regulation by enforcement, asserting that you just had to come in and register as someone trying to innovate in this space. This reactive approach left developers and investors uncertain about compliance, pushed innovation offshore, and failed to provide meaningful protection to the public. In contrast, other countries have moved swiftly to create clear regulatory structures for digital assets and are quickly becoming global centers for this financial technology. Without decisive action, the United States risks falling behind. In the 118th Congress, we laid the foundation by advancing bipartisan digital asset legislation through the House with a vote of 279 to 136, with the support of 71 Democrats. Today, we continue that important work through the Clarity Act. The Clarity Act improves transparency by requiring developers to disclose essential information about their projects. It holds customer-facing digital asset firms, like brokers or dealers, to high standards by requiring them to safeguard customer funds, provide adequate and accurate disclosures, among many other requirements. It supports innovation by establishing clear processes for projects to raise capital under the SEC and for digital commodities to be traded through intermediaries regulated by the CFTC. More importantly, the Clarity Act brings much-needed certainty by clearly defining the roles of the SEC and CFTC and creating a comprehensive registration structure. This gives digital asset firms the rules they need to operate legally and responsibly within the United States. I want to thank Chairman G.T. Thompson of the House Agriculture Committee, Whip Tom Emmer, Subcommittee Chairs Brian Stile and Dusty Johnson, and Representative Warren Davidson for all their work for years in crafting this legislation, building on the success we had in FIT 21 in the 118th Congress, listening to the SEC, the CFTC, market participants on how to craft the bill that we have before us today. I also want to thank our Democratic partners and the many members of this committee who worked to move this legislation forward. It's time to close these regulatory gaps, provide clear rules of the road, and secure America's position as a leader in the digital asset innovation. I urge all my colleagues to support the Clarity Act so we can bring much-needed protections to the digital asset markets. I yield back. Does anyone seek recognition? The ranking member of our full committee, Ms. Waters, is recognized for 5 minutes.
I move to strike the last word.
The gentlewoman is recognized.
As I mentioned before, I am deeply concerned at the various abuses of power we have seen in this administration. President Trump has illegally deployed the military against my state. Our democracy is under attack, and our constituents are facing a very serious economic crisis. Ignoring all of this, committee Republicans are trying to jam through a dangerous crypto market structure bill. The Calamity Act exposes investors to fraud, enables more FTX-style fraud, creates national security risk, and hands over even more power to the mega banks and crypto giants. And to make matters worse, this bill creates vague new definitions that will result in endless litigation. Now, that set of issues doesn't even begin to address the Republican-sized elephant in the room that my colleagues pretend not to see. Trump and his family have built a crypto empire, and this bill does nothing to address blatant conflicts of interest and avenues for corruption and bribery. Mr. Hill, as the sponsor, I'd like to ask you a few questions about the bill. Days before taking office, President Trump issued his meme coin. As you know, he has used this meme coin to grant access to the White House to the highest bidder, foreign and domestic, through his meme coin dinner. A few months ago, the SEC exempted meme coins from securities regulation, describing them as akin to collectibles, although securities experts told us that meme coins can change over time. Mr. Hill, in Section 103 on page 28, there is an exclusion for collectibles from the definition of digital commodity. Would this exclude meme coins, like Trump's meme coin, from important regulations under the bill? I yield to you, Mr. Hill.
I appreciate the ranking member. Let's be clear that meme coins are essentially a symptom of the regulatory failure, in my view, from Gary Gensler's SEC, and rather providing clear functional guidance on what makes a transaction a digital asset subject to security laws. He and that commission pursued a strategy of regulation by enforcement that opened the door for this kind of project that doesn't have real-world utility. And in our bill, we actually would give structure and strict standards for listing any kind of digital assets on an exchange, which includes a meme coin. And I think you'd find this bill will very limit any use of meme coins by virtue of them not meeting listing requirements on the regulations that are strictly outlined in this bill to govern exchanges like Coinbase or other crypto exchanges. I yield back to the gentleman.
Thank you very much. Are meme coins excluded from the definition of digital commodity in the bill?
Well, as I said, I described that it's not a meme coin is not a digital commodity, but a meme coin that could potentially be traded as a token would be covered under the strict listing standards in this legislation, and therefore these non-utility, quote, meme coins that would be seeking listing on an exchange regulated by this bill would not do very well in my personal judgment.
Well, you know, I continue to bring up these very, very serious issues. And unfortunately, Trump has so much power and influence with your caucus that he proceeds with ownership of crypto in the most outrageous way. It is an obvious attempt by which to use the presidency of the United States to enrich itself. So I will be proposing an amendment today to stop Trump's crypto corruption once and for all. Thank you, and I yield back.
The gentleman does yield back, who seeks recognition. The chairman of our Financial Technology, Artificial Intelligence, and Digital Assets Subcommittee, Mr. Brian Stile of Wisconsin, you're recognized for 5 minutes.
I move to strike the last word.
The gentleman's recognized for 5 minutes.
I want to start, Mr. Chairman, by thanking former Chair McHenry, Chairman of the Agriculture Committee, G.T. Thompson, Subcommittee Chair Dusty Johnson for their work on the digital assets market structure over the last few years. I think it should be really important to note that moments ago, our colleagues on the Ag Committee passed the Clarity Act 47-6 in an overwhelming bipartisan manner. Moments ago, the Ag Committee passed the Clarity Act, which we are discussing right now, 47-6 in an overwhelming bipartisan vote. Mr. Chairman, I feel optimistic that we can move forward on this legislation in a bipartisan manner also, because at the end of the day, market structure clarity is not about Democrats or Republicans. It's about moving our country forward. In my opinion, Mr. Chairman, today we have a really unique opportunity, a responsibility, in fact, to build on the progress that we have made in the previous Congresses on this critical legislation. The Clarity Act incorporates ideas and feedback from stakeholders, experts, members of Congress from across the ideological spectrum. Crucially, this bill is going to cement the U.S. as the center of innovation in the digital asset space for the next generation of the internet. The Web3 revolution is truly here. Innovators are coming up with new ways to build decentralized systems that support creators, reduce costs, and improve transparency. But our laws in the United States have not kept up with the pace of innovation and development. So what's occurred? In the meantime, legal ambiguity has pushed innovation and jobs offshore. It's stifled investment. It's put American consumers at risk of fraud. This bill will put in place a common sense framework that supports responsible development here in the United States. The Clarity Act provides straightforward answers to key questions. One, what are digital assets and when do transactions implicate securities laws? What role should the SEC and CFTC play in regulating issuance or trading through centralized intermediaries? How can we reduce regulatory fragmentation between these two agencies? How can we encourage innovation and competition, not just by tech firms, but also by traditional financial firms? And finally, how can we best prevent fraud and manipulation by bad actors? These are the questions that we should be asking ourselves, and these are the questions that the Clarity Act provides clarity to. By answering the questions, you'll also see it provides market participants, it provides them the confidence to build and invest. We will truly unleash the promise of decentralization in the Web3 economy. It will ensure that innovation can occur in garages and dormitories, not just in law firms and boardrooms. So I encourage my colleagues to support this bill. The Web3 revolution is here. We can either cement U.S. leadership or cede the playing field to foreign competitors. I congratulate our colleagues on the Agriculture Committee from moments ago, overwhelmingly passing the Clarity Act. Let's bring innovation jobs back to America. Let's support the Clarity Act here in the Financial Services Committee room in the same way our friends in the Agriculture Committee room did just moments ago. Chairman Hill, I thank you for your leadership, and I yield back.
I thank the gentleman from Wisconsin who seeks recognition. Vice Chairman of the committee, Mr. Heisinger of Michigan.
Thank you, Mr. Chairman. And I was just reflecting on this, and I'm hearing my friend from Wisconsin talk about the 47-6 vote coming out, and I'm truly encouraged. You know, I've been sitting at the leadership table of this committee for a full 10 years now. If I could just transport the entire committee back to what those discussions were a decade ago, knowing that there was something looming on the horizon like this that we needed to tackle, that we needed to go after this. And then over those years, seeing this sort of erode away and escape from the United States, it was frustrating for many. And to see the leadership of former Chair McHenry and all the team that worked on Fit 21, and moving forward, it's just, this is a good day for digital assets and those that use it, but more importantly for the future of the United States and our preeminence on this. You know, obviously the digital asset ecosystem operates in a fragmented regulatory environment that lends itself to significant challenges for both businesses and investors. The ambiguity is classifying a digital asset either as a security or as a commodity. I've often talked about that. Here in Washington, we like to declare things fish or fowl, and this has characteristics of both, and it's kind of a platypus as we look forward to it. And it obviously leads to confusion, legal uncertainty, and ultimately consumer harm because of that lack of clarity. And digital assets, such as cryptocurrencies, hold immense potential and long-term benefits. They can enhance liquidity, improve transparency, security using blockchain technology. They provide new revenue streams and encourage innovation and investments in emerging technologies. American innovation is a critical element of job creation and economic opportunity here in the United States, just much like our ecosystem of funding is unique to the United States, but that's why we are preeminent. And we have to look to preserve this competitive advantage and not let it leave our shores. And on that point, Mr. Chairman, and I know Chairman Stile as well had mentioned this, I'd like to thank you for including Mr. Emmer's Blockchain Regulatory Certainty Act in the bill. That legislation is crucial to making sure that those jobs and the innovation that comes along with them remains here in the United States. And legal clarity is essential for these developers to develop their products in America without over-regulating them out of business or offshore. By passing a comprehensive market structure framework, responsible actors will now have greater certainty and for consumers, greater protection from bad actors. For my friends on the other side who are concerned with conflicts of interest by elected officials, status quo is not the answer. Doing nothing does not solve that concern that they may have. The Digital Asset Market Clarity Act establishes a regulatory framework for digital assets that aligns with our existing financial markets while accounting for the unique characteristics of digital assets, provides clear, functional rules that allow market participants the ability to gain that clarity that they need. clarity that has not existed in nearly 2 decades. And thankfully, after years of regulation by enforcement, we have a Securities and Exchange Commission that is willing to partner with Congress in making sure that the market certainty is realized. Under Commissioner Peirce, Acting Director Ueda, and Chairman Atkins, the SEC has signaled a more welcoming approach to digital assets. Instead of creating arbitrary barriers and unachievable registration guidelines, the SEC and Trump administration have embraced digital assets and blockchain technology. Just yesterday, in public remarks, SEC Chairman Atkins noted, quote, "We should not automatically fear the future," close quote, and I wholeheartedly agree. American innovation is a critical element of job creation and economic opportunity here in the United States. And Mr. Chairman, our markets are the envy of the world. Congress must not cede its responsibility or that standing. We must pass the Clarity Act, and I urge my colleagues to support this legislation. And I congratulate, obviously, the authors and others who have been involved in this. I am very proud of the parts that I've been able to play over the last decade. And I just want to say congratulations to our colleagues on the Agriculture Committee for seeing with clarity the future, and with a 47-6 vote, and I hope that we can follow suit. With that, I yield back.
Gentleman yields back. Who seeks recognition? Of the gentleman from Illinois, Dr. Foster, you're recognized.
Yeah, thank you, Mr. Chair. There's a large number of questions I have about some foundational issues on this. You know, there's the whole business of why we're not doing anything to regulate the spot market that underlies a lot of this. There's the foundational issue of the definition of blockchain in your system. It's unclear to me whether that even allows for seize and freeze. That is important for many of the stable coins, simply to be a product that can't be abused. Because if you can't just look at the blockchain and see what the situation is because you don't know what seizing and freezing might be pending on these, maybe that doesn't qualify it for being a blockchain, but you know, there are dozens of questions I have like that. Another one that I'd like to see if I can get an answer to is the business of self-certification of quote-unquote mature blockchain systems. And so there's an exemption put in here for investment contracts involving units of digital commodity if the related blockchain system is certified as a quote mature blockchain system intended to become one within 4 years. So this question of intention, I don't know who calls balls and strikes on that. Section 205 in this further details the certification process for quote unquote mature blockchain systems, allowing issuers to self-certify. Okay, the SEC would have only 60 days to review and challenge such self-certifications. Okay, so that you can, it seems like you can do pretty much anything and just say, but I intend for it to be decentralized, and that would be enough. So I was just wondering, have you received feedback from the SEC on what sort of resources the SEC would require to adequately review the potentially large volume of these self-certifications? You know, there are a bazillion, crypto assets being spun up, every day in this country and around the world. And so who is going to call balls and strikes on self-certification? And particularly in a situation where the SEC is being gutted of key personnel, how are we going to actually be able to handle the volume of self-certifications? And just how does the bill even contemplate that there may be no way for the SEC to confirm whether the details included in the self-certification are true or not? You're going to need to investigate whether they're correct and in good faith. So it seems like there ought to be a lot of manpower if you don't want this to be a real problem. And I was just wondering if you can provide a little clarity on that.
Is the gentleman yielding to me? Is the gentleman yielding to me?
Yes, I yield.
Well, thank you for your question. Well, first of all, the bill outlines statutory requirements on being a mature blockchain that are outlined in the section, and then gives the SEC discretion on additional qualifications on it. And as it relates to the funding, we call for all the funding that's necessary in this authorization bill for both the SEC to do their job. And so, yes, the SEC has given us extensive technical assistance on writing the draft, and therefore they've analyzed the staff aspects of it.
Yeah. Yeah, would it be possible for us to see the technical information that you've received back from them? And also including their estimates of the manpower that they might need to actually be able to do a due diligence on all these self-certifications?
Well, again, yes, the answer to your question is we're happy to work with you and your staff and walk through the technical assistance that we receive from the commission and any estimates that they have on the manpower issues. But again, there are core definitions of how to be a mature blockchain in the statute, and then we offer the SEC's discretion to have additional ones as well. In your question, you seem to imply there's no definition of a mature blockchain vis-a-vis this statement about, the self-certification. It's based on the definition. Please yield back to you, sir.
Yeah, no, it's a question of there seems to be an end run around all those by just saying, oh, I know it's not that way now, but it's my intention to be decentralized, and so on. And it seems like that's a potential huge loophole in this thing, and particularly when the SEC is undermanned and has a default acceptance of a self-certification if they're undermanned and can't respond in a timely manner.
With the gentleman yield, just for a moment. Well, of course, the joint rulemakings that are contemplated by this bill, that they'll be done within 365 days of the bill being passed, so it's not imminent when this bill is signed into law. That kind of rulemaking and that kind of planning would take place over the next few months to do that. So I don't want you to think that if we pass this bill suddenly that all those requirements are being met immediately. They're being met according with that rulemaking. Yield back to you.
Yeah. So I guess my time's expired, but.
Gentleman's time has expired. I appreciate that dialogue. Who seeks recognition? Mr. Downing from Montana, you're recognized.
Mr. Chairman, I move to strike the last word.
The gentleman's recognized for 5 minutes.
Thank you. These are exciting times. In November 2024, the American people said loud and clear that they want the United States to remain the center of innovation and delivered a House, Senate, and White House to do so. The United States cannot cede leadership in the digital asset space. The lack of regulatory clarity has stifled innovation, pushed digital asset businesses out of the United States, and left consumers unprotected. This legislation before us today, H.R. 3633, the Clarity Act, will ensure the United States continues to lead in innovation and Americans have the protections they would expect in robust financial markets. The Clarity Act creates clear jurisdictional boundaries between the SEC and the CFTC, guaranteeing clear pathways for digital asset innovators to come into compliance with U.S. laws and regulations. The bill also creates a new pathway for digital commodity issuers to raise capital, giving developers a workable avenue to raise funds and further innovate without being subject to the SEC's jurisdiction in perpetuity. Finally, the Clarity Act preserves one of the most exciting value propositions of blockchain technology by enshrining individuals' right to self-custody of their digital assets into law. By allowing individuals to conduct financial transactions by themselves without the need to go through an intermediary, the Clarity Act appropriately accounts for the nuance of technology and ensures that its most transformative aspects are not lost to one-size-fits-all regulation. I want to thank Chairman Hill and Chairman Thompson for their leadership on this issue, as well as President Trump and Vice President Vance for ensuring Congress doesn't take its foot off the gas. I urge my colleagues to support this legislation, and I want to point out that the Ag Committee just passed this 47-6, and on that I yield back.
Will the gentleman yield?
Would the gentleman yield to the gentleman from Wisconsin?
Yes.
Yeah, gentleman, Wisconsin.
I thank the gentleman. I know our colleague in the previous dialogue, Mr. Foster, I believe you referred to self-certification. In self-certification, just to make sure I fully understand the approach here, is not a defined term in the bill. And so what I think we mean by self-certification, as I listen to you, is that an issuer could declare themselves mature through their own statements. And I'm happy to, although it's not my time, I'd be happy to engage in a little bit of a colloquy here if my colleague from Montana would be so gracious.
Yes.
Yeah, certainly. Yeah, my issue, I think there was a statement, I don't know the exact language, but if it is your intention to be decentralized, that passes as being That was the thing that caught my attention.
No, understand that. That's what I thought you were getting at. So maybe I can provide some clarity as to the intent of the drafting. I think as the language presents itself, the SEC would still have an opportunity to rebut or reject a certification. The SEC would have eyes on it the entire time. And in addition, the intention to mature would be subject to a disclosure and an offering statement, which in turn is subject to SEC enforcement under Section 17 of the Securities Act. So if there was a misleading statement, that issuer would face liability under Section 17. This requirement adds more rigor to that approach rather than a loophole. And so if I went back to the overall intent is to mature is only about qualifying for the codified exempt offering. It's not about being certified as mature.
Okay, yeah, I guess part of my question was just about enforcement capacity on this. Because I don't know how many digital assets are being spun up every day. And if all of a sudden 3/4 of these things come out claiming they intend to be decentralized, then how do you possibly have the capacity at the SEC to find out what fraction of those may actually be, legitimate?
I understand the concern, but hopefully the clarity there that you're still under Section 17 of the Securities Act, and so therefore you'd have liability for false or misleading statements is helpful. We'll continue the dialogue. I'll yield back to my colleague from Montana.
On that, I yield, Mr. Chair.
The gentleman from Montana yields back. The chair recognizes the gentleman from South Carolina, Mr. Norman.
Thank you, Mr. Chairman. I move to strike the last word.
The gentleman is recognized for 5 minutes.
I'm speaking in support of the Clarity Act, which establishes a much-needed functional framework to provide certainty for the digital assets industry. I want to highlight a specific provision of the bill that deals with national security, which is Section 313 of the underlying bill. Section 314 of the ANS requires the Treasury Secretary, in consultation with the CFTC and the SEC, to complete a study and submit a report to Congress that identifies any digital commodity registrants that are owned by governments of foreign adversaries. GAO is also required to complete a study and submit a report to Congress on the same issues. Why does this provision matter? In a June 2023 financial services hearing that focused on the need for digital asset legislation, Aaron Kaplan, who was the CEO of Prometheum, testified. Prometheum is the first SEC/FINRA approved special purpose broker-dealer for digital assets. That means Prometheum can transact in as well as custody digital assets. In that hearing, Kaplan stated that Prometheum and its CCP partners entered into a joint agreement in December of 2018 to develop a blockchain trading system where the Chinese partner took a 20% stake in Prometheum. The circumstances surrounding Prometheum raises serious national security and data privacy concerns. In case anyone has any doubt about its CCP ties, Prometheum's Chinese partner company was founded in 1969 by a former senior CCP official. In 2021, the party's Central Committee named him a National Excellent Communist Party member, which is very disturbing. The fact of the matter is that because Chinese companies are generally required by Chinese law to share data with the Chinese government, these companies present substantial risk to the United States' individual privacy and national security, not to mention that they share no information from them. I look forward to supporting the Clarity Act, and I'm grateful for the inclusion of this provision that would promote transparency regarding how our nation's strategic enemies may be exploiting the digital asset marketplace to invade the privacy of Americans and steal valuable intellectual property. I yield back, Mr. Chairman.
The gentleman yields back. The gentleman who seeks recognition, gentlewoman from California.
Mr. Chairman, I move to strike the last word.
Gentlewoman is recognized for 5 minutes.
Thank you, Chairman Hill. Californians have made it clear that they want access to digital assets. And 84% of Californians believe that crypto and blockchain are important tools of the future. In my home state, there are over 8 million people who own digital assets. And at my alma mater, USC, there is a blockchain minor that students can pursue and classes on decentralized finance regulations and NFTs. That is why I was so proud to support FIT 21 under Chairman McHenry last Congress, and I'm speaking today in favor of Clarity that is led by our chairman, French Hill. I know that some of my colleagues are concerned about illicit finance and money laundering. However, by not passing this bill, we would not be implementing the much-needed anti-money laundering and counter-terrorist financing protections. Just last week, the Department of Justice exposed North Korean employees who are funneling cryptocurrency through a global money laundering operation. We must tighten the leash on North Korea and safeguard our digital asset ecosystem to prohibit bad actors. That starts right here by voting for the Clarity Act. Additionally, I'm also happy to see the inclusion of a joint study between CFTC and SEC regarding the financial literacy of digital commodity holders. You know, when I was working on financial literacy in Orange County, we used to hand out pamphlets about how to use a checkbook or open a bank account. I could have never imagined today that I would need to learn about digital currency or how to use a digital wallet. So the inclusion of this study in the Clarity Act will make sure that our federal financial literacy resources keep up with the latest technology that impacts financial security. Californians want to own digital assets and engage in this exciting technology. So by voting for today's bill, we deliver a clear roadmap to bring blockchain companies back to America and protect consumers as they participate in the digital asset ecosystem. And I echo my colleagues, that I hope that the vote that we take tonight will be just as extremely bipartisan as the Act Committee's vote was, which was at 47-6. Thank you, and I yield back.
The gentleman from California yields back. The gentleman from California, Mr. Liccardo, is recognized.
Thank you. Move to strike the last word.
The gentleman's recognized for 5 minutes.
Thank you, Mr. Chair. Appreciate you putting up with the deluge of comments from folks from my state. I wanted to ask if the chair or perhaps Mr. Stahl might be willing to engage in dialogue over a couple of questions.
Of course, we'd be happy, either one of us would be happy to be yielded to by you for an answer to a question.
Wonderful. I know that Mr. Hines and others have raised concerns about Section 202. And as you know, it allows for sales, at least of the current text, up to $75 million in a 12-month period under the exemption, and further limits the purchaser owning no more than 10% outstanding units. My understanding, at least in discussion, public discussion, was that the intention was that this would not vary from the essential requirements of Reg A. There's going to be no significant alteration of the fundamental financial structures by which we expect issuances and capital raising to occur. But my understanding is also that Reg A requires audited financial statements, requires the SEC to qualify the offering before the first sale, and other requirements that are not in this. Is there a reason why we would not incorporate Reg A requirements as part of this provision 202?
Does the gentleman from Wisconsin want to respond first, or?
Sure, maybe I can start on that, Mr. Chairman. I appreciate my colleague's question. I appreciate his input on the drafting and creation of this bill. You've been a good partner in providing good feedback. I think as we look at Reg A and the securities filings, what we see is really more of an inspiration for what we are drafting, but recognizing that digital assets are truly novel instruments. And so although there are certain parallels in the construction of the Clarity Act to current existing securities laws, what we're looking for is providing additional clarity for the digital asset space. So the parallel is not exactly the same. We do have a cap on offering issuance and also restrictions on insider sales. So you do see some of those parallels. Maturity is a key concept here, and we have to account for that in our framework, which we do in both eligibility for the exempt offering as well as insider sales restrictions. So in a sense, the eligibility is narrower maybe because these projects intend to be mature or are mature, but you're right, it's not a direct parallel off of Reg A, but I think in many ways in the construction of the legislation, the Clarity Act, we were looking for inspiration off of current securities laws, but recognizing that digital assets truly are novel and needed a new, unique, and specific approach in the digital asset space.
Thank you, Mr. Stile. One other question. I know that we've had some conversations about DeFi specifically, and my concerns about what we know is the largest share of the emerging market in terms of transactions is really increasingly going to be around DeFi. And I'm concerned about the extent to which and whether the bill really mitigates the risk that by excluding entities that label themselves as DeFi, but are still performing core financial functions, lending, exchange, intermediation, that we're excluding them from regulatory oversight, even though it walks like a duck, quacks like a duck, but we're calling it DeFi.
Will the gentleman yield?
Sure.
Appreciate the comment here, and it's something that we took and thought about in the drafting of this text. In the structure of the legislation, it's really not about labels, but rather about the activities of the technology. So if it is non-custodial and not subject to discretionary control, it is DeFi. But if it were custodial and discretionary, then it is. And so we're not looking at autonomy as our North Star. We're really looking at what the underlying function is rather than the label that it gives. And maybe this goes a little bit back to the comment Mr. Foster had when we were talking about the structure of the bill in the Reg A context, or in the self-certification context, that it is the nature of the activity rather than the self-defined terminology.
All right, I see I'm out of time, so I'm happy to take this offline. Thank you, Mr. Chairman.
Thank you. We look forward to working with you on Section 202 on the amount as well as the disclosures required, which financial statements are included in Section 202, Paragraph 3, semi-annual reports. So, but we'll get with you on that detail, and I thank the gentleman. Gentleman yields back.
Yeah.
Gentleman from California, Mr. Sherman.
Well, here we are again to talk about crypto, as if the country has no other problems. But obviously, crypto has an opportunity to add to the problems of this country. We are told by this industry they want clarity. They don't want clarity, they want a patina of regulation and a superhighway to corruption. Now, last time we were here, we dealt with the issue of whether there would be bailouts. And I'm sure everybody wants to go back to their district and say they're against allowing federal bailouts of the crypto industry. So I put forward an amendment, as I will again today, and I got the response I expected. Everybody says that they're against bailouts, but they're opposed to any amendment that would prohibit bailouts. Maybe it's not an italic font. Maybe it's not punctuated correctly. Whatever it is. Then they say, you know, the chairman has said he wants to work with me on it. So I presented at that meeting a very good amendment, and I have no suggested changes except please go away and don't let our constituents know that we're in favor of a federal legal structure that allows for bailouts. Now, the bailouts won't come before the 2026 election, but this industry will go to its investors and say, hey, we're as strong as the dollar, we're as good as a money market fund, and don't worry, if there's a problem, you'll just get bailed out. Second, the American people, at least the ones I've polled at my own town halls, are very much against the idea of spending U.S. tax dollars to, quote, buy, invest, bet on crypto. This bill will do nothing to prevent the federal government from buying not only Bitcoin, but Trump coin, or Skippity Toilet coin, or Hamster coin. Now, they won't do it before the 2026 election, but they'll do it. And they'll fight to make sure that they have the legal capacity to do it and that nothing in the law stops them from doing it, all while telling us they're not going to do it. Then we've got campaign contributions. This is a superhighway to the anonymous campaign contributions from foreign entities. And I'll explain that when I present my amendment on this issue. It used to be that people would try to they'd give cash to people, straw men, who would then write a check. And in order to give a politician 50 grand, they'd have to find 25 to 50 co-conspirators, and they'd often get caught. Now we've got a system that will allow every foreign interest to contribute without anybody ever knowing. And finally, we've got the Trump corruption, where you sponsor a coin. From a low-tech perspective, imagine if 50 years ago, Richard Nixon had just taken some monopoly money and put his own face on it and then sold it for cash and made hundreds of millions of dollars. People would have said that was corrupt. Now you do the exact same thing electronically, and you're called innovative. And so I know the ranking member will have an amendment that will prohibit that. And all these amendments will fail because the purpose of today's effort is to give this industry everything at once while not letting our constituents know that we will have an open door to giant Trump administration and Trump family corruption. We will have the campaign finance laws will basically become a nullity. We will have an open door toward bailing out the Sam Bankman-Frieds of the future at the expense of the American taxpayer. And we will take your tax dollars and we will buy crypto of every sort. And we'll all be told it can't happen, and we'll all be told it won't happen, and we'll all be told, but we have to vote against any amendment that would prevent it from happening. So I don't know if the American people are watching. I realize there are other distractions, including the effort of this administration that calls my city a city of criminals and now seeks to tear that city apart. Imagine an American Secretary of Homeland Security turning to the greatest city of the West and saying that's a city of criminals. So there are other things happening. But what we're doing today is to try to give a patina to tell the American people this is regulated.
Time has expired.
And it will not be. I yield back.
Gentleman yields back. The gentleman from South Carolina, Mr. Timmons, is recognized.
Thank you, Mr. Chairman. I move to strike the last
Gentleman's
word.
recognized for 5 minutes.
You know, I got kind of confused over the last 5 minutes. I'm not sure if we were talking about Act Blue or Hunter Biden selling influence in the Biden administration, but I guess just to clarify things, there's nothing clearer than the ag vote that just came out, 47-6. That's 88% of the overall members on the committee. Even better is that 72% of my colleagues across the aisle. This is not a partisan issue. This is a bipartisan issue. Over the past 6 months, we've done the hard work, holding hearings, building bipartisan coalitions, and engaging with both innovators and regulators to craft a serious, functional framework for digital assets. The Clarity Act is the product of that effort. I am proud of the strong bipartisan legislation that my friend from Wisconsin, Mr. Stile, and Mr. Torres, and our dedicated committee staff have worked hard to craft. This bill provides long overdue regulatory certainty by clearly defining the roles of the SEC and the CFTC, closing the spot market gap, and applying proven market safeguards to the digital asset space. It puts consumer protection and innovation on equal footing. For too long, regulatory confusion has driven talent capital and entire companies overseas. The Clarity Act replaces that confusion with a clear, enforceable set of rules that protect customers and support responsible innovation here in the United States. And the timing could not be better. With President Trump in the White House, we now have a real opportunity to restore leadership in digital finance. The message is clear. America is open for blockchain innovation again. I urge my colleagues to support this legislation to help bring the digital asset sector back to American soil where innovation belongs. And most importantly, I think that we should beat the Ag Committee and go better than 88%. With that, I yield to my friend.
Would the gentleman yield for a minute?
Yes, I'll yield to Chairman.
I appreciate the gentleman's strong support and his outstanding comments. And I've heard reference today several times the words FTX. FTX was committed fraud from a Bahamas-based organization right under the nose of our former SEC chairman, Gary Gensler. And he did nothing about it. In fact, he was prosecuting people trying to come in and register, and guess what? The part that was affected in the U.S., administered by the CFTC, overseen by the CFTC, there was absolutely no problem. Nothing happened to FTX USA as overseen by the CFTC, and yet somehow Chairman Gensler let that happen. That's what this bill is all about, is to create the rules of the road to protect consumers, promote innovation, create the next level of development, technological development on distributed ledgers on the internet, and resolve this and give strict rules of the road so that we can protect consumers, enhance investment, and bring that business to the U.S. under strict standards that we've developed not only in this legislation, but also in our previously marked up stablecoin legislation. I yield back to the gentleman from South Carolina.
Will the gentleman yield?
I'll yield to the ranking member. Yes, ma'am.
Thank you very much. As Chairman Hill described what this bill is all about, he left out one thing. He left out it is about supporting the President of the United States of America and his family, including Melania and the boys.
Reclaiming my time, Madam
Chair.
Chair.
From their ownership of crypto.
Reclaiming my time, Madam Chair. I think anyone that has the beliefs that you have regarding this would want this bill to pass because it creates rules of the road. We got to make sure that we are the best place in the world to start a business, to grow a business, and that is particularly true in emerging technology. This is the future, and we cannot afford to follow. We must lead, and with that,
Will the gentleman yield?
I'm going to yield the remainder of my time to my
I'll
friend
simply
Wisconsin,
say
Mr.
I
Stiles.
want these.
The time has been yielded.
Yielded to Mr. Stile.
Myself. I'm just going to add one thing, as we got 1 minute. Let's go back and build on what Chairman Hill just said as it relates to FTX. I think it's actually a real good learning lesson. I think you can look at Mr. Miller, former general counsel of FTX, what he said. He said, quote, "Had the regulatory structure provided for in the bill currently being considered by financial services and ultimately by Congress applied to FTX, the story I just told would almost certainly have a much different ending. Examinations, governance requirements, audits, reporting, record keeping, and customer asset segregation requirements directly address the shortfalls that have allowed this vicious digital asset industry failures and thefts to occur," end quote. And so as I go back to the comments that we were previously listening to about how do you prevent the collapse, how do you prevent fraud and abuse of consumers, you pass the Clarity Act. And so those of us that are concerned about making sure that we're protecting consumers are going to be voting yes for the Clarity Act. I yield back to my colleague from South Carolina.
I yield back
Gentleman
to the
yields
chair.
back.
Thank you.
Gentleman from Iowa, Mr. Nunn's recognized.
Well, thank you, Mr. Chairman, and I want to say a particular thanks in the Ag Committee and the Financial Services Committee. We've been able to work together. It's possibly even more impressive than Democrats and Republicans working together. We were able to get this done today in a bipartisan way and voted on and out of the Ag Committee supporting the Clarity Act. Chairman, you highlighted the impact of why this is necessary. FTX, an offshore company in an unregulated environment where Gary Gensler did nothing to provide certainty, clarity, and lanes and rules of the road here, nearly bankrupted Silicon Valley Bank. That's where the contagion spread in the United States, and that was going to impact every one of my hometown banks in Iowa who would have had to have helped bail out FTX if the FDIC, most of which they weren't covered. But then we had the font of wisdom from Washington, D.C., in my very first act as a member of Congress, Senator Chuck Schumer rally us all together on a Zoom call and try and explain how he was going to solve this, and that man couldn't even find the unmute button on his Zoom call, let alone unravel this untenable situation where there is no clarity. So this bill moves forward something that, folks in Iowa, who represent a large reflection of the entire country, know very well. When it comes to things like commodities, the CFTC helps lead. We've been doing this in pork, beans, and hogs for nearly 200 years. This is the kind of thing that helps us have clarity and move forward. But when it comes to my hometown banks, many of in Iowa, which have been there for over 150 years themselves, they look to the SEC for guidance, and that provides certainty for them. But when it comes to digital assets, these lines are blurred, and there's not a good pathway forward. The current system creates a regulatory gray zone for us, where we can't get straight answers from government officials or private entities, and investors face confusion. Innovation flees the country, and Americans are slowly losing our onshore capability to compete in this area. Quite simply put, Mr. Chairman, this uncertainty has cost us, and not just in billions of dollars, but in real jobs and real loss of innovation. I recently spoke to a U.S. tech company that spent more than $15 million trying to comply with these unclear and often conflicting guidelines between the SEC and the FTC. They spent money they could have otherwise spent hiring engineers, expanding operations, and creating good-paying jobs in places like Iowa. Instead, they paid legal fees and got caught up in lots of red tape. Mr. Chair, we can't allow this to continue to happen, and that's why I'm so proud to support the Clarity Bill that both Chairman Stile has been leading here and Chairman Johnson in the Ag Committee have already passed. This bill provides one thing our digital asset ecosystem clearly needs: clear rules of the road. They've asked for it. It does not create more bureaucracy. It provides definition. It clearly defines the lines and coordinates the work of the CFTC and the SEC so companies know what to expect. Investors know how they're protected. Regulators can perform their duties effectively. And importantly, from a national security perspective, the U.S. remains the leader in American-backed digital assets, so that those countries who may be competing with us on fair ground, like Singapore and the UK, can do well. Countries that overregulate, like the European Union, can learn from their mistakes. But most importantly, countries like Russia, China, Iran do not own this space before the U.S.-backed digital assets have the opportunity to take off. This bill acknowledges that we are in a global race. America can be in the driver's seat, or we can be offshored and a recipient of bad behavior. I don't believe any of us on either side of the aisle wants to see that. And if ag and financial services can work together, more importantly, if the House and the Senate can work together, then I'm highly confident that Democrats and Republicans can work together in the interest of the American people. Now is the time for clarity. Now is the time to lead. Mr. Chairman, thank you for helping lead this bill.
Will the
Thank you for
gentleman
providing
yield?
clarity. The gentleman will yield.
Let's pass the bill.
Agreed. Thank you.
We only need 4 amendments.
Reclaiming my
No
time, I would agree with
bailouts,
the gentleman that we should
no
absolutely pass this bill.
bailouts.
Do not confuse this. Do not put us down more years of confusion. Don't put me back on a Zoom call with Schumer where there's no guidance provided. We have clear lanes of the road. I would work with my colleague on the other side of the aisle for further refinement, but don't put the brakes on a good bill that this country desperately needs. We cede the high ground to foreign countries when we don't act in the right way. With that, Mr. Chairman, I yield my time.
The gentleman yields back who seeks recognition. The gentlewoman from Michigan, our conference chair, Ms. McLean, is recognized.
Thank you, Mr. Chairman. I move to strike the last word.
The gentlewoman's recognized for 5 minutes.
Yeah, I come at this from a little bit of a different approach as being a business owner prior to coming to Congress and knowing firsthand the importance of having clarity in the decisions that we make. It just helps us do business for the client, for the consumer. Clarity is critical, clarity is important, and I'm gonna come at it from a perspective of I think we all wanna do the right thing, but at the end of the day, we have to have clarity, right? Imagine driving down the road not knowing what the speed limit would be, only then to have some arbitrary person come and give you a ticket for going over the speed limit when you never knew what the speed limit was. So this bill is about clarity. You can make it political all you want, but at the end of the day, let's put policies over politics. I want to voice my strong support for the Digital Asset Market Clarity Act of 2025. This bill is a thoughtful, may I say, bipartisan effort to bring long overdue clarity to the regulation of digital assets and the centralized platform where they're traded. For years, innovators and investors alike have operated in a fog of regulatory uncertainty, unsure of whether their products fall under the SEC jurisdiction or CFTC oversight or another regulatory regulatory agency entirely. This is not how capital markets are supposed to work. It's time we modernize our laws to reflect the reality that digital assets are here to stay. Let's embrace it. In short, this bill does what Congress should always aim to do when dealing with emerging technologies. Give innovators the clarity they need to build right here in the good old US of A, and give the regulators the tools they need to actually protect the public. See, it works on both sides. It advances American leadership, reduces regulatory framework, and reflects an innovation-forward view of finance. I commend my colleagues on both sides of the aisle today who have worked here today to get this done. I urge all members to support this bill so we can deliver the clear, consistent rules of the road that our digital asset markets desperately needs. And with that, Mr. Chairman, I yield back.
I thank the gentlewoman from Michigan and for her service to the conference. Does anyone else seek recognition? Hearing none, we'll move to amendments.
Okay.
Does anyone wish to offer an amendment to the amendment in the nature of a substitute?
Yes,
We have, Mrs. Waters has an amendment at the desk. We'll pause while it is distributed. Mr. Stiles?
Mr. Chairman, I seek a point of order.
The gentleman from Wisconsin has reserved a point of order.
On a stable coin or meme coins, it doesn't make a difference. Okay. So am I saying this correctly?
A point of order has been reserved, and the clerk will report Mrs. Waters' amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mrs. Waters of California, designated as H.R. 3633T01.
Without objection, the amendment is considered read, and the gentlewoman, the ranking member of the full committee, Mrs. Waters, is now recognized for 5 minutes on her amendment.
Thank you, Mr. Chair, and I have this amendment at the desk. This amendment would add in H.R. 3573 the Stop Trump and Crypto Act to ensure that we limit conflicts of interest that could arise from our position as elected officials. Throughout this Congress, I have repeatedly gone through all of the President Trump's crypto ventures. Every week, it seems like news comes out of what he's starting, a new project. You gotta hold it down. One day, it's a meme coin, the next, it's a stable coin, and now a wallet. That is why I and committee Democrats introduced the Stop Trump and Crypto Act. This legislation would block the president, the vice president, members of Congress, and their immediate families from engaging in crypto corruption and blatant conflicts of interest. Importantly, it would stop all of President Trump's crypto conflicts to date. Over the last 9 months, Since before he was even elected president, reports have shown that President Trump has made up to $2.9 billion from his crypto ventures, lifting his net worth to an estimated $5.6 billion. So according to Forbes, crypto has done more than just make President Trump richer. It's also provided liquidity that the president needed. In an article, Forbes pointed out that, and I quote, "A year ago, he was short on cash with about $400 million on his balance sheet and more than $500 million in legal judgments against him. The vast majority from a fraud case he lost and is currently appealing. Now, however, Trump holds roughly $900 million of liquid assets, about half of which come from crypto ventures." Quote, end quote. This isn't all. The $2.9 billion will continue to increase. He has hundreds of millions, maybe even billions, on his way, thanks to his company, World Liberty Financial. And not just that, but Trump is receiving money directly from foreign nationals, as he did with his meme coin. Reports show that in his private VIP reception for the top holders of his meme coin, most were non-U.S. citizens. The corruption won't stop there. Insiders are now speculating about what President Trump might offer his investors next. They might open up a new exclusive club in D.C. The price? Buying President Trump's meme coin. Maybe he'll offer his investors exclusive access to Mar-a-Lago, his hotels, resorts, or golf courses. Chairman Hill, you said yourself that, quote, "The Trump family activity in the meme coin space makes my work in Congress more complicated," quote, end quote. I agree with you, Mr. Hill. I think this makes Congress's job more complicated. But that doesn't mean we should turn a blind eye. We must address these conflicts head on. We must not rush to create a regulatory regime through Complexity Act that completely ignores President Trump's crypto actions. Frankly, it doesn't matter whether President Trump is a Republican or a Democrat. The conflicts of interest presented by the president's various crypto ventures put our national security, investors, consumers, and most importantly, Democrats at risk. We must work to end Trump's crypto corruption in any crypto bills we consider, and I urge members to support this amendment. And I just want to say to everyone, if the members of Congress, Republicans or Democrats, knowingly support this bill, knowingly support the corruption of the President of the United States, there won't be any excuses when investors and consumers all find that they have been ripped off. How can we sit here knowing what the president is doing? I know he's departed with Elon. He doesn't need him anymore. He got Elon's money, and now he can go to the Middle East and every place else and get more money. Democrats better watch out, because he is going to fuel his pockets with money that he's getting out of crypto to run against all of us. And so this is corruption in its highest form, and we should be
Gentlewoman's
against
time
it.
has expired.
I yield back.
Pursuant to the previous order, the chair declares the committee in recess, subject to the call of the chair. We will reconvene immediately following votes. Thank you. The committee stands in recess. Does the gentleman insist on his point of order?
I withdraw my point of order.
The gentleman from Wisconsin withdraws his point of order. Is there further debate on the Waters Amendment? Let me recognize myself for 5 minutes. Let me be clear, this bill is not about the personal finances of any American citizen, any one individual. It's about creating a fair, functional, forward-looking regulatory framework for digital asset markets that applies to all individuals regardless of who they are and regardless of the application connected to digital assets. The Clarity Act is a market structure bill. It sets clear definitions, assigns agency jurisdiction, establishes rules of the road for exchanges, brokers, dealers, and other intermediaries. It's not an ethics bill, nor was it intended to revise how we govern the conduct of federal officials here in the House or elsewhere. This bill includes strong market-wide protection. It requires the registration of digital commodity exchanges and intermediaries with the CFTC. It requires comprehensive disclosures, sales obligations for insiders, the use of qualified custodians, and compliance with all anti-fraud or manipulation provisions. Everyone, regardless of status, is subject to the same oversight and enforcement. This bill is about protecting consumers, ensuring market integrity, and keeping the United States at the forefront of innovation. A yes vote helps craft that regulatory system that provides all those protections and enforcement related to those protections for all Americans engaging in these markets. So in my judgment, there's not necessary to support the Waters Amendment. I urge a no vote, and I yield back the balance of my time. Who seeks recognition? The gentleman from California, ranking member of our Capital Markets Subcommittee.
Again, I want to make it clear, you can go back to your constituents and say, I voted for this bill because I wanted a fair, logical system. You're going to be given an opportunity to get a bill on the president's desk by the end of the week. All you have to do is to agree to some amendments that will prevent this bill from being a superhighway to corruption. You'll also have a chance in this room to vote again and again to cause this bill to serve as a superhighway to corruption, and you will record those individual votes. First, I asked, FTX has been mentioned here, and they try to blame Gary Gensler. I ask unanimous consent to put in a record a letter dated March 16, 2022, right after FTX got some subpoenas, telling the SEC to lay off and that it may not have authority to seek information from FTX. So I ask unanimous consent to put in the record this letter led by Tom Emmer of the Republican caucus.
Without objection.
Thank you. So now we have this chance to pass the ranking member's amendment to make sure that this bill doesn't become a powerful device to enrich the president and his family. Now, we have to have some sympathy for President Trump. He just lost the patronage of the richest man to walk the face of the earth since Meuser traveled from Mali to Mecca. Man worth well over $100 billion. So how does this bill and the crypto industry at large enrich Donald Trump? It says that he's free to create monopoly money, electronic monopoly money, which he's already done. He calls it Trump coin. But it's literally, if you want to think about things in a non-electronic way, it's like he just printed up some monopoly money with his face on it. And then he's free to sell that, as he has, to the Chinese interests that control TikTok for $300 million of U.S. money for $300 million face value of Trump coin, Trump money, monopoly money. So he also is allowed to create Trump stablecoin. and get $2 billion from Abu Dhabi, part of the United Arab Emirates, for that, which is either a transfer of $2 billion to him in his net worth, or at minimum, an interest-free loan that Abu Dhabi can pull away from him, perhaps, anytime he doesn't do what Abu Dhabi wants him to do. So we have a bill that could become law and on the president's desk so long as it's not a superhighway to enriching the president and his family and to allow foreign interests to corrupt our system. So what will, the most obvious of that is $300 million in return for monopoly money, or in this case, Trump coin. There are no reserves behind Trump coin. It's just pure profit. He doesn't have to buy any treasury bills with this money. He just puts it in his pocket. So what can he do with it? Well, he can enrich himself, or he can finance the 2026 campaigns if he chooses to do that, since it looks like Elon Musk may not. So if you want this bill to become law quickly, you vote for this amendment. I'd also point out that Elon Musk has participated in this process because Elon Musk or somebody, nobody reveals whom, but we know that somebody made $37 billion, I believe it is. Might be, I'll get you the exact figure later. Anyway, $37 billion or more, because they knew that Dogecoin would, 1 week later, get this huge boost because they'd name a government agency after the coin. It sounded weird at the time. Wonder why they did it. They did it to enrich the people who knew a week in advance, who knew between the election day and a week later that that would be the name. So whether it's Elon benefiting or whether it's Trump benefiting from foreign money, this amendment would stop it and would prevent both the enrichment of Elon and Donald Trump, and prevent the perversion of our political system by allowing either of those men to use their ill-gotten gains for political purposes. I yield back.
Gentleman's time has expired. The gentleman recognizes the gentleman from Wisconsin, Mr. Stile, the chair of our Digital Assets, Financial Technology, and AI Subcommittee.
Thank you very much, Chairman Hill. I think it's worth noting, to go back to your opening remarks, that everyone under this bill is subject to the same oversight and enforcement. I hear some of my colleagues are interested in altering and amending federal ethics laws. This bill does not do that in either direction. It simply provides clarity in market structure and rules of the road in digital assets that apply equally to everyone engaged in the space. And so this amendment, and I suspect amendments to come further from some of my colleagues on the committee, are not relevant to the underlying text of the bill in the context of what we're working on, which is providing market structure to digital assets, clarity in the space, and an opportunity to make sure that the next wave of innovation and development is occurring in the United States of America. So I would recommend my colleagues to vote no, and I will yield back.
Gentleman yields back. Who seeks recognition? If there's no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. The gentlewoman requests a recorded vote. All those in favor of a recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. We'll now move to the next amendment.
If the ranking member doesn't have an amendment, then I have an amendment at the desk.
The gentleman from California has an amendment, and we'll wait and have it distributed.
And the one we should be distributing is Sherman 047, dealing with bailouts.
047, and Mr. Downing, Mr. Moore, sorry.
I reserve a point of order.
The gentleman from North Carolina reserves a point of order. Thanks.
This feels like deja vu. Meaning anticipation.
Okay.
They did that last time. She carried that whole afternoon.
Okay.
A point of order has been reserved, and the clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Sherman of California, designated as Sherma 047.
Without objection, the amendment is considered read, and the gentleman from California is recognized for 5 minutes to discuss his amendment.
The idea that taxpayer money would be used to bail out a cryptocurrency, a stable coin, or a crypto broker is such an anathema to the American people that every member of this committee must pretend that they're against it. The question is, can they pretend they're against bailouts with taxpayer money while at the same time building a superhighway for crypto that is a superhighway to bailouts? Can they pretend that they're building a superhighway for crypto, but they don't know where that highway is going? That is the effort that we saw on the stablecoin bill, where I came before into this room just last month or a month and a half ago and said, here's my amendment to prevent stablecoin, which is a subset of the crypto world, from getting government bailouts. And every single Republican in this room says, oh, we're against bailouts. We'll work with you to make sure that doesn't happen. I presented text of an amendment to that bill that would effectively prevent bailouts. And no Republican in this room, even though many who said they'd work with me on it, has responded. Why? Because they don't want to offend the crypto world by preventing them from getting the bailouts they really want. Now, they don't want the bailouts now. They want to be able to turn to their investors and the other people they're trying to hoodwink into the crypto world and say, hey, we're just as good as the banks. We're just as good as gold. We're going to get bailed out should there be any trouble. So the crypto world wants to turn to the people in the world that might invest and say they're eligible for bailouts. At the same time, no bailouts before the 2026 election, because that could be a problem. So, how could crypto get bailed out? Well, first, pass this bill, build the superhighway, and then read it in conjunction with Section 13.3 of the Federal Reserve Act, which is available for non-banks in unusual and exigent circumstances. Now, the purpose of this bill is to facilitate a crypto world that is clearly going to be systemically important to the United States and to the world economy. No one in the crypto world says, we want to be small. God knows, why are we at $3 trillion? We're just like playing cards to invest in. This is like comic books. Don't pay any attention. No. The purpose of this bill is to build a superhighway to crypto becoming so significant that it poses a systemic risk, and then make sure that every Republican member of this committee can say they're against bailouts, but find an excuse not to prohibit bailouts, but to leave in force Section 13.3 and other provisions that will allow for the bailout. Then, when the systemic problem happens after the election, they can say, well, we were against bailouts. We told Sherman we were against bailouts. We just couldn't vote for anything that would prohibit the bailouts. We didn't need to vote for it. We didn't know it was going to happen. Nobody told us. So, put up or shut up. Vote to prohibit bailouts or vote to find an excuse why you didn't want to prohibit bailouts. So I look forward to people figuring out a reason why they can impress the crypto billionaire bros by giving them what they want, which is a highway toward systemic importance and a highway toward bailout eligibility. Now, nobody actually wants the bailouts. They hope that everything goes fine, but they want to be able to tell their investors that they're bailout eligible. They've promised they won't tell them that until 2027 after the election. But the key thing that they need now from you, if you want to be a complete sellout to the billionaire crypto bros, is to vote against this amendment and to make sure that they are eligible for bailouts. So if you want to stay on good terms with the crypto billionaire bros, figure out your excuse to vote for this amendment and see if your constituents are stupid enough to believe you. And I'll yield back, unless the ranking member has a comment. No, I yield back.
Gentleman yields back. Who seeks? Oh, does the gentleman from North Carolina insist on his point of order?
I'm glad to withdraw it.
Gentleman withdraws his point of order. Who seeks recognition? Ranking member of the full committee, Ms. Waters.
I move to strike the last word.
Gentlewoman is recognized.
I thank Mr. Sherman for offering this amendment. Between 2022 and 2023, we witnessed one crypto house of cards collapse after another. FTX defrauded customers of $8 billion. Celsius failure to freeze $1.2 billion of customer funds, and Voyeurs failure locked up more than $1 billion. Terra Luna's fraudulent stablecoin erased roughly $40 billion in market value when it collapsed. Painful as it was, these losses stayed mostly inside the crypto industry and did not reach the wider financial system. The chairman's mark would change this by pulling crypto closer to the core of our financial system. We have already heard that the big banks are looking to work together to offer their own stablecoin, and it isn't hard to see how existing crypto firms will grow significantly when we put the federal government seal of approval. Mr. Sherman's amendment foresees this possibility that a politically well-connected industry may run back to Congress when they get in trouble and ask for a bailout. Taxpayers shouldn't be called on to bail out crypto's failures. I support the amendment, and I urge the members to do the same. Mr. Chairman and members, this is but one effort that's being put forth by Mr. Sherman, and he has reiterated over and over again that this country is not in a position, the people of this country, to bail out the failures of crypto when it occurs. If, in fact, this market structure bill is allowed to pass, those of us who have been around for some time, who witnessed what happened back in 2000, know what it means when the failure hits our individuals, both the investors and consumers. And so, while it may be ignored at this moment and at this time, I am not surprised that for those who have been criticizing the SEC, that is the Biden SEC, that some of them have been involved in basically trying to intimidate the Biden SEC by sending them the kinds of questions and demanding all kind of information about why they were doing what they were doing in order to try and create, some protection against what could have happened. And so for those who were trying to intimidate the SEC and Gensler and trying to create situations to make them look as if they were using their power in an extreme way to undermine cryptocurrency should be aware that this is all record. This is all recorded in the history of cryptocurrency. And I want you to know, without the kind of handrails that we are trying to advocate for, without the President of the United States using his power for ownership and controlling SEC and all of the independent agencies, that we are headed for even worse than we experienced in the meltdown that occurred in this country, where basically almost put us into a real recession. And so I would like you to give some thought to what is going on here today. And all that we're asking is that you have the opportunity to remove the possibility for corruption that is so obvious, that is right before our very eyes. Corruption by the President of the United States. The President who and his family are increasing their ownership. The President of the United States that's opening the door to foreign countries to get involved. The President of the United States who's creating the opportunity to get money for campaign purposes that does not have to be under the scrutiny of the Fair Elections Commission, on and on and on. I think that those of you who've been around long enough can understand what it is we're talking about and what we're trying to do. And I think that many of you agree with us, but the intimidation of a Trump who, like he is sending troops into Los Angeles, like he's got the National Guard, now he's got the Marines going in to intimidate whenever and however he can. You are intimidated by him. You're afraid of him. You don't want to cross him. But what you're doing is undermining your own possibilities to do the kind of protection for your constituents that most of you want to do or would like to do. Don't allow Trump to do this to you. Don't allow him to own your ability to make the kind of decisions that you came to Congress to make, to protect consumers and investors. Don't allow him to literally use the power of the president owning the SEC and the FTC, all of them, and using that power to intimidate to basically undermine all that we're doing to eliminate corruption, because that's what this is all about. Crypto is moving with the possibility of big-time corruption. I yield back.
Gentlewoman yields back. Who seeks recognition?
Mr. Chairman.
The gentleman from North Carolina.
It just strikes me that, yes, one
Gentleman's
president...
recognized for 5 minutes.
Thank you. It did strike me that one president did open this country up to attacks from outside, and that was the previous president who did so, and the murder and the mayhem that we're seeing happening right now in Los Angeles is a direct result of that. I yield back.
Gentleman yields back. Who seeks recognition? Not seeing anyone else seeking recognition on the Sherman Amendment, I recognize myself for 5 minutes. In my view, this amendment is a red herring. Let's be clear. There's no provision in this bill that authorizes or contemplates a taxpayer-funded bailout of a digital asset company. The underlying legislation is about providing regulatory framework to protect consumers and promote responsible innovation. This isn't about bailouts. It's about consistency. During times of market stress, whether it was in March 2020 at the onset of COVID-19 or in March of 2023 when regional banks faced acute liquidity stress, regulators took coordinated steps to stabilize the financial system. In those cases, many of the same voices pushing this amendment before the committee today supported actions that protected depositors, ensured market functioning, and prevented contagion. We should apply the same level-headed approach to digital assets. We should be focused on consumer protection, not political messaging. The digital asset space has suffered from a lack of clear rules, not a lack of consequences. Retail investors have lost money, not because the government did or didn't bail someone out, but because of fraud that could have been prevented with a real regulatory framework. And that, my friends on both sides of the aisle, is precisely what the Clarity Act does. There are already safeguards in place. Any extraordinary action by regulators is subject to legal constraints, congressional oversight, and often repayment requirements. So let's not pretend that passing this amendment is the only way to prevent a bailout. This amendment is unnecessary and misdirected, and I yield back the balance of my time. Seeks recognition. Excuse me. Is there further debate on this amendment? If there's no further debate, the question now occurs on the Sherman Amendment. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment
Recorded
is not
vote.
adopted. The gentleman from California seeks a recorded vote. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on this amendment are postponed. We'll now move to the next amendment.
I have an amendment at the desk. I'll bring up.
The gentleman from California has an amendment at the desk. If we could have it pause while it's distributed. And the gentleman from Florida, may I call on you?
Mr. Chairman, I'd like to reserve a point of order.
The gentleman from Florida reserves a point of order.
I know you have a lot of papers. Here's a nice statement that just came in that I thought might be helpful.
Yep. A point of order, as I say, has been reserved. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Sherman of California, designated as Sherma 050.
Without objection, the amendment is considered read, and the gentleman from California is recognized on his amendment.
Mr. Chairman, I'll use some of my time for a preliminary comment or two. After this amendment is considered, I will need to leave the room. People will look here for a bald head. They won't see one. But rest assured, my ghost will continue to inhabit this place until I return.
With the gentleman yield?
Yes.
I'm just sad that we don't have the ability today of a hologram that you could be seated there and continue. But maybe in the future with AI. Yield back.
Second, in looking at the no bailout amendment, you said the bill is for protecting consumers. Well, the number one consumer risk if you invest in hamster coin is that it'll tank and be worth less than mongoose coin. Trump coin could be worth less than skibbity coin. How do you protect consumers? You bail them out with taxpayer money. So you've got to go back to your constituents and say, I left the door open. There's a giant highway to bailouts of those who choose to invest in Trump coin, skibbity coin, Bitcoin, whatever coin, and your tax dollars could be used, but we didn't want to put it in this bill. Further, the chairman says, well, we could deal with that some other day. I've had a bill to prevent bailouts. There's no way you're going to bring it up, and there's certainly no way that the Republican Congress is, maybe you'd bring it up, but it would certainly not pass the Congress. The only chance to prohibit bailouts is to put this amendment, or that amendment, on this bill. Now let's look at this bill. The president has already established by executive order a strategic Bitcoin reserve. He has already said that that we should buy Bitcoin. And furthermore, the the crypto bros say they're creating a currency. Currency literally means hidden money. It's supposed to be a currency. People abbreviate it crypto. The full word is cryptocurrency. So the federal government and the Fed often buy foreign currencies. And in fact, the U.S. Treasury's Exchange Stabilization Fund purchased gold and foreign currencies and other instruments as they consider appropriate. So, what's going to happen when Trump wants more money put into Trump coin? We just asked the Secretary of Treasury, buy $100 billion worth of Trump coin, buy $100 billion worth of Skibbity coin, buy $100 billion worth of Mongoose coin, prevent and who is to say that this is a bad investment? There are people today buying Bitcoin. They think it's going to go up. There are people today buying Trump coin. They think it's going to go up. So all the president has to do is say he agrees with the people that think that this or that coin is going to go up in value. So if you want a giant highway to allow the president to take billions, even trillions of your tax dollars and put it into the coin or coins of his choice, then vote against this amendment. And do not say that we've got to solve that problem some other day. You're building the superhighway with this bill, and there's no way this amendment would pass the Congress controlled by the crypto bros as an independent bill. If they want these clear rules of the road, say, okay, but at least you're not going to get our tax dollars. Not as a bailout, not as a, quote, purchase. I don't think people are willing to stand up to the crypto bros and tell them that. So further, I would say, why do the crypto folks want U.S. U.S. government purchase? Because they want to claim to be the reserve currency for the world's reserve currency. Our reserves include the gold and forward exchange held by the Fed. And if they can say that this coin or that coin is what stands behind the dollar along with our Fort Knox gold, then they can claim to be as good as gold. They can claim that the U.S. government has slit its own throat, a throat absolutely dependent upon the U.S. dollar being the reserve currency, and has declared that their coin is the reserve currency for the reserve currency, and therefore that's what other countries should have and their reserves. So if you want to destroy the value of the dollar worldwide, and if you want to make it easy for the president to use your tax dollars for Bitcoin or Trump coin or Skibbity toilet coin, then I can see why you wouldn't like my amendment. I yield back.
Gentleman yields back. Who seeks recognition? Gentleman from Florida.
I'd like to withdraw my point of order.
Gentleman withdraws his point of order. Who seeks recognition? The ranking member of the full committee, Ms. Waters, is recognized.
Thank you very much. I move to strike the last word.
The gentlewoman's recognized for 5 minutes.
I want to again thank Mr. Sherman for offering this amendment prohibiting Trump from setting up a crypto strategic reserve. Trump has made it abundantly clear when he sold his meme coin that he views crypto as a profit arm for himself and his family. His plans to establish a crypto strategic reserve would be to use taxpayer dollars to boost his and his family's holdings of crypto. Such a reserve serves absolutely no purpose other than to enrich Trump and artificially inflate the value of crypto. We shouldn't be surprised by Trump's goal, since his big, beautiful bill would similarly cut Medicare, Medicaid, and food stamps by hundreds of billions of dollars to pay for a $5 trillion tax cut for billionaires. And so there's so much to be learned about what is going on and what not only is Trump doing, but what the members of this committee are doing. I have, discovered that there was a huge letter sent by Emmer of this committee, along with several other committees, a couple of them from this side of the aisle, to the SEC. It is obvious that in this letter, what they were trying to do was intimidate Gensler and the SEC and discourage them from being able to do the investigations that they were involved with. As a matter of fact, I guess since the SEC Chair Gensler was sworn in as chair on April 17, 2021, the SEC has filed more than 100 crypto-related enforcement actions, more than a third of which were fully settled at the time of filing. Through these enforcement actions, the SEC has obtained orders for more than $5.5 billion in monetary relief, including more than $800 million in civil penalties and more than $4.8 billion in disgorgement. The Terraform case alone involved $4.5 billion in penalties and disgorgement. So the efforts that I heard here today, trying to blame the SEC under Gensler, who allowed things to happen that was opposed to what maybe Mr. Emmer and others are going to claim or claiming in this letter, that they were doing in order to make sure that the SEC was doing its job, et cetera, et cetera. It's very clear that the SEC was doing its job in the way that I have alluded to. It's very clear that Mr. Emmer and others had put in a lot of time and effort with a whole range of questions, questioning everything about the investigation. And you know, we learned a long time ago when the opposite side of the aisle started to use cost-benefit analysis to stop some of the work that we were doing years ago. When we see it pop up again, as in the Emmer letter, we know what that's all about. Here he asks of the many of questions, has the SEC conducted a cost-benefit analysis to determine the fairness and efficacy of its request? Here you have again from Mr. Emmer and others, on average, year by year for the last 5 years, what are the expected compliance costs imposed on relevant entities to respond to your commission's voluntary document request, implying that what they're doing is they're creating extraordinary costs that should not be created by those who are raising serious questions. Oh, I have a lot more of this that I will be sharing with you throughout the night as we look at the Emmer letter and what they were trying to do. I have every question that was asked in this document. It is extensive in the way that they was trying to intimidate the SEC. And so perhaps this should give us an idea about what they are doing now in order to protect Trump and his family from the corruption that is so obvious. With that, I yield back the balance of my time. I got plenty more time tonight to keep on what I'm learning about this letter that was sent. I yield back the balance of my time.
Gentleman yields back. Who seeks recognition? Seeing no one seek recognition, I'll claim 5 minutes. Let's start with the letter that the ranking member is so enthusiastic about. I've read this letter dated March 16, 2022, entered into the record by Mr. Sherman. And she is right. It seems to be initiated by Tom Emmer, but it's signed by Darren Soto, Democrat member of Congress, Jake Auchincloss, Democrat member of Congress, Josh Gottheimer, Democrat member of Congress, Richie Torres, Democratic member of Congress, along with now Senator Ted Budd, Byron Donalds, Warren Davidson, and Tom Emmer. The purpose of the letter is quite simple. Dated March 16, 2022, Dear Gary Gensler, you are asking for information from unregulated entities that you don't have jurisdiction over. We'd like to ask you, why are you asking that, on what basis, and tell us about it. It's a very straightforward letter. I see nothing mischievous about it. So it's in the record. I thank Mr. Sherman for placing it in the record and for the ranking member for calling attention. But I too would like to enter a letter into the record dated February 10th, 2023 to Mr. Gensler regarding and then a letter that he never answered, signed by Chairman Patrick McHenry and Bill Heisinger, Chairman of our Oversight Committee, asking for all the records related to the charges brought to Sam Bankman-Fried by the Department of Enforcement and the U.S. Attorney's Office. I'd like that entered into the record, February 10th, 2023. Without objection, it will be. Let me now turn to the subject of Mr. Sherman's amendment. This amendment, in my view, would unwisely tie the hands of the federal government without any particular policy justification. We're in the early innings of a new generation of financial instruments and private payment rails. To blanket ban the federal government from purchasing a digital asset would prevent the federal government from using tools at its disposal to address an unforeseen need to engage in the future of finance. In addition, it would prohibit the federal government from using digital assets for a variety of lawful purposes, like sending aid seamlessly to Americans suffering from a natural disaster or securing data. For that, I do not support the Sherman Amendment and urge a no vote.
Mr. Chair.
Is there, I yield back. I won't. I want to keep moving because of your opportunity to spend time together all night. Is there further debate on the Sherman Amendment? If there's no further debate, the question now occurs
There's a
on
lot
the
of
amendment.
debate, I just can't get to it.
I know,
Give
we'll
us
be
some
back.
time.
We'll be back live here in a minute. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. And the chair, the nays have it. The nays have it.
Recorded
The motion is
vote.
not adopted.
Mr. Chair, I request a recorded
The
vote.
gentleman from California requests a recorded vote. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. We'll now move to the next amendment. The gentlewoman from California.
I have an amendment at the desk.
She has an amendment at the desk. We'll pause for it to be distributed.
You want me to give it to him? Right now? Mr. Chairman,
Gentleman from Florida.
Mr. Chair, I'd like to reserve my right to call for a point of order.
Point of order has been reserved by the gentleman from Florida.
One key issue here, Wisconsin, Style is from Wisconsin. Style is from Wisconsin, and he's the chair of the Digital Assets Committee, Subcommittee. His own securities regulator wrote to you yesterday saying, don't do this, this is a bad bill. And you quote him at the very beginning.
Yeah, it quoted something. Excuse me. Because Trump opposed the state regulatory regime.
Yeah, they preempt state law in many respects throughout the bill. So the state regulators are asking to at least hold on to anti-fraud authority, and which is what your amendment does.
So let me just ask, if the state maintains its authority in the way that it wishes to do, does this somehow blunt Trump in any way from all of the power that he has over the independent agencies?
Yes, because his edicts wouldn't apply to California. He couldn't control what New York AG does. That is one of the reasons why they want to preempt states.
Okay, it interferes with his power to control the SEC and the CFTC.
So under his executive order, both CFTC and SEC would have to submit their rules to the White House for review, whereas states regulators are not beholden to
Under
that.
the executive order.
Yep. He's got an executive order that requires independent regulators to submit their rule proposals before they are final for a review by the White House.
To submit, what?
Their rule
A point of order has been reserved by the gentleman from Florida, and the clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Ms. Waters of California, designated as H.R. 3633 T27.
Without objection, the amendment will be considered as read, and the gentlewoman from California is recognized to discuss her amendment.
Thank you, Mr. Chairman. Of course, I have an amendment at the desk. As you know, North American Securities Administrators Association opposes this bill. Yesterday, I received the following note from Wisconsin's securities regulator, and I quote, "I urge Congress to amend the Clarity Act to ensure that my agency can continue to fight fraud in Wisconsin's. We need this authority to prevent and mitigate fraud and support innovation. My staff frequently receives complaints from victims of fraud involving crypto assets, and they have successfully obtained a total of 169 fraudulent website disruptions or takedowns since March 2025, quote unquote." This was from Leslie Van Buskirk, administrator of the Division of Securities at the Wisconsin's Department of Financial Institutions. I also received a statement from Ms. Letitia James, the Attorney General of the state of New York, who, as you know, regulates both commodities and securities in the state. Without missing words, she wrote that, and I quote, "The Clarity Act does not do enough to protect America's interests, investors, and national security," quote unquote. She continued to warn us that, quote, "Clarity does not contain the regulatory guardrails necessary to protect America's investors from bad actors seeking to exploit and defraud them. That Clarity allows bad actors to hide behind the facade of decentralization, that Congress must ensure that this legislation does not reduce the number of cops on the beat. State anti-fraud and registration laws are intended to prevent and remedy fraud and must be preserved," quote unquote. I respect our state securities regulators and appreciate their role, particularly when the federal regulators are getting defunded, defanged, and defamed by this administration and Republicans in Congress. As a result of these strong concerns with your bill, Mr. Chairman, I'm offering an amendment to ensure our frontline regulators can continue to do their job. My amendment would expressly preserve the basic, essential tools that state securities regulators use to foster innovation and fight fraud. First, we must make clear that the states retain the authority to regulate the brokerage and investment advisory industries in this new crypto market structure. I'm proud of the work that the California Department of Financial Protection and Innovation provides to industry members throughout my state. We also heard in March from the director of the Alabama Securities Commission about the work she does to support industry in her state. We should be empowering state regulators to help innovators, not complicating their jobs. Second, we must make evident in this bill that state securities regulators retain their authority to bring investigations and enforcement actions against fraudsters. Presently, the federal government almost never take cases when harmed investors' losses are small. State securities regulators regularly take on cases under $1 million to help victims recover an amount that may be their entire life savings. Meanwhile, the states are also fighting back against schemes like so-called pig butchering and other investment scams. We should be empowering the states to fight fraud, not preempting them. So, Mr. Chairman and members, I know why Trump does not want the states to have this authority. Now I understand that if states have this authority, that he won't be able to control the independent agencies and prevent the states from doing the kind of protection that they're alluding to. And so what we have learned about the President of the United States, you know what he's done? He told all the independent agencies, including SEC, you cannot do anything. Under his executive order, he would require independent regulators to submit any rules for approval to him for review before they do anything. He's taken over the independent agency. He owns SEC. He don't give a darn about the states and what they're trying to do. So that's why you're protecting the president and his authority that he would like to have. I yield back.
Gentleman yields back. Who seeks, well, first, the gentleman from Florida.
Mr. Chairman, I withdraw my point of order.
Gentleman withdraws his point of order. Who seeks recognition? I'll recognize myself on this amendment, the Waters Amendment. The core objective of the Clarity Act is to establish a consistent and level playing field across the digital asset ecosystem. And by treating digital commodities as covered securities for purposes of preemption, the Clarity Act is simply following the existing practice for financial instruments with a national market under federal regulation. While state regimes can serve as a valuable incubator for innovation, it's clear that targeted preemption is necessary to ensure regulatory clarity. With that said, I understand the ranking member's key points, and I would urge that my friend Mr. Stile and I can work with the ranking member to look through the text to see if it needs any additional clarity, no pun intended, on this topic. And I thank her for raising it. I yield to my friend from Wisconsin if he has any comments he wants to make on this, or the gentleman from Montana, who is a distinguished former securities commissioner.
Right there, and then come back up.
Gentleman from Montana, I'm yielding time to you, sir.
Thank you, Mr. Chair. Just wanted to point something out. The ranking member mentioned a letter from the North American Securities Administrator Association. I'm a former member of that organization. And just so you know, it's the 51 states, it's the territories, it's Canada, all of the provinces in Canada, it's also Mexico. And my experience with them is when their letters came out, it was not usually a consensus opinion. And in my personal experience, when NASA was submitting a letter to the SEC in response to Gary Gensler's rule promulgation on climate disclosures, NASA was writing a letter, and me, as one of the state security commissioners, asked for the content of that letter, in which case they said I could see the content after they sent it, to which I raised, some red flags, and they got their chief legal counsel involved, who said that I couldn't see it, but he was checking with the board on whether I could until they rescinded and never actually showed me the letter that they were going to send on behalf of every one of the members of NASA. So my point being is NASA, in my opinion, is not sending consensus letters that represents the opinions of the state regulators, and is also not just an American institution, it's also Mexico, Canada, and the territories. And I yield back.
I thank my friend from Montana, and as I say, Chairman Stile and I'll certainly work to review this language carefully if it needs any additional clarity to it. While I still have time, I'd like to read a letter from the Institute of Internal Auditors and insert it in the record. Without objection, this letter will be included in the record. The Institute of Internal Auditors, it comes out firmly today in favor of the committee voting the Clarity Act. It says, as professional association representing internal auditors, we support the legislation's emphasis on establishing sound governance and risk management practices at digital commodity exchanges. In particular, sections 404 and 406 of the Clarity Act contain essential investor protections that will strengthen American confidence in the emerging digital asset marketplace. With that, I yield back the balance of my time. Who seeks recognition? The gentlewoman from Texas.
Mr. Chairman, I would like to strike the last word.
The gentlewoman is recognized for 5 minutes.
Mr. Chairman, I wanted to just rise in support of this amendment. It's just interesting to me that probably 2 hours ago on a separate bill, HR 3633, my colleagues across the aisle were talking about transparency, the need to eliminate fraud, waste, and abuse, and the need for an OIG. And now here we have an amendment that deals directly with fraud and assists the states and others to be able to help us in this arena. So I just want to say that I totally support this bill, and with that, I give the rest of my time to our ranking member.
The lady from Texas, the gentlewoman from Texas yields to the ranking member.
Oh, thank you very much. On this issue and this amendment that I am trying to tell you about the North American Securities Administration Association and why they oppose this bill. Now, I mentioned to you Wisconsin, New York, and certainly California, where I'm from, are supporting what is being asked of you by the North American Securities Administrators Association that opposes this bill. Now, we can't just ignore these states. We can't just say that you will get with me in private, Mr. Stiles, we will talk about this later. No, I want to talk about it now. We have an amendment before us that you can support if you care about the complaints that are coming from your states. But I get it. The states don't have to go to the President of the United States and Trump the way that the independent, so-called independent agencies have to do, because by executive order, he is requiring all of these independent agencies to submit any rules that they're proposing for review. Oh, the states don't have to do that. So that's why you cut out the states. That's why you don't allow them to use their authority. But I think those of you who really care about your states, and I think most of us do, most of you care about what goes on in the states, you will pay attention. You will not ignore them. I want you to know that there's a big case that's pending right now from Oregon against Coinbase from the states. The states are serious about this. They don't have to go to President Trump on hands and knees and say, please, can we excuse your executive order? Do we have to have you review whatever we do before it can be done? No. What the states are doing is saying, respect us. Give us the opportunity to let you know what is happening in our states and how we're getting complaints and what we want to do about them, not just for the biggest and the richest guys, but for those little people for $1 million and less who are getting ripped off. And so I am continuing in every way that I can, not only to point out the ownership of Trump and his family and how they're enriching themselves. You should be worried that the independent agencies are no more independent, that they have to, in an executive order, he's very blatant in all of this, and the public knows, and he has stated for everybody to know that he said to the independent agencies, they must submit any rules that they're proposing for review. Now, the states are saying that they need the authority not eliminated by what we do, but supported by what we do, so that they can control the fraud in their states. Are we going to ignore them? Are we going to go? I'm not going back to California and tell California, well, I'm sorry, we just don't think that we should be protecting the states in dealing with fraud and abuse. I'm not going to do that. For those of you who are willing to go back to your states and tell them, I don't know what you're going to tell them. I don't know how you're going to say that you don't approve of them having the authority in their states to protect their citizens from fraud and abuse. This is an opportunity. Thank you, Mr. Chairman, for offering to have a talk with me. And Mr. Stile, perhaps later on. I'm sorry, I can't wait for that. I can't wait for the talk. I want it done today. We have the power, we have it before us to make sure that we allow the states to do what they must do to protect their citizens, to protect those from fraud and abuse. We can do it now. I'm willing to do whatever it takes to keep you focused on this, and I'm willing to have you change your minds so you can go home and face your states and let them know that you stood up for them and they don't have to go hand in knees to Trump to ask, can they have a rule before they can move on? Thank you, and I yield back the balance of my time.
Gentlewoman yields back, who seeks recognition. There's no further debate. I'm sorry, the gentleman from Wisconsin.
Thank you, Mr. Chairman. A little rich for someone from California to talk about protecting citizens of their states at this moment where there could be a lot of work to protect the citizens of the states of maybe that state. But let's dive in particular as it relates to the letter. It was nice of the ranking member to read the letter written by the Democratic appointee of the state of Wisconsin for the North American Securities Administrators Association. They often work with Mexico, Canada, states around the country. As noted by Mr. Downing, they're often not consensus opinions. I don't know if this was or was not a consensus opinion, but I don't think it would be, because I think if people look at the substance and text of the bill that we're working on, the bill that we have only preempts up to the amount or to the extent that existing securities laws or commodity laws preempt state laws. So if you look, the Oregon Attorney General lawsuit under Oregon state securities law is a copy and paste of a fundamentally flawed Gensler lawsuit that the SEC has since dropped. So what would occur is this amendment would really reinforce a patchwork of state-by-state regulation that's not worked well for American consumers. So as we know, digital commodities are sold through securities transactions and they're treated the same as securities under state securities laws. So this is where the conflict arises. The states retain their authority, of course, under the Commodities Exchange Act, which allows them to enforce the Commodities Exchange Act to the extent activity isn't happening on CFTC-registered entities. It's not really actually a novel approach, Mr. Chairman. It's rather just consistent with current laws. So the Clarity Act, we have not one but really two federal regulators on the beat policing fraud and misconduct. I know Chairman Hill and I are happy to review the language and see if there's ways we can improve or look at the preemption provisions, but the amendment that you brought forward doesn't strike the right balance. And so I would encourage my colleagues to vote no on the amendment, and Mr. Chairman, happy to yield back.
Gentleman yields back. Who seeks recognition? If there's no other,
Mr. Chairman?
Gentleman from Texas?
Mr. Chairman, I have an amendment at the desk.
Oh, we're not dispensed with this amendment yet, I'm sorry. Is there, anyone else seeks comment here?
Well, yes, yield me the time.
Caston, are you yielding to the ranking member?
Yes, just yielding time.
The gentleman from Illinois is recognized to strike the last word.
Recognized, strike the last word. Thank you, and I yield my time to the ranking member.
Gentlewoman, you're right.
Thank you very much. I think what the gentleman from Wisconsin have implied is that in no way in this bill are we preempting the states. Because if that's what he's implying, I think he'd better take another look at what we're doing. This is preemption of SEC. Don't tell me about what is happening with commodities. Tell me about what's happening with SEC, because this is pure preemption. And I want to reiterate that Wisconsin's leading the pack with the association, with the other states that are also agreeing with him. My state of California has made it clear that we don't want to be preempted, that California wants to have the ability to deal with the complaints that we are getting. We also know that the states need the authority. They don't need to have to answer to the President of the United States, who will tell them they must bring to him for review any rules that they would be proposing. This is very, very clear. And I know that it makes us uncomfortable when we talk about preemption, but this is what it is. This is preemption. And so,
Would you yield for a question?
yes, I'll be happy to yield for a question.
I understand your point, and that's why I'm willing to work with you on the clarity. But yes, we, like securities, under the SEC, we have state blue sky laws where this exemption is covered by the blue sky laws. So yes, the SEC is preempting the states for that purpose. But fraud, anti-manipulation, those consumer complaints, we're not preempting that part. And that's why I say if there's some language that we need to work on, I'm happy to work with Chairman Stahl and your team. Yield back to you.
Fraud, this is the biggest issue that NASA
They're
wants.
not?
They are.
Yeah. All right. As we look at it, it looks as if you are absolutely preempting on fraud. And that's serious. And that is what must be corrected. We can do it right here. We can correct that. If that's not what's intended, let's do it right now. Let's make sure the preemption doesn't take place. And thank you. And if you yield back the time, I take the time back. And so would you like, Mr. Chairman, to correct that right now? Because I don't think that our members, maybe even on your side of the aisle, intended to preempt fraud. And if we can amend that right now, let's do it.
With the gentlewoman yield?
Yes, I yield.
I'd like to be more reflective than that and look at the letter and actually study it and consult with you on what needs to be changed, if anything, in the bill, and work with Chairman Stahl too. So I'm just not going to deal with it today, and I'm going to urge a no vote on the amendment. But
Reclaiming my time,
Yield back to you.
reclaiming my time, are you saying that you want to continue with this legislation, you want to pass this legislation with the preemption in it, if that's what's in it, rather than fix it now? Is that what you're saying?
I'm saying I'd like to reflect on this letter, which I've never seen until it was mentioned to me with your discussion, and see if there's some change in the legislative text I think is appropriate, and work with the committee to do that. And I don't think it's appropriate to do it now. I yield back to the gentlewoman.
I would propose that we have a recess so that you could read it and that you could take a look so that we can fix it if it needs fixing. If you understand what we're saying, that we must cover fraud, let the states do that. If we want to take a recess, you want to read it, you want to get with Mr. Stiles so that he can, tell you what he thinks about the reading of it, then I would propose that we do that. Let's not put it off. This is a big bill. We're going to go on for a long period of time. Once it gets passed, nothing is going to get changed. I respect your offer, but I know that it's going to be difficult to do. And so understanding the difficulty of getting it done once the bill is passed out of here. You got the votes. You got the votes to pass the bill. And so, no, I don't want to wait past the passing of the bill. So I would propose that we recess and allow you to read it, to understand it, and hopefully come back with a fix. I yield the balance of my time.
Mr. Caston's time.
I yield back.
Gentleman yields back. Is there any further debate on the amendment? Question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye. Aye. All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted.
Recorded vote is requested.
The gentlewoman from California requests a recorded vote. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. We'll now move to the next amendment.
I have an amendment at the desk.
The ranking member has an amendment of debts. We'll pause for it to be distributed. The gentleman from Wisconsin reserves a point of order. Clerk will report. I'm sorry, there's a point of order that's been reserved, and the clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 3633 offered by Ms. Waters of California, designated as H.R. 3633 T25.
Without objection, the amendment is considered read. The gentlewoman from California is recognized to discuss her amendment. Gentlewoman's recognized.
Thank you very much. So I have this amendment at the desk. Mr. Chairman and members, I have long said that crypto is here to stay and have worked in prior Congresses to pass legislation to create a federal framework for crypto in order to ensure that crypto investors receive the same protections that investors in securities would receive. I'm offering an amendment that adds a new title that is called Crypto Investors Bill of Rights. Very simple. Crypto Investors Bill of Rights. My amendment would require the SEC and CFTC to jointly issue rules that would protect crypto investors and restore their confidence in crypto from the scams, whether they are perpetrated by the president or by offshore fraudsters. The Crypto Investor Bill of Rights requires every exchange, broker, or wallet provider to show a one-page plain English fee sheet before anyone hits buy, ending the surprise charges related to paying gas withdrawal or exit fees. Platforms would owe users a fiduciary duty whenever recommending a crypto product, and they will owe crypto investors a duty of loyalty by fully disclosing any markups, their conflicts, and revenue streams. Whenever hackers strike, payment stablecoin issuers or crypto service providers would, under my amendment, be required to freeze the account within an hour and alert customers exactly the quick response your bank gives when a debit card is skimmed, so a bad situation doesn't become worse. Platforms would also be barred from cutting in line or trading against their own customers or giving preferential access to their VIP customers. Like their traditional securities counterparts, crypto platforms would also have to prove they got you the best price available. No more secret house advantage, just the same fair dealing rule stockbrokers follow. Once a month, exchanges must post a live, independently attested dashboard that shows exactly how many coins they hold, so anyone can check their solvency in 2 clicks instead of waiting for a crisis to reveal a hole in the balance sheet. Platforms would have to be insured by the Securities Investor Protection Corporation. So if a trading firm or brokerage fails, crypto investors would receive the value of their tokens. The Crypto Investor Bill of Rights would also demand any platform that offers 24/7 trading to also offer 24/7 human customer support line, so an investor would not have to wait when some glitches at midnight or their account be hacked. The crypto industry says their technology is the way of the future. If that is true, then there's no reason why they can't comply with existing investor protections. And so, the Bill of Rights. And, you know, since I've been in Congress, people have created a Bill of Rights on everything that you can imagine. I mean, that's a favorite, a Bill of Rights for something or somebody. And we usually conform because it kind of works, you know, to do a Bill of Rights so that people will understand. Now, this is very important. We're talking about crypto. We're talking about changing the cash and money systems in this country, the payment system, the investment, everything. Now, I know that we will support a crypto investor bill of rights. And so that's what this bill does. It's very simple, and it's good for our young people. Our young people are interested in crypto, but I want you to know they don't know all of the tricks to the game. They don't know all of what's not in the bill to protect them from being just ripped off. And so, come on, give me a vote on the Bill of Rights, Crypto Investor Bill of Rights. That's not too much to ask. And I know that most of you have voted 100 times for the Bill of Rights for something, for somebody, some city, some state, for firemen, for police officers, you name it. Bill of Rights is very familiar to us. So having the familiarity of Bill of Rights and what it is meant to do, come on, let's give it to young people. Let's give it to first-time investors. Let's give it to those who are using some of the money that could maybe end up going for their savings because they have learned what to do and what not to do and what to look for. I yield back the balance of my time.
Gentlewoman yields back, who seeks recognition.
Mr. Chairman,
Does the chairman insist on his point of order? Gentleman from Wisconsin withdraws his point of order. The gentlewoman from Texas.
Mr. Chairman, I did not see a quorum. I asked for a quorum and a roll call vote on the quorum.
The gentlewoman requests a quorum not being present. We will suspend.
Will the gentleman yield?
Committee is suspended while we're going to call for a quorum.
I'd just like to ask to use this time for you to consider what you want to consider about the states and whether or not we can talk about how to protect the states and not put them in a position.
The gentlewoman's not recognized, but we can have an off-the-record conversation.
Mr. Chairman, I call the question for a roll call, please.
Ranking Member.
A quorum being present, we will reconvene. Is there any further debate on the Waters Amendment? If there's no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye. All those opposed shall signify by saying nay. Opinion of the chair, the nays have it. Nays have it. The amendment is not adopted. The gentlewoman from California requests a recorded vote. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. We'll now move to our next amendment. Gentleman from Texas.
Mr. Chairman, I have an amendment at the desk.
The gentleman from Texas has an amendment at the desk. We'll pause while it's distributed. Mr. Stile. The gentleman from Wisconsin reserves a point of order.
Thank you. Did it get distributed? Oh, okay.
Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Gonzalez of Texas, designated as GONS TX 005.
Without objection, the amendment is considered read, and the gentleman from Texas is recognized on his amendment.
Mr. Chairman, I'm offering a common sense amendment today which would bolster our nation's security and combat the actions of illicit actors such as drug cartels and terrorist organizations. This amendment would in fact direct the Treasury Secretary in conjunction with the Securities and Exchange Commission and Commodities Futures Trading Commission to examine and report to Congress how foreign terrorist organizations and transnational criminal syndicates like drug cartels, Hezbollah, Hamas, the Houthis use digital assets to circumvent current regulations and finance their operations. Following this review, Treasury must issue updated guidance to ensure the Securities Exchange Commission and Commodities Futures Trading Commission have the tools they need to detect, disrupt, and deter illicit financing through digital assets. As you know, the Treasury Department has reported that Mexican drug cartels have increased their use of cryptocurrency, especially Bitcoin, to launder illicit drug proceeds. A 2023 DEA report noted that cartels are leveraging digital wallets to move millions of dollars across the border with speed and anonymity. Hamas received over $40 million in crypto between 2021 and 2023. According to Reuters, the over $20 billion in crypto transactions in 2022 were linked to illicit activity, including sanctions, evasive darknet markets, and terrorist financing. These aren't theoretical threats. They're happening right now, and our regulators need the proper tools to respond. This isn't about stifling innovation. It's about ensuring our regulators can keep up with bad actors exploiting the digital space. I'm also happy to be joined by my friend, Congressman Jim Costa, who introduced a similar amendment before the House Agriculture Committee for H.R. 3633, Digital Assets Market Clarity Act of 2025, which passed out of the House Agriculture Committee this afternoon, and I'm hoping my colleagues on this committee will do the same. So, Mr. Chairman, I urge your support for this amendment, and I appreciate your time. Thank you.
Would the gentleman yield?
Yes, I yield.
I thank my friend from Texas for this amendment, and he's put his finger on an important topic. Foreign adversaries are addressed in the bill, but this issue around foreign terrorist organizations was not until this morning, when this amendment was adopted in full by the House Ag Committee in Title V. So your text is now included in the bill that will be reported to the House as it was amended in the House Agriculture Committee, which is a joint title. We both committees can make an amendment to Title V in the bill. So with your success, I'd like to invite you to consider withdrawing it because your amendment has already been admitted to the bill.
Okay, good. I withdraw.
I thank the gentleman. I thank him for his idea, and I'm glad that it received favorable consideration in House Ag. I thank him for working on it because I do think it's an important area, and I'm glad it's now included in the text of Title V. The gentleman from Texas withdraws his amendment. Are there any other further amendments on the bill? The gentleman from Illinois.
I have an amendment at the desk.
Mr. Caston has an amendment at the desk. We'll wait for it to be distributed. Mr. Stile? The gentleman from Wisconsin does reserve a point of order on the Caston amendment.
I know, we both looked at it. So this says no, joint rules.
Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Caston of Illinois, designated as Caston 050.
Without objection, the amendment is considered read, and the gentleman from Illinois is recognized for 5 minutes to describe his amendment.
Thank you, Mr. Chair. So my amendment would simply ensure that the SEC and CFTC are adequately staffed and have representation from both political parties before initiating the various rulemakings required under this bill. This bill defines a lot of terms which are not widely understood. What is a mature blockchain system? What is a decentralized governance system? How do we address mixed digital asset transactions that are subject to the jurisdiction of CFTC and SEC and others, perhaps? What are the processes for delisting digital assets from trading? All of those are going to require administrative rulemakings by the committee. And right now, we do have some real structural concerns that all of us ought to be concerned about. At the SEC right now, there are 3 Republican commissioners, 1 Democratic commissioner, but that Democratic commissioner, Carolyn Crenshaw's term expires at the end of the year, which could result in a 3-0 commission. Now, in the normal course, Donald Trump, per protocol, would nominate a Democrat, although as Elon Musk, Rudy Giuliani, Anthony Scaramucci will all tell you, you're a fool to trust Donald Trump to follow protocol. So there is a risk that there will be no Democratic voice on the SEC to issue those rules. We also know that Trump is actively firing people from commissions. The Supreme Court is pushing undoing the Humphreys executor rulemaking. And there's a real concern about making sure that those commissions represent the diversity of views in America. It's even worse at the CFTC. There we have Acting Chair Carolyn Pham, who will step down once her successor is confirmed. Democratic Commissioner Johnson plans to leave the agency later this year. And that potentially would leave only Brian Quintenz, who currently leads crypto policy at Anderson & Horowitz and is President Trump's pick to lead the CFTC. He's going to have his confirmation in the Senate later this week. Assuming that he is approved, there's a scenario where he could be the only commissioner at the CFTC. And at the CFTC, unlike the SEC, there is no regulatory minimum for a quorum. So we could end up with Mr. Quintenz being the only authority to make a decision and someone who is massively conflicted by his economic interests, given his connections to the crypto industry. There's been a lot of talk in this hearing about how bipartisan this bill is or could be. Let's hope it is. But that bipartisanship shouldn't stop the minute it has to actually be worked out within the committee of how these rules are going to go forward. And you know, I'd just point out that unless you are of the opinion that Donald Trump is going to be the last president ever in the history of our republic, it's in all of our interests for us to make sure that these committees are fully staffed, have quorums, and are diverse. Because, look, some rulemakings take time. And 4 years from now, when it's President Lena Khan or President Gary Gensler or whoever else you are afraid of, this would also protect in that scenario. So I think it's a simple rule, just says let's make sure that these commissions are staffed, that they have a quorum, and that there's a diversity of views as they go through to make these rules. So thank you. Encourage everybody to support and yield back.
Gentleman from Illinois yields back. Who seeks recognition? The ranking member. Full committee.
Thank you, Mr. Caston, for offering this necessary amendment. This amendment would ensure that basic democratic governance structures are in place prior to carrying out joint rulemaking at the Securities and Exchange Commission and the Commodity Futures Trading Commission. For starters, we're all seeing the headlines earlier this morning about the turmoil at the CFTC as commissioners plan to leave the agency, potentially leaving the incoming chair as the sole member of the 5-person commission. We know the kind of chaos that would ensue as a new regime is airdropped into an understaffed, underfunded agency. Additionally, it is critical that independent agencies remain independent rather than filled with party loyalties, or those looking to serve one individual. Of course, I urge members to support this amendment. Of course, I don't think that the opposite aisle is going to support this amendment. This is one of the simplest, plainest amendments to be offered yet. And yet, we cannot expect that there will be any real support for it. You know, if we have members here who are coming from states where the states are begging for the Congress of the United States not preempt their ability to deal with fraud, that we can't expect anything from the opposite side of the aisle. And so, yes, we're asking for support. We have a lot of other amendments that we're going to go through here. But I tell you, when some of us go back to our states, for example, Wisconsin's, where Mr. Stiles has a responsibility for relating to the needs of his states, or me, going back to California, where, of course, we don't want preemption, or what is going on in Oregon, where there's an attempt now to do something about fraud. We're just in a position here where we are literally doing this work almost for naught. We know that the opposite side of the aisle, well, they have the majority, they have the support. But this is a simple one. This is a very clear one. Let's see what you're going to do with this. Let's see if, in fact, you're going to support an amendment that would just ensure that basic democratic governance structures are in place prior to carrying out joint rulemaking at the Securities and Exchange Commission and the Commodity Futures Trading Commission. So with that, let's see if my prediction comes true. I yield back.
Gentlewoman yields back, seeks recognition. Does Mr. Stiles insist on his point of order? The gentleman withdraws his point of order, seeks recognition. Seeing none, I'll recognize myself for 5 minutes. Let me thank the gentleman from Illinois for his amendment. I certainly have urged the President to make appointments in both Democratic and Republican slots across all the financial services supervisors. I think that's important. I hope the Senate moves quickly to confirm his choices. I hope this is like newfound evidence that perhaps people are interested in a bipartisan commission to oversee the CFPB. I'll be checking back with members in case that's a future possibility here. But I don't believe this amendment is necessary, and I yield back the balance of my time. Who seeks recognition? Is there any further debate? If there's no further debate, the question now occurs on the Caston amendment. All those in favor of the amendment shall signify by saying aye. Aye. All those opposed shall signify by saying nay. Nay. Independent of the chair, the nays have it. Nays have it. The amendment is not adopted.
Mr. Chair, request a recorded vote.
The gentleman from Illinois requests a recorded vote. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. We'll now move to the next amendment. Mr. Caston?
I have an amendment at the desk.
Mr. Caston has an amendment at the desk. We'll pause for it to be distributed. Mr. Stiles reserves a point of order. Thank you. Mr. Caston, could you identify which amendment you're working on, which is a number up there in the top left corner.
Yeah, I was anticipating it was going to be a different one, but the one that's shown here is number 56, so we can.
That's the one we have.
56 is the one that's
Yeah.
distributed,
No,
that's what I'll do first.
Is that the clerk has number 56? Yes. All right, so let me ask the clerk to report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Caston of Illinois, designated as Caston 056.
Without objection, this amendment is considered read, and the gentleman from Illinois is recognized for 5 minutes on his amendment.
Thank you, Mr. Chair. This amendment is to address some concerns that were raised in the debate that led to this bill, specifically around the fact that the Clarity Act as currently drafted creates broad exemptions for decentralized DeFi services. And as long as that language remains without this patch, it creates some significant problems with addressing illicit activity, cybersecurity vulnerabilities in the DeFi space. We know that North Korean hackers have and will continue to target DeFi systems to steal cryptocurrency to fund their nuclear weapons program. We also know, as we heard in a Minority Day hearing, that the term decentralization is not well defined. I think in theory, it means no one person or group has outsized control or influence over the blockchain network or protocol. Business decisions are made collectively by the people who maintain the system. In practice, there is no exact, clearly defined definition. It gets used as an umbrella term to define a whole lot of protocols. We had our witness who testified as we were sitting here that her DeFi system actually has a governing board who was issuing tokens on that system without going through those processes and yet still qualified as DeFi. We also know that DeFi services contain features that may grant certain users, founders, or insiders some degree of influence or discretion. And it could just take the form of like the website that you access the system through could be hacked into, could be a vulnerability within the system. Now, I think there's a counter argument, which is worth hearing out, that I think the estimates I've seen is that maybe 5% of crypto trading right now happens on decentralized exchanges and 95% on more centralized exchanges. I think we ought to ask the question, though, about maybe that means this is too small to matter. On the other hand, maybe it means that until the Clarity Act is passed with these big holes, it's not going to be as attractive as a way to arbitrage risk. And I'd put a thought experiment in everybody's head. Suppose we all went home tonight and we're all super great coders, and we write a piece of computer code that is designed to break the law. I don't think anybody would question that if that code is then released, we would all be guilty of violating the law because we built the tool to do it. If, on the other hand, we said, I wrote a piece of computer code that I would like to be permanently indemnified against any criminal activity being committed with this, we might reasonably, as legislators, as our regulatory counterparts, we might say, well, you need to prove then that your code doesn't break the law. And we're not going to do that within legislative text, but what we've tried to do in this amendment is to strike a balance by saying, let's create a working group, let's get people who are involved, the coders, the investors, the regulators, get them together to say, what is the technological solution we're going to do that makes sure that if you are going to have a DeFi protocol that is indemnified from any investigation of illicit finance, et cetera, that has some tool that is set up to make sure that you can't hack into that system. We can discuss what it means. Maybe it's real-time transaction monitoring. Maybe it's screening for sanction lists. Maybe it's verifying customer identities and IP addresses. We don't need to get into all that right now, but this simply is a tool that says, let's put that committee together, let's make sure it's in place so that we shut down the huge barn door to potentially illegal action that exists in the Clarity Act as it sits right now because of the exemption for DeFi. So, the last thing I think any of us want to do is to pass a bill and then find out that we've triggered a massive financial scandal, a massive hack, massive amounts of illegal activity. The barn door's there, let's get it closed. Let's not kick the amendment, let's not kick this can down the road. And with that, I yield back and would ask my colleagues to support.
Thank you, Mr. Caston. Mr. yields back. Who seeks recognition? The gentleman from Wisconsin.
Mr. Chair, I remove my point of order.
Gentleman removes his point of order.
And I
you seek recognition?
Strike the last word.
Yeah, gentleman's recognized for 5 minutes.
Thank you, Mr. Chairman. Appreciate the intention of my colleague for offering this amendment. But I think it's important that we don't lose sight of a few key facts, which the amendment does not take sufficient stock of, it appears. Transactions, so let's frame this. Transactions conducted via the blockchain network are recorded on a public ledger. So in many respects, this provides greater transparency than what exists with traditional cash transactions. That should be out of the gates. 2, under the bill, intermediaries remain subject to SEC and CFTC regulations, as well as Bank Secrecy Act and anti-money laundering requirements. 3, if we start thinking down the road, if we create the conditions that will enable regulators to make it prohibitively difficult or impossible for consumers to transfer their own digital assets to self-hosted wallets and engage in DeFi activity without installing surveillance tools, we effectively force them into third-party custody arrangements, exposing them to additional risk without offering a choice. So this would undermine the fundamental promise of blockchain technology and would threaten Americans' property rights. So under the Clarity Act and existing law, it should be noted, money laundering is illegal. And the Clarity Act will introduce a more robust compliance with BSA requirements. And so while I respect the intention and the spirit in which this amendment was offered, I have concerns regarding the implications of the study and the insufficient emphasis placed on minimizing intrusions on the privacy of law-abiding citizens. And so I would encourage my colleagues to vote no, and I'll yield.
Would the gentleman yield?
I'd be happy to yield.
So I want to just, yes, it's true that if everything is on the blockchain, then you've got the record. But you can't simultaneously say that the blockchain provides a record of everything that happens and it provides anonymity. There's a reason why anonymous wallets exist. There's a reason why mixers exist. It's to get away from that anonymity. If we're going to have that anonymity and if we're going to have that running through these DeFi protocols, which, by the way, you've got this DeFi protocol, you've got a blockchain that's set up, but now the people who manage that blockchain can issue a token that all of a sudden lives there. That token can come into existence, go out of existence, it could be subject to the jurisdiction, and it's a way to launder money. So we have to accept the fact, and I wish that in all our hearings we could be honest about the fact that either the blockchain provides robust accounting that we know who everybody is, or we allow all the anonymity.
I'm going to reclaim my time. I hear what you're saying to my colleague from Illinois. I think a lot of this is what is the baseline with which we're analyzing money laundering, BSA, et cetera. I think all of us in this entire room would oppose money laundering for a whole host of different reasons, including illicit financing to terrorism, drug trades, et cetera. Then I think the question is, what is the baseline with which we're analyzing this? So we could think about cash transactions that already exist, right? That'd be outside this realm. That's a challenge. You could transfer gold bars. You could trade with illicit cigarettes. So it's, what is the baseline? Is it perfection, or is it a better system than what we have? And so if we go back, it should be noted, hopefully, that privacy in and of itself is not illegal. Right? Americans have a right to that in their financial transactions. And so there's totally legitimate uses of privacy-preserving technologies. And the courts have already vacated the president's authority under IEEPA in the Biden administration. So I think what we're looking at here is making sure that we maintain privacy for American citizens. We maintain the SEC and CFTC regulations, as well as Bank Secrecy Act and anti-money laundering requirements. And so I'd still view this amendment as adding complexity into the system and an insufficient emphasis placed on minimizing intrusions on the privacy of law.
I would just note that it's a lot harder to move gold bars.
I'm going to yield back. It was a crosstalk from my colleague. You said you wanted to offer that on gold bars.
I was just going to note that it's a lot harder to move gold bars or illicit cigarettes.
Yeah, no, I'll reclaim my time, but it would be happy to reclaim my time, but also noted that President Biden literally shipped pallets of cash to Iran, the leading state sponsor of terrorism. So we could get into illicit finance and how that all plays out. All I'm noting is that, yeah, it was difficult, but the government under Obama literally moved pallets of cash to Iran. And so the standard which we should be viewing this is how do we make improvements, making sure that we're protecting privacy and that we're putting things in place, not lost on the challenges of apparently moving metal objects. I'll yield back to the chairman.
The gentleman yields back. Who seeks recognition? Mr. Lynch, you're recognized to strike the last word.
Request to strike the last word. Thank you. I do want to point out that moving cash around. And I was on this committee when it was President George W. Bush that was moving pallets of cash and duffel bags full of cash across Iraq and Afghanistan. So, but there is a point that Mr. Caston is making, and that is that if you're moving $10,000 in cash, if you're making a cash transaction over $10,000, there are a whole lot of requirements that you need to comply with under the Bank Secrecy Act that you don't have to if you're doing this on the blockchain. There's that $10,000 limit that invites a lot more scrutiny, and I think the gentleman's amendment is properly stated, and he does adeptly recognize a gap in the legislation, and I think it would be entirely reasonable to adopt this amendment. I think it will protect everyone involved. With that, I could yield additional time to Mr. Caston, the gentleman from Illinois, if he desires it.
Thank you, Mr. Lynch. I'd just point out that it, much like the is it anonymous or is it fully traceable because of the blockchain, is it frictionless, or are we going to have the checks in place? If you're going to make it impossible to track where this money is, if you're going to give everybody anonymous wallets, if you're going to allow people to move not less than $10,000, not a pallet of gold bars, but millions of dollars at the click of a switch that immediately disappears into another network because it washes through a mixer and gets anonymized, which is exactly how these transactions have been done, then we've got to close that barn door. And I also just want to add, not the jurisdiction of this committee, but let's not accuse Joe Biden of being a money launderer. When Donald Trump tanked the JCPOA, all of a sudden there were sanctions against Iran that were lifted. It's going to be interesting to see what happens with the current debates with Iran and the Trump White House and whether those sanctions are lifted. But allowing a country to access money that was previously sanctioned because of a bill that was passed under Obama, that Donald Trump blew up, and now all of a sudden that deal is gone. Let's not equate that to North Korean nuclear funding. Let's not equate that to Islamic Jihad. Let's not equate that to some really bad actors. I think we're all better than that. I yield back to
Will the gentleman yield?
I'm going to use some of my time. If I have some left, I'll give it to you. But remember, Biden was giving Iran back their money. We had frozen their assets, right? Biden was giving them back their money that we had frozen in U.S. banks. George W. Bush was giving them our money, U.S. money, and I think there's a clear difference there. I would yield to the gentleman.
I won't further the foreign policy debate. I would note that I firmly disagree, but we'll leave that for now, debate that at another committee meeting.
Fair enough.
But I think it's worth noting on the merits of the substance here that all intermediaries under the bill will be filing CTRs and SARs, and they currently do under the money transmission regime. And so I'd much rather have you don't want anything playing out, but if a criminal were to use crypto, it's actually more traceable in many ways than cash. And so law enforcement has advanced tools to track down funds and analyze criminal networks all in the open. There's a reason why crypto is still by far the most, there's a reason why crypto is not a preferred method in that regard. I'll yield back to my colleague.
All right, I'm going to claim my last minute. Every single ransomware attack, every single one of these scams is using crypto on blockchain. Every single one, 100, according to FinCEN, 100% of the successful ransomware attacks against U.S. companies is using, the payout is from crypto on blockchain. So all this talk about the security and it's because it's anonymous. We can't catch them because there isn't sufficient regulations in place to get these folks. So this idea that this is entirely safe and accountable is a complete fantasy. Otherwise, this wouldn't be the favorite manner of transaction for these hackers, scammers, and international criminals. And I'll yield back.
Gentleman yields back. Who seeks recognition? Ranking member of the full committee, Mrs. Waters.
Thank you very much, Mr. Chairman. Thank you very much, Mr. Chairman. I'd like to create a colloquy with Mr. Caston about DeFi entities. What is it the DeFi entities are claiming that they're unable to collect the requirement information that would deal with the anti-money laundering and countering financing of terrorism, et cetera, et cetera? What's their argument?
So thank you, Ranking Member Waters. My understanding of the argument, as our colleagues across the aisle make it, and I'm sure they'll correct me if I've got this wrong, is that these decentralized protocols are essentially bits of computer code that they are stipulating how the system works. There is no individual who is responsible for executing that, and therefore there is no need for liability or investigation. The gap that happens is the exact definition of who created that code, what can they do, what is the board of directors, is pretty vague. And I think you recall our witness here who acknowledged that their board, which was this exemption, well, it's a separate entity, but it was people under the same collective control, were actually issuing tokens on the DeFi blockchain, but was saying that that's still DeFi, and so therefore other people using that chain are now saying, well, I didn't know that those tokens were going to be issued on this chain, and yet there they are.
So, Mr. Caston, would you agree with me what I am concluding that the amendment that you're offering is a very reasonable amendment that would create a public-private partnership with Treasury to explore the integration of anti-money laundering and countering the financing of terrorism requirements, including know your customer and sanction screening. Is that all this amendment does?
Yeah, it doesn't specify how to do it. It says let's get the right experts in the room, and let's make sure that if we're going to say that this code is not going to do any harm, then we've coded it in a way to do no harm.
So again, the complete exempting DeFi entities at all is what is being asked of this committee, the Republicans. They're saying, don't mess with DeFi entities at all, leave them alone. Is that right?
That is my understanding. I'll leave them to not put words in my own mouth, but that sounds what I would
And so, Mr. Caston, on this idea of a public-private partnership with Treasury, don't we hear a lot from time to time from the Republicans about public-private partnerships in different ways, all kind of ways, believing that there should be opportunities for the public and the private to have partnerships, particularly in various aspects of business, in order to achieve what would be commendable goals, et cetera, et cetera. Why is this so out of line of what you're requiring?
I would not speculate on that. I think we just crafted the amendment to make sure that the experts are in the room.
And so would you basically indicate to this committee how, again, you believe this is important based on exploring the integration of anti-money laundering and countering the finance of terrorism, et cetera, et cetera?
I think the key question for us as legislators doing our job is under what condition would we allow someone to write a piece of computer code that could wreak havoc on our financial system and give them complete indemnification? And I think we're not going to answer that on this committee. The hope is that we can put together this partnership of people who have that expertise, force them to be at the table, people from the crypto industry, computer coders, people who understand the law, and say, how do we write this in a way so that good actors are rewarded and bad actors can still be held to account? And I'm not sure why that's controversial.
Thank you, Mr. Caston. I appreciate that. And I will just conclude by saying that as we move this very complicated, this huge piece of legislation, and we're finding that there are too many instances where various actions are being proposed that would be harmful to investors, harmful to consumers, et cetera, appear to be in this legislation, and it is not understandable why anyone would be willing to move this legislation with all of these problems that would be created for this country. If you understand it any better, you don't have enough seconds, but the next time you have an opportunity, you explain it to me because I don't understand it. I yield back.
Gentleman yields back. Who seeks recognition? Dr. Foster.
Thank you, Mr. Chair. I'd just like to, well, first reiterate this comparison with cash. You know, I think that the fundamental point has been made that 100% of ransomware and things like that take place with crypto, 0% with cash. And this is, that's a fundamental difference that we have to understand, and that is why they have to be treated differently under the law. It's, you don't see people, doing ransomware and then demanding a big bag of cash and a trash can in New York, in Central Park or something like this. It just, this is a fundamental difference. It has to be done differently. We have rules on how much cash you can carry across borders for very good reasons. You don't have absolute privacy to carry as much cash as you want across the border, and that is something that should also be applied to crypto assets. And the technology exists to do this. I'll be introducing an amendment to actually look at another approach to this than what Mr. Kasten's amendment is. But I think this is a thing we've been struggling with for the whole long time on this, is that there are two fundamental problems that are not addressed in this, which is the finality of transactions and the anonymity of transactions. And if you're an absolutist on both of those, then you're living in a world where people will be kidnapped and tortured to get their crypto code so that you can obtain their assets. And I think most people don't actually want to live in that world. They don't want to live in a world where, if you have, let's say you tokenize gold bars somewhere, and then you're sitting on your tokens, and the North Koreans hack your tokens, and they have your codes. Are they allowed to march in and grab those gold bars out of the vault that's been stored? Or is there, in fact, a need for a trusted third party and a set of law that can say, no, here's the rules for accessing that vault, here's the company that has control over it, here's the oversight agency that has legal authority over that company that controls where the gold bars are? You need this whole infrastructure to make a trustable system. And that's something that we have to have, frankly, a more mature attitude on this if we're going to make this a system that will not be like the status quo, where we're seeing just massive amounts of abuse in all directions here. So I often make the comparison with automobile license plates, that if you think of the automobile industry in its infancy coming to us and saying, we've got this great product, it's going to be transformative, but you'll wreck the industry if you demand people to use license plates. Because I want to be able to drive my car with full anonymity, through your neighborhood, across international borders, and don't let us do anything that will ruin our industry or drive that industry offshore. Well, we mandated license plates in the United States for automobiles, and it did not drive the automobile industry offshore. That ultimately, most of the people that want to use crypto products, they come in through platforms. They don't mind being KYC'd. They don't expect that under all circumstances they will have absolute anonymity. And we have to reflect that expectation, reasonable expectation of the people in the laws that we pass. And that's why I support this amendment, and we just have to step back and rethink this whole thing from zero. Yield back.
Gentleman yields back. Who seeks recognition? Seeing no other proposed speakers, I'll recognize myself for 5 minutes. Let me thank my friend Mr. Kasten for calling attention to the importance of how decentralized finance is overseen and how people think about it in the future of our financial system. And we have Section 505 of the Clarity Act, which calls for a very similar detailed study by the Secretary of the Treasury, the CFTC, and the SEC on how to conduct exactly the right balance of regulations, what risks decentralized finance proposes. And in the first part of his bill, this initial concept of the public-private partnership with decentralized finance services. If that's something he wants to pursue, not in the form of this amendment, but as a consideration in thinking about the bill or Section 505 as drafted in the Clarity Act, I'd be happy to work with him. Other than that, on the total of the amendment, I recommend a no vote. Is there anyone seeking recognition? I yield back the balance of my time, and there being no additional debate, the question occurs on the Caston amendment. All those in favor of the amendment shall signify by saying aye. All those opposed signify by saying nay. Nay. The nays have it. The amendment is not adopted.
Request a recorded vote.
The gentleman from Illinois requests a recorded vote. All those in favor of a recorded vote, raise your hand. Sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceeding on the amendment are postponed. Pursuant to the previous order, the chair declares the committee in recess, subject to the call of the chair. We'll reconvene immediately following votes. We are in recess. Committee will come to order following our recess. Do we have additional amendments on the amendment in nature of a substitute on the Clarity Act? My friend from California, Mr. Sherman.
For now, I'd probably permanently skip over Sherman 053, just on the theory that I'm providing enough entertainment to you on the other amendments, and we'll go to Sherman 051, dealing with campaign.
Mr. Sherman has an amendment to the desk, Sherman 51, and we'll pause for it to be distributed.
Mr. Chairman, I'd like to reserve a point of order.
Chairman for Wisconsin reserves a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Sherman of California, designated as Sherma 51.
Without objection, the amendment is considered read, and the gentleman from California is now recognized to describe his amendment.
As I pointed out earlier, there's no way a Sherman bill dealing with crypto is going to pass as independent legislation. So the only way we have of dealing with this issue is if we pass an amendment to a bill that I know the majority will move. Cryptocurrency means hidden money. And the one place we certainly don't want hidden money is in our political campaigns. We have a system that all of us are familiar with that involves disclosure and excluding foreign interests and limiting the amount that each individual gives. Cryptocurrency, if it's accepted by political campaigns, offers a giant hole in all of that. So let's illustrate the situation. If somebody claims that they're John Smith and they have a checking account in the name of John Smith and a check arrives at a campaign, it's probably from John Smith. It's pretty damn hard to get a checking account in the name of John Smith unless you show a bank that you are, in fact, John Smith. It's even harder to get a credit card in the name of John Smith unless you're John Smith. But a crypto account is owned by whoever claims they, whatever name you want to put on it. So crypto account 123476 makes a contribution of $3,500, and then you get an email that says, this is from John Smith. You have no idea whether that is a contribution from John Smith or not. Your opponent can look at your report. He has no idea whether this is from John Smith. It could be from anybody. Could be from a Canadian citizen or a Nigerian prince. Now, if the contribution is over $200, your opponent might actually knock on the door of or send a letter to the address identified as the purported name and address of the donor. But if the contribution is for $195, then your opponent will never know even the purported name. No way to check. Now, it would be pretty damn hard for somebody to get 1,000 different accounts in the name of randomly selected names through a bank or a credit card. Imagine trying to get several thousand credit cards all in phony names. Criminals have tried, they have not been successful for the most part. But creating 2,000 different Bitcoin accounts shouldn't take a savvy person more than a few hours. And then you just send those, you use each one of them to contribute $195. And this one purports to come from John Smith, and that one's from Mary Doe, and this one's from John Wayne, and this one is from whoever. That's why I said that Mr. Stile, I think it was, could end up finding that supposedly he'd made a contribution to Bernie Sanders. All I have to do is send some crypto to the Bernie Sanders campaign, and when they ask me to fill out who I am, I just say I'm Mr. Stile. And as I pointed out earlier, what's preventing that is not my honesty. No one has accused me of too much of that. It's not even because I'm too cheap to give Bernie Sanders some money. The reason it doesn't happen is Bernie Sanders is too honest to accept crypto. So that's what prevents me from a little skullduggery here. So what we should do is just say, if you want to give money to a candidate, give them US dollars, which is, by the way, what they're actually going to spend, and give it by check, give it on a credit card, give it in a way that we know who you are. Otherwise, it is just a matter of time before every foreign interest in this country that wants to influence an election just downloads a list of Americans from the phone book or the FEC's own records. Not hard to get a list of hundreds of people, and then programs a whole series of $195 worth of Bitcoin or Trump coin or whatever to go to the candidates of their choice. And then, after you win the election, somebody can come to you and say, you know, all those contributions you got between 4 a.m. and 6 a.m. on that particular day, we're all from us. Protect our system. Vote yes for the amendment.
Gentleman yields back. Who seeks recognition?
Mr. Chairman.
Does the gentleman insist on his point of order?
I do not insist on my point of order.
Gentleman from Wisconsin withdraws his point of order. Does the gentleman seek recognition?
I seek recognition. Strike the last word.
The gentleman is recognized for 5 minutes.
Thank you very much, Mr. Chairman. I appreciate the intention of my colleague, Mr. Sherman's amendment, although it is misplaced. He is correct. And this is part of my investigation actually into Act Blue. So it's actually kind of exciting to hear Mr. Sherman share this information, because actually this is a really, really important topic. This is a topic we spend a lot of time on the Committee on House Administration. So I actually would be willing to waive you onto the committee to dialogue this further if you're interested, Mr. Sherman, because here's the actual problem that truly exists with Act Blue and other online fundraising platforms. If an individual goes on to Act Blue today using a credit card, using a prepaid gift card, and makes a donation in another individual's name, that information, that donation would be processed and go through, and there's actually almost no check on the system. It's actually kind of a wild situation that we've uncovered that I've been working to get more notice of, to have people help me close this loophole. And so here's the problem. So say someone goes on, Mr. Sherman, who doesn't like, maybe if you support Israel, maybe they don't like an individual support of Israel. So they want to go on and they want to cause some havoc, and they say, all right, that individual goes and donates maybe to your opponent to cause you a little bit of a problem. Well, they could go on and grab a prepaid card, make that donation online, and then instead of typing in their own name and information, say they're a non-US citizen who would be ineligible to make a donation, they could simply go on to anybody's FEC report, grab the name and address of any individual, and then make the donation in that person's name. And it's not actually caught or captured. The problem you identify is actually a much broader problem that we have to come to grips with in the United States, recognizing the hybrid war nature of a lot of our adversaries, China, Russia, Iran, and others, who may very likely be utilizing American campaign finance, the American campaign finance laws and the American campaign finance system to transfer funds illicitly into campaigns. And so I would love to work with you in that regard. It's something we spent a lot of time in the Committee on House Administration. We actually moved forward and passed on unanimous consent some aspects of the legislation that I'm working towards, although a far more robust oversight and reforms are needed. What you bring up in this amendment, Mr. Sherman, is specifically as it's related to cryptocurrencies. And what you are looking at here is a bit of a red herring. So I agree with the premise. We don't want people making donations who aren't the person they say they are. That's a problem I'd love to work with you on. But it's not unique to what is being given. And so as we look at crypto, that you can value the crypto that might be given. You may or may not accept in-kind donations into your campaign. That's actually quite common for candidates running for office to accept an in-kind donation. Somebody buys a set of pizzas for volunteers, and you would say, I'm going to report that. That'd be absolutely appropriate. And you'd say the pizzas that were purchased were valued at $250, and you'd report it, even if it was the owner of the pizza shop who never had an outlay or an expenditure. So you'd be assessing what the value of those pizzas were because the owner of the pizza shop generously gave them to you. And so in the same way in crypto, so we would look and we'd say, all right, an individual maybe receives a $1,000 valuation of Bitcoin to the campaign. They'd be able to keep that. They would then value that out at $1,000. There's ways to appropriately do that and document that. The issue that you address actually is an issue that I would love to engage in a very serious and substantive way with a lot of my colleagues on this committee, with the expertise we have here, in conjunction with the Committee of Jurisdiction, the Committee on House Administration, which I chair, to address individuals making donations in other people's names. And so I actually really like the spirit of the amendment that you bring. I just don't think what you are targeting is actually what is being done in the text of the legislation. So I'm not supportive of the amendment, but like your interest in preventing individuals from making donations in the name of someone else. And so I recommend a no vote, and I'll yield back, Mr. Chairman.
Gentleman yields back. Who seeks recognition?
Chairman.
Move straight the last word.
Mr. Lynch was, I believe, first up there. Mr. Lynch, you're working.
Thank you. Well, thank you, Mr. Chairman. I'm just excited that Mr. Stiles is excited because, you know, we if you want to investigate something, so Abu Dhabi just gave Donald Trump $2.9 billion by investing in his meme coin. You know, and it's not a small thing. It's $2.9 billion. And the meme coin gives them zero in terms of, value, in terms of fungibility and an increase in their economic position. So, and Melania Trump has a meme coin as well. Hundreds of millions of dollars have accrued to her benefit since she announced that, and it's just a thing. So it's a way, it's a way from foreign governments, Abu Dhabi, the UAE, to funnel money to Donald Trump and his wife Melania, and then they've got Liberty Financial, which is Donald Trump Jr., Eric Trump, Barron, and then there's another family involved there. Who is it? Oh, never mind. Anyway, so that's another scam we got going. So we have a target-rich environment, but unfortunately, our Republican colleagues don't want to go anywhere near this. So they're allowing the biggest scam in the history of the White House, where they just put a new sign in the White House, for sale. So, they have a number of ways. You can have dinner with the president down in his place in Virginia. What did he clear that? 140 million or something like that? It's ridiculous. It is obscene, the amount of money. He's just he's just hitting everything that moves. And this is the Oversight Committee. This is exactly what we should be looking at when we see violations like this with the president just monetizing the presidency, monetizing the White House. It is so obscene and so obvious, and yet I feel so frustrated because my good and dear friends on the other side of the aisle don't want to lift a finger to hold this president accountable. No, this is completely unprecedented. There hasn't been a president of the United States has done anything like this. Billions in just he got, late January he got sworn in? So he's just raking it in. You know, he's done this over 4 months, basically. And he keeps doing it. And so it just makes the claims of we're going to investigate this, we're going to investigate that, and we're going to hold people responsible and make sure that they obey the law. It makes those type of statements that I just heard farcical and just completely detached from reality, because we know what's going on. We know what's going on. We know the scams that are going on, the bags of money that are going into the White House. You know, like I said, $2.9 billion. That's a lot of dough. It's about 40% of the president's wealth is this crypto scam. And Lord knows what we don't have a good number on Liberty Financial, but they're open for business as well. And it's a damn shame. So would the gentleman from California like a minute?
Yes, I'll just say that I can't imagine Russian agents trying to funnel $50,000 to a campaign through unsolicited pizza deliveries. I do see that the possibility of the use of gift cards. I do see certainly if a credit card processor knows that the name on the card is John Smith, they shouldn't allow you to say, I'm making this contribution in the name of Mary Jones. But we can't deal with that on this bill, or even in this, but we can deal with this now. The biggest loophole is crypto. Let's deal with that now, and then we can deal with the gift cards later. And I've been in politics a long time. I haven't seen the gift card issue.
Gentleman's
this
time has
crypto issue is
expired.
coming.
Gentleman's time has expired. Who seeks recognition?
Mr. Chairman, I move to strike the last word.
The gentlewoman from Texas is recognized.
You know, I'm glad that Mr. Lynch is excited, that Mr. Stiles is excited, but I'm not excited that he's excited. I am actually concerned. His response seems to imply that all we have to do is say it's a digital asset and we'll just establish a value and report that. I mean, to me, that is just flat wrong. It leaves us open for a horrible loophole, as Mr. Sherman has indicated, for more foreign and bad actors to get involved in our campaigns. They're already involved in so many presidential campaigns. We saw that during a couple of elections. There's certainly been a lot of stories in the Mueller report and others about how some governments have been involved in trying to rig our elections in favor of one candidate or the other. So we need this guardrail, we need this protection, and I wholeheartedly support Mr. Sherman's amendment, and I thank you for bringing it forward. With that, I yield the balance of my time for Mr. Sherman if he needs to address any issues that have been raised.
I do indeed. Mr. Stiles has identified an issue that I'd be happy to work with him on that has nothing to do with crypto. There are other issues I'd like to work with you on that have nothing to do with crypto. That is not a reason for us to fail when we're passing the big crypto bill that will become law to deal with this issue now. To say that we can't deal with the crypto problem because there's another problem somewhere else, perhaps certainly outside germaneness for this bill and perhaps even outside the committee, I assure you that every amendment I've ever suggested fails to solve every problem I could work with Mr. Stiles on. So I'll be happy to work with him on the gift cards and in the credit cards not matching. I don't know if he can get me to work on pizza because I don't see that as big a problem. But how is that an argument to leave this superhighway to corruption when we can stop it?
Will the gentleman yield?
We'll know in a second. We'll know full well that when you make that crypto is the giant gift card. It doesn't have a name on it. You put your name on it. You choose any name you want. You choose any address you want, and you say that's where the crypto is coming from. This is our chance to deal with this issue, and instead we're going to be told, oh, let's put that off until we solve the national debt and the credit card company and the this and the that. I'll yield to the gentleman if he can tell me what's the matter with stopping.
Excuse me, it's my.
Oh, it is. Excuse me. Yes. So I will yield back to the gentlelady from Texas.
I think Mr. Sherman is making an excellent point in drawing the differences between some of the issues that Mr. Stiles mentioned that are certainly under the jurisdiction of his committee. But right now, we're talking about the use of crypto to essentially undermine the integrity of some of our elections in terms of giving. And I really think that if he's excited about this, then he sure as hell should support this bill, because this is the place to do that. We are working on this bill now. We're not looking at anything that he or his administrative committee may be doing later. We have no jurisdiction over that. So if he's excited about it, he should do it now. And with that, I will, if he still wants some time, give him another 30 seconds to say something, then back to Mr. Sherman.
I appreciate that. Let me try to break this down just real tight. First issue, is the donation made in the name of the giver? That is a broad issue that we have. That's the core of the investigation into Act Blue. That deals with credit cards, prepaid cards, et cetera. Second issue, the reference to the pizza, which might have gotten lost in translation, is campaigns are allowed to accept donations. The key requirement is that the campaign accounts for the value of the contribution accurately and honestly. And so in the same way you would calculate the value of a pizza, you would calculate the value of a digital asset or any other transaction that is not a US dollar denominated donation. And so the amendment is in search of a problem. You can just value out what is given. That's important to do accurately and honestly, whether or not that's an in-kind donation or whether or not that's...
I believe you've exceeded your...
donation?
Ms. Garcia.
Excuse me, ma'am? I didn't hear you.
But you're really seriously saying that this would be considered an in-kind donation?
No, I'm saying, let me try that again.
You're saying put a value on it, so you don't think digital assets have a value at all in terms of currency?
No, maybe we're going to run out of time. I'm happy to answer that if I have more time.
All right.
Gentlewoman's time has
I yield back.
expired. Who seeks recognition?
Mr. Chairman,
Mr. Lucas.
strike the last word, Mr.
The
Chairman.
gentleman's recognized for 5 minutes.
I'd like to yield to the gentleman, Mr. Stiles.
I thank the gentleman from Oklahoma. I'll try to be brief because we're at some point going too far down a rabbit hole that is absolutely worthy of a full committee hearing. If we break this down, one, who is the actual maker of the donation and who is the recorded name of the donation? A very important topic. That is what Mr. Sherman talked about was the purpose of his amendment. I offer that the purpose of his amendment is not solved by his amendment because this issue is a broader challenge. Issue two, what if a campaign is provided with something of value other than something exactly in US dollars, whether or not that is an in-kind contribution, my generic example pizza that I think we got totally down a rabbit hole on, or whether or not that donation is made in a digital asset, which can also be valued. The key here is that the campaign accounts for the value of the contribution accurately and honestly. And so you can account for the value of the contribution accurately and honestly, whether or not that is a cryptocurrency, whether or not that is any form of an in-kind donation or any other form of a giving to a campaign other than US dollars. And so I just offer this amendment doesn't address what it's attempting to address, both important points, but you can value a cryptocurrency just like you can value an in-kind donation. That's not a problem. The other problem is substantive and real, not addressed in the amendment. I'd recommend a no vote. I'm going to try to keep it tight.
Will the gentleman from Oklahoma yield?
Gentleman yields.
This is not a valuation issue. We know what Bitcoin is worth at any particular moment. That's not what this amendment isn't trying to deal with, a valuation issue. Second, I can't imagine anybody with in-kind contributions. Those are reported honestly, and you know who gives them to you. Somebody shows up, they have some pizza. Now, I've never seen a campaign where there's $50,000 worth of pizza contributions, and you might doubt whether the person who delivers is really Jack Smith. I'll agree that other payment systems, namely these nameless gift cards, might be a problem. Deal with them in your committee. This committee is dealing with crypto right now. And if you say you want to go after Act Blue because they accept contributions on gift cards, but you don't want to touch crypto, which is the giant highway of corruption, then it's pretty apparent that you want to leave this giant highway available to those pro-crypto candidates who will accept crypto contributions.
Mr. Lucas is reclaiming his time.
Reclaim my time. I very much appreciate the discussion and debate here. Typically, you think of discussion and debate in committees as moving opinions, changing the course of the construction of the direction of the bill. I don't see that happening in this debate. And therefore,
would you yield me?
I yield to the chairman enthusiastically.
Well, I appreciate Mr. Lucas yielding. I think this has been an interesting debate, but I also think it goes way beyond the scope or authority, parliamentary authority of this committee. We're really debating the method of campaign contributions, which in my judgment is not jurisdictionally related to the committee. We didn't rule it that way, but I think we're off in another committee's jurisdiction. I recommend a no vote. I yield back to the gentleman from Oklahoma.
Mr. Chairman, I yield back the balance of my time.
Mr. Lucas yields back, who seeks recognition. The ranking member of the full committee, Ms. Waters.
Move to strike the last word.
Gentlewoman's recognized for 5 minutes.
Thank you very much, Mr. Chairman. I want to thank Mr. Sherman for offering this amendment. This important amendment will ensure that certain crypto practices do not allow people to evade campaign finance laws. We insist on identification of individual donors to ensure that donors are eligible to contribute to federal campaigns. For example, they cannot be foreign citizens, but really Trump doesn't care about that, and they cannot donate on behalf of other individuals. The data on the individual contributors is filed with the Federal Elections Commission. We do this to instill fairness and transparency in the elections process. Attributes unique to digital asset activities, however, could undercut our campaign finance laws. For example, unhosted wallets, which are essentially accounts hosted by the owner without third-party interaction, could be a concern, especially where foreign donors are concerned. Whether it is a Russian oligarch trying to sway a U.S. election, or a foreign CEO, perhaps a Chinese national who can't otherwise contribute to federal campaigns, there could be a concern about possible unlimited dark money donations through these routes. We know that the 2024 National Money Laundering Risk Assessment found that illicit actors commonly use anonymity, enhancing technologies, including mixing, to conceal the movement or origin of their digital assets. This could lead to evasion of campaign finance laws as easily as it applies to the evasion of economic and trade sanctions. Mr. Sherman's amendment would help prevent this. As I sat here in this committee, talking about all of these important issues that we're confronted with, and we are talking about whether or not we have transparency in cryptocurrency, and whether or not we're going to have ignore campaign finance laws. Based on everything that we have learned about this president, he lacks the idea of being able to get contributions without having to disclose them, without having anybody to know exactly where they came from. This president is very brazen in the way that he has just dismissed, the way our democracy works, the way the laws that have evolved over the years have worked in order to have transparency and to have a country that cares about whether or not we are absolutely controlled by any foreign interest. You know, when you hear and understand that the president, just through his cryptocurrency, has received $2.9 billion in campaign contributions from Abu Dhabi to go into Binance, then you know what he's after. You know, the more I think about it, you know, Elon Musk gave him almost $300 billion. I think it was 2.9. And so that was very effective in helping him to win, particularly when we look at Pennsylvania, et cetera, et cetera. And so when we understand that, he doesn't need Elon Musk anymore because he's got cryptocurrency now. He will be able to get billions upon billions of dollars from foreign interests. This is a president who is so brazen that he has the audacity to accept from a foreign interest cater a $400 million, is it $1 million? Airplane, and then use it as Air Force One from a foreign country. Have you no pride? Have you no shame? How could you be so brazen? So when we talk about the fact that we want to protect, you know, campaign contributions, he's demonstrated, he don't care about any of this. He loves the money. He's gotten rid of Elon now, and so all of his money, he'll take it from anywhere, Saudi Arabia, Abu Dhabi, you name it, he's going to where the big money is that won't be traced. And so I support this.
Gentlewoman yields back.
Even though it's not going to do what we needed to do.
Gentlewoman
I
yields
support
back.
it. Thank you.
Who seeks recognition? Is there any further debate on the amendment? If there is no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. Mr. Sherman?
I've got an amendment at the desk, Sherman
No,
052.
Mr. Sherman, are you asking for a recorded vote?
Oh, yes, I'm asking for a
I thought you
recorded
might
vote.
be.
Yes.
Mr. Sherman has requested a recorded vote. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. We'll now move on to our next amendment. Mr. Sherman?
That would be Sherman 052, dealing with
We'll pause
unhosted
for
wallet.
Sherman 52 to be distributed. Mr. Stile? Mr. Stile reserves a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Sherman of California, designated as Sherman 52.
Without objection, the amendment is considered read, and the gentleman from California is now recognized to discuss his amendment for 5 minutes.
First, I'll use my time to thank the chairman for reminding me to request a recorded vote. And second, I'll respond to Mr. Stile on that last amendment. If his bill goes through, but my amendment does not, then the only candidates that will be able to accept illegal contributions will be those who are pro-crypto enough to accept pro-crypto contributions. Right now, we have a system where, unfortunately, perhaps, gift cards and mismatching on credit cards would allow people to get contributions outside the limits. If his bill is successful, but this amendment fails, all the pro-crypto candidates will be able to take he'll plug the loophole he wants to plug, and this one will be wide open, but only to people who are pro-crypto.
Will the gentleman yield?
I will not, because I've got to go on to this amendment. This amendment deals with know your customer and anti-money laundering. The advantage of crypto over the dollar, in the view of its own proponents, is that it is what it says it is. Cryptocurrency means hidden money. So they say they want clear rules. Well, fine, have the same rules that the US dollar focuses on. You want to do major dollar transactions, and you know, I guess you could do a few in cash, but that's pretty small. You want to do major transactions, you want to do online, you would deal with know your customer, anti-money laundering. Now, the proponents of crypto say everything is open, but what's available on the page is that there's a certain numbered account with a certain amount of money, but you don't know who owns the account. That's why this requires that all wallets must comply with the Know Your Customer and anti-money laundering. Why do we need that? Because self-hosted wallets represent a major threat to our ability to prevent terrorism financing. Because chain analysis estimated in 2024 illicit activities represented $40.9 billion in the value transacted on crypto blockchains. We see the illicit activity, but we don't know who the scammers and who the sanctioned entities are. We know that between 2020 and 2023, crypto wallets connected to Hamas, that's Hamas, received $41 million. Some of that's from the United States, but we don't know from which individuals in the United States because it's in crypto and unhosted wallets. And of course, Hamas murdered 1,200 people on October 7th. We see Chinese crime organizations are using crypto, and that they have received over $37.8 million worth of assets for 2018 in exchange for shipping fentanyl. Troublingly, Wired and Chain Analysis found that due to using sophisticated unhosted wallets and mixers, vendors of child sex abuse materials in 2023 persisted online and evaded law enforcement for much longer than they were able to do previously. So, this is a chance to be against the child porn providers, Chinese fentanyl shippers, Hamas, and I might add, those who would use crypto to evade our tax laws, our money laundering laws, and our other financial laws. The idea that we would establish a know your customer system for those who do business in dollars and a system of total concealment as to who is doing what for those who choose to use a rival currency is a way to give that rival currency an unfair advantage, and it's a way to build a payment system designed for criminals. So vote for this amendment, and let's make sure that this carefully constructed Know Your Customer and anti-money laundering system that we developed over the prior decades applies to cryptocurrency as well. Otherwise, again, we give cryptocurrency an unfair advantage over the dollar, and we acknowledge that cryptocurrency's big advantage over the dollar is that it meets the needs of those committing financial crime, whether it be the Hamas, whether it be the child pornography, whether it be the Chinese fentanyl, whether it be tax evasion, whether it be avoiding human trafficking laws or sanctions laws. And with that, I yield back.
The gentleman yields back. Who seeks recognition? Gentleman from, I'm sorry, does Mr. Stahl insist on his point of order?
I do not. I do not.
Gentleman from Wisconsin withdraws his point of order. The gentleman from Ohio,
Moves to strike the last word.
our subcommittee chair of our National Security Subcommittee, you're recognized for 5 minutes.
Thank you, Chairman. I believe Mr. Sherman has made an effort to see how many logical fallacies he can fit into 5 minutes. And I mean, he's made a pretty good effort at it. There's a very large number of logical fallacies in there. But we shouldn't follow his twisted logic. We should look at the facts here. We do have a very good bill in the market structure, the Clarity Act, that provides clear know your customer provisions for regulated entities. If you want to be a custodian on behalf of other people and you're trusting your assets to another entity, sort of like you trust your assets to an investment management account at Fidelity, or your cash to a custodian at a bank, or your commodities to a broker, by all means, you have provisions for those regulated entities where they are regulated. But the idea that every individual who has personal property is going to somehow register to get permission from the government to have their own personal property is Orwellian. Police states around the world dreamt of having this kind of surveillance capability. And that's exactly the future that Mr. Sherman seems to hope for. And he's got plenty of company. I mean, people around the world are working on this idea of a centrally managed currency, a central bank digital currency, and a digital ID, and then everything that you do with your own money is therefore permissioned. You have to go through an intermediary. It flips on its head what our founders recognized in the Declaration, that we're endowed by our Creator with certain inalienable rights, that among them are life, liberty, and the pursuit of happiness. We've looked at those phrases to enshrine a protection of personal property. And it's very fundamental when you own an asset, whether it's digital or a real world asset, it is your property. And the ability to transact isn't given to us by a government. The ability to transact is a natural right. We inherently would transact with one another, and then governments were created in case someone committed fraud or something like that. But Mr. Sherman's dystopian future says that the government can decide who's allowed to transact, under what terms and conditions they're allowed to transact, and a benevolent government will just oversee all this. Yet, we spent part of the day worrying about Elon Musk, and certainly part of the year worried about Elon Musk and people that were working as employees of the federal government being able to access data that the government already collects, like your tax data. I mean, I honestly object to the IRS, first and foremost, not because of the revenue they collect, but because the government shouldn't get that much information on citizens without a warrant or subpoena. I hate the tax code. But they're not objecting to that. They're just objecting to Elon Musk and anybody that came to work for the government because Elon Musk inspired them to serve our country with Doge, having access to that data. Can you imagine how upset they would be if you create this dystopian future where every single transaction that a person can make is now monitored and surveilled by the government? It can be programmable money and conditioned. We don't need that future. We need to protect self-custody, and we don't need to regulate individuals as if they're financial institutions or money service businesses. I think the other important thing here, Mr. Chairman, is when you look at self-custody and you talk about self-hosted wallets. I think Mr. Sherman has in mind a certain kind of self-custody, but the reality is in most accounts you either have an encrypted phrase or a seed phrase today. You don't have to have anything. If you can remember 12 or 24 words and trust your memory to it, you don't even have to write it on a piece of paper. How are you going to cancel that? I mean, the reality is you can't. You're looking at trying to criminalize conduct that people are going to engage in, and that's why they fear it, is it's something that they can't control. That's the whole crux of this. If you can't stop crypto, and I think they've broadly conceded they can't stop it, they want to keep it as an account-based system so that they can control somebody else who controls your assets. They don't want you to have your own property and your own ability to transact. And the reality here is we know where things are headed. Decentralized finance counts on the decentralized part. Without self-custody, it kills the market, and that's exactly what Mr. Sherman's amendment would try to do. We need to strongly oppose it. I encourage all my colleagues to reject it and vote no. I yield back.
Gentleman yields back. Who seeks recognition? The gentleman from Massachusetts, Mr. Lynch.
Thank you very much. Just quickly before I yield to Mr. Sherman, the founders of this country instituted debtors' prisons. They were quite harsh, and you know, that was, a failure to pay a debt was considered a moral breach. And they imprisoned thousands and thousands of people in this country. You know, the founders of the founders of this country and the drafters of the Constitution believed in you know, corporal punishment and brutal conditions for those who failed to pay their debts. It was individual states who stepped up and eventually, state by state, prohibited debtors' prisons, you know, that were instituted by the framers of the Constitution and the founders of this country. With that, I'll yield the balance for whatever time he may consume to the gentleman from California, Mr. Sherman.
The gentleman says that the real market for this requires that it be kept secret if that's what the person wants. Exactly. It's cryptocurrency. It's hidden money. Now, for most people today, cryptocurrency, almost everybody today, cryptocurrency is just something you bet on. It's not a currency. I don't think anybody in this room has bought a sandwich with a Bitcoin this week. Now, the gentleman says that I'm talking about a dystopian future. Wait a minute. In 1999, there was no cryptocurrency. Every single bit of currency you had was U.S. dollars and was subject to the Know Your Customer anti-money laundering laws. Was 1999 Orwellian dystopia? I don't think so. But you know what is also not well? Today, virtually everybody in this room, every transaction you had was in U.S. dollars. Maybe you bet on cryptocurrency, but everything you bought and every payment you received, and oh, by the way, your salary from Congress, all was U.S. dollars, all in a system, Know Your Customer, anti-money laundering. So we were told that we live in a dystopian present, that 1999 was even slightly more dystopian than current. This is absurd. It is not dystopian to say that we should have the Know Your Customer anti-money laundering laws. We lived under those laws virtually all of our entire lives. Now, the gentleman says that the effect of my amendment will be to criminalize things that people may want to do. That's right. Tax fraud should be kept criminal. Donations to Hamas should be kept criminal. Payments for child porn should be kept criminal. Criminalizing things that people will do is the purpose of criminal law. You don't have to outlaw something that no one would ever do. So the question really before us here is, are we going to be in a system where no law dealing with finance or taxation or terrorist financing or sanctions evasion financing is going to be effectively criminalized? Not are we going back to an Orwellian past when we had U.S. dollars and we had a Know Your Customer law and there were no unhosted wallets except for a piece of leather in your pocket which had a very limited capacity. That's the present. That is not dystopian, and it was even more the present 10 years ago when there was no crypto, or 15 years ago when there was no crypto. Yes, indeed, things that people want to do should be criminal if it involves tax fraud, Hamas, child porn, etc. Let's not make his proposal is to say that obeying our financial laws should be optional. Do it with a regulated aid entity if you want to obey the law, or just do it self-hosted if you don't want to obey the law. Crime in the streets is terrible. Crime in the suites involves a lot more money and is also terrible. So let us we've grown up in this country with Know Your Customer, anti-money laundering that is not dystopian, and there's no reason to blow it up in the name of making the crypto bros a lot of money by providing a new system of currency and a new payment system designed for those who, in the words of the gentleman, shouldn't be criminalized for doing things that people want to do. I yield back.
The gentleman yields back.
I yield back.
Thank you. Thank you, Mr. Lynch. Yeah, Mr. Lynch yields back. Who seeks recognition? Mrs. Waters.
No, thank you very much, Mr. Chairman.
You may strike the last word.
Move to strike the last word. First of all, I want to commend Mr. Sherman, not only for this amendment, but for the tremendous work and time that he's put in trying to make sure that we didn't end up with cryptocurrency without any guardrails. And this is where everything that we have seen today seems to be taking us to no guardrails, that it is, a possibility that the president in his ownership of crypto can do whatever he wants to do. The independent agencies are no longer independent. They've got to come to him for any proposed rules that he can review before they adopt anything, on and on and on. There are those who could make the argument that the bill already exempts decentralized finance entities from SEC and CFTC oversight, et cetera, et cetera. It's not enough. The provision that was added that would further exclude blockchain developers and service providers from any federal or state law and regulation, registration, and oversight is absolutely furthering the cause of the industry not being regulated and being able to do whatever they want to do. From my perspective, Representative Sherman's amendment is an appropriate response to such a brazen effort. For that reason, I urge members to support this amendment, and I yield back.
Gentlewoman yields back, who seeks recognition. The gentleman from Tennessee, Mr. Ogles, is recognized to strike the last word.
Thank you, Mr. Chair. Move to strike the last word. Mr. Chairman, I just want to say, thank you for bringing this important piece of legislation before us. As we move forward into this space, it's imperative that we have a framework and that people know what they're getting into. With that, I'd like to yield some time to the gentleman from Ohio, Mr. Davidson.
I thank the gentleman for yielding, and just for the benefit of all of our colleagues in here, I thought I'd illustrate what a logical fallacy is. The bill doesn't make tax evasion, if I could engage with Mr. Stiles in colloquy, does this bill make tax evasion illegal?
It's already illegal.
It does. Does it make, trafficking, human trafficking, does it make it not illegal? It makes it permission to do it?
It would remain illegal.
It would still remain illegal. How about money laundering? Does this bill make money laundering, stop criminalizing money laundering?
It would remain illegal, and it should be noted that the SEC and CFTC regulations are in place, as well as the Bank Secrecy Act and anti-money laundering requirements.
Funding Hamas, terror groups, other named terrorist, violating sanctions, all those kinds of things. It doesn't undo any of that, does it?
No.
Yeah, I didn't think so. So just because somebody could maintain ownership of private property, I think Mr. Sherman's contending, well, of course, then they would just engage in every criminal activity they want. That's really his dim view of humanity, is that left to their own, humans would break the law. And the only way to keep us safe from these evildoers is to make sure that they can't do what people did for all time. They had cash. There was no third party to check on their transactions. If you wanted to catch somebody for funding a crime, you had to catch them funding a crime. So, you didn't get us come in and say, well, before you hand over your cash, let's come in here and you can transact in front of the government. I mean, that's the kind of system that Mr. Sherman's advocating for here, and we should reject it. We still haven't completely made cash illegal, and if anything, we should be growing the denomination of our bills to keep up with the massive inflation. Instead, they took large bills out of circulation and have shrunk cash. And it's interesting that a lot of countries around the world protect the ability to transact in cash. Perhaps we should do the same. And certain permissionless transactions should be left between the individual. That doesn't mean anything that you do with your money wouldn't be subject to all the other laws that you have to follow in our country, and there are many of them. So this bill doesn't undo any of those laws. So I think, Mr. Stiles, for clarifying that, and hopefully we've identified at least a couple of the logical fallacies there. I yield to Mr. Ogles.
Will the gentleman yield?
Yes.
Or unless you need the time.
Gentlemen, Mr. Ogles yields to Mr. Stahl.
Thank you. Let me just try to put a bow on this. Transactions conducted via the blockchain networks are recorded on a public ledger. So let's start there. So this includes technical information like the transaction hash, the sender's wallet address, and the recipient's wallet address. In many respects, this provides greater transparency than what exists with traditional cash transactions, which we've talked about. So because digital assets reside in a blockchain, law enforcement can trace transactions and link specific tokens to individual wallets. Has this been done? Yes. The Colonial Pipeline ransomware case is actually a clear example of this capability in action. Under this bill, intermediaries remain subject to SEC and CFTC regulations, as well as Bank Secrecy Act and anti-money laundering requirements. That's really important to keep in mind, because from the amendment and from some of the dialogue, you might think that's not the case. I'm going to repeat it because it seems like we're coming back to it all the time. Under this bill, intermediaries remain subject to SEC and CFTC regulations, as well as Bank Secrecy Act and anti-money laundering requirements. The amendment fails to reflect the fundamental characteristics of blockchain technology. It ignores the current methods law enforcement uses to monitor and respond to illicit activity on public blockchains. Therefore, I would recommend a no vote. I'll yield back.
Mr. Ogles yields back to the chair, who seeks recognition. Dr. Foster, recognized to strike the last word.
Yeah, thank you. I just want to make a couple quick points. Trump's Treasury Secretary Mnuchin in 2020 proposed KYC wallets. Okay, this is not a new idea, and it does not have to be technologically intrusive at all. You can simply, when you want to spin up a wallet, you go and get the wallet KYC'd. If you have a bank account, a bank that's already KYC'd you just say, here's my new wallet associated with that. This thing is something that can happen under the hood, and it will be not intrusive on any of the players. Just want to make that fundamental point. It's not, this is not a new idea. It's not difficult to implement, and it will be transformative to our ability to prevent illicit activity. That's all I wanted to say.
Will the gentleman yield?
We'll yield back.
Gentleman yields to Mr. Sherman.
I'll yield to
Mr. Sherman. Yes.
Thank you.
Seems to be a terrible dispute here. We've got Mr. Davidson saying that crypto will liberate us from the government knowing anything, and will be as good as if we printed up $10,000 bills or $50,000 bills, and you could go in person and do your transactions with scarcely a record. And then Mr. Stiles says, no, this is going to be more intrusive, and the government's going to be able to enforce its laws better. I'm Mr. Davidson on this. Hate to take sides between my two friends. Mr. Davidson is absolutely right. Under this bill, tax fraud remains illegal. Fentanyl finance remains illegal. Hamas financing remains illegal. It just becomes absolutely impossible to enforce the laws. That's like saying we shouldn't have police because good people wouldn't steal things from stores and wouldn't burglarize houses. We have police because not everybody is unwilling to commit crime. And that applies to crime in the streets, and it also applies to crime in the streets, in the suites. So, yes, this bill does not legalize fentanyl finance or tax fraud, but it makes it it provides a superhighway to those who want to violate those laws. I speak as the former head of the second largest tax agency in this country. If this bill goes forward without this amendment, then the income tax becomes just a tax on wages, because so many of our business transactions will never be known to the IRS. I know that every time a billionaire cheats on their taxes, a member of the Freedom Caucus earns his wings. But I, for one, don't want to make it easier for criminals, whether they're burglarizing houses or whether they're financing fentanyl, whether they're engaged in tax fraud or whether they're avoiding our sanctions and evading our sanctions laws. And I have not claimed that this bill legalizes anything that's illegal. It just makes it impossible to enforce. So with that, I would yield back to the gentleman from Illinois.
Yeah, thank you. I'll just close with one point. The problem is not that we won't have regulated exchanges. The problem is it will turn those regulated exchanges into very convenient on and off ramps for the unregulated, dark side of the crypto industry. And I think we all understand that. We just talk past each other. Thank you. Yield back.
Gentleman yields back. Who seeks recognition? Is there further debate on the amendment? If there's no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. We'll now move.
I ask for a recorded vote.
Gentleman from California requests a recorded vote. Recorded votes requested. Those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on this amendment are postponed. We'll move to the next amendment. Who seeks recognition? Mr. Sherman.
Amendment 054.
Mr. Clerk, look for Sherman 54. We'll pause while it's distributed. The gentleman from Wisconsin reserves a point of order.
Be short, the next one will be long. Okay, good.
Thank you, sir. I don't have wings yet, so I'm doing something wrong.
You'll get there. How long have you?
I haven't gotten in the right line. I don't know what's going on here.
Okay. No, but I think police.
Mr. Stahl, have you reserved a point of order on this one? You did. He has reserved. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Sherman of California, designated as Sherman 54.
Without objection, the amendment is considered read, and the gentleman from California is now recognized to describe his amendment. You have 5 minutes.
One last comment on the last amendment. I don't believe that our police should be blinded in order to enforce the laws that can be violated on the streets. And I don't believe that our financial law enforcement agencies should be blinded either, because I think laws should be enforced. This amendment 054 is the least significant of my amendments, and I will speak just briefly. I've illustrated how this bill makes it impossible to enforce the income tax except with regard to wages, where it's always reported on the W-2 form. There is one tax that I don't like that the Republicans are trying to impose in their one beautiful bill, and that is a tax on remittances. So I've got the poorest people in my district struggling and then sending a bit back to their mothers in Guatemala, to their children in Mexico, and this bill would impose a 3.5% tax on those remittances. I'm opposed to that tax. But we have, when it comes to remittances, we say the Crypto Council for Innovation states remittances can be the lifeline for millions of families worldwide, and then describes how crypto is the answer and will make those remittances more effective. Well, guess what? You're never going to be able to collect your 3.5% tax on remittances if they're made in crypto. So this amendment would delay the effectiveness of this bill until the Commissioner of the Internal Revenue Service can certify that this bill will not make it impossible to collect this tax should it be adopted. And I guess one advantage of crypto is this tax, which is truly a mean-spirited tax, will not be collected in the future, if this bill passes without my amendment. So I offer this amendment to illustrate that this bill will not only prevent collection of the taxes that I like to see collected, it'll even prevent the collection of the taxes that I don't want to see collected. Though, of course, I'm in favor of full compliance with laws and disagree with any human being in the United States who wouldn't be who wouldn't live under our laws. With that, I'll yield to anybody who wants me to yield, and seeing no, and I'll yield to the ranking member.
Thank you very much. I have a question to ask. This is an important issue. We have so many areas in this country where remittances are absolutely necessary for families that are living in areas where they have no opportunity to have access to funds and jobs and support in their countries, their governments, et cetera, et cetera. What I would like to ask you to explain a little bit further, are you suggesting that on top of the extraordinary costs that we encounter now in the sending of these remittances, that it is being suggested there would be an additional tax on the top of that?
The so-called big, beautiful, ugly bill does impose a 3.5% tax on remittances. That is on top of the cost of sending the remittance, which averages 6.2%, or if people use crypto, they've got to earn dollars in our districts, convert it to crypto at a cost, send it to their relatives abroad. That person then has to convert it. So this is a 3.5% tax on top of what under the current system is another 6.2% tax cost of sending the money, and under crypto would also be a 6, 8, 10% charge as well. So the poorest people in the country doing what we should all applaud them for, supporting their mothers, supporting their children, will face an additional 3.5% tax. And this bill, I guess the one good thing about this bill is that although there'll be conversion charges front and back, at least you'll be able to evade a tax. Of course, I don't support any tax evasion.
Reclaiming my time, I
And
support
I yield back.
Mr. Sherman's amendment. I think it makes a lot of sense. And of course, been concerned about the cost of remittances, and we don't want to exacerbate that in any way with any extra taxes that would be attached to the cost of already transmitting these.
Mr. Chairman's time has expired.
Yield back.
Does the gentleman insist on his point of order?
The amendment's not terribly germane, but I don't need to insist on the point of order. I'm happy to vote on the merits.
Gentleman withdraws his point of order, and the chair concurs that it's not a germane amendment. We are proceeding. Does anybody seek recognition? Ms. Tlaib, you're recognized to strike the last word.
Thank you, Mr. Chair. I would have an amendment at the desk, but it's...
We're still on Mr. Sherman's
Oh,
amendment.
no, then I'm
Yep.
sorry.
Who seeks recognition? Recognize myself for 5 minutes. The amendment requests the Secretary to certify that digital assets cannot be used to circumvent a law that hasn't even been enacted yet. Circumventing tax laws is wrong, and we should continue to seek to close the tax gap between what is owed and what is collected. But this amendment, in my view, is unserious. It asks the Secretary of Treasury to prove a negative that no digital asset can be used to avoid compliance. This bill has not even, as I say, been enacted yet. So I urge a no vote on this amendment, and I yield back the balance of my time. Who seeks recognition? Is there further debate? If there is no further debate, the question now occurs on the amendment from the gentleman from California. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it, and the amendment is not adopted. We are now ready for the next amendment. Ms. Tlaib, you want to be recognized?
I have an amendment at the desk.
Is that?
Are you in a special rush or something? Okay, then I've got another. My last amendment.
This is just a moment of personal heartbreak for me. The clerk, Mr. Sherman from California, has an amendment. The desk will pause while it's distributed. Yeah. The gentleman from Tennessee, Mr. Ogles, has reserved a point of order.
Reserve point of order.
Yes, 55.
Mr. Clerk, you have Amendment 55, Mr. Sherman. Yep. Mr. Ogles has reserved a point of order, and the clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Sherman of California, designated as Sherman 55.
Without objection, the amendment is considered read, and the gentleman from California is recognized on his amendment. You have 5 minutes.
If you were accepting any amendments, you might accept this one. It's consistent, I believe, with the intention of the bill, unless the bill has nefarious intentions not previously disclosed. There have been a lot of arguments as to whether crypto is a security, is not a security. What we all agree on is that stocks and bonds are securities. And in the future, these stocks and bonds may be tokenized, put on a blockchain, or otherwise use technology that hasn't been used for stocks and bonds until now. I don't think it's the intention of the authors of this bill to say that the SEC will be deprived of jurisdiction over the trading of stocks and bonds simply because new technology is used to account for or transfer stocks and bonds. So regardless of where you stand on crypto, if you think the system we have now, where once you reach a certain size in terms of the number of shareholders you have to register your security with the SEC. The SEC makes sure that you have information for stockholders. This has led to the most successful capital markets in the history of the world by far, comprising over $115 trillion. I don't think it might be the purpose of a few supporters of this bill to completely take the SEC out of regulating stocks and bonds simply because they can be put on the blockchain or tokenized or in some other way be classified as a digital asset under the terms of this bill. So if it's not your purpose to, in addition to opening the floodgates on cryptocurrency, to completely eliminate our securities laws with regard to stocks and bonds, I hope you will accept this amendment. Otherwise, we are stuck with a definition in the bill that says any digital representation of value which is recorded on a cryptographically secured distribution ledger is subject to this bill and is not subject to our securities regulation system, a system that has served this country quite well since the 1930s. Looking around to see if anybody wants me to yield time to them. Continuing to look, and I yield to the gentleman from Massachusetts.
Yeah, we've had this, I thank the gentleman for yielding. We've had this debate before when when the previous chairman, Mr. McHenry. That's pretty bad, right? When you're gone, you're gone. When thank you. Probably come back as a lobbyist or something. But good man. But we shared this concern that, okay, we've got the deepest markets in securities. We are the world's envy in terms of what we do on Wall Street with securities. We have great customer protections. We have great investor protections. We attract capital investment from around the world because of the integrity of our securities laws, and they have been well tested. Most of the the laws around securities have been passed by Congress at the request of securities firms in a way of strengthening those markets. And so now what we've done is we've created this weak regulatory regime for crypto. And all an enterprising securities firm will have to do is just simply tokenize their securities and move over to this weak, inefficient, abuse-prone, no investor protection system that we're creating here in the market structure bill for crypto, and that all of that business will migrate to a lightly or weakly regulated system. And that's the issue that the gentleman from California has identified in this amendment. And I think he's got a good solution. It's simple, straightforward, and eventually we're going to have a longer conversation about how to prevent this. But I certainly think the gentleman's amendment is more than adequate in addressing this problem, at least in the short term. With that, I yield back.
Gentleman yields
back to the
Mr.
gentleman.
Sherman, who yields back to the chair.
Any security.
Who seeks recognition? Mr. Ogles, would you withdraw your point of order?
Withdraw. Mr. Chairman,
Mr. Ogles, you're recognized.
move to strike the last word.
Gentleman's recognized.
I yield time to you, sir.
I thank the gentleman from Tennessee for yielding, and I want to thank, again, Mr. Sherman, for another amendment, this one on target rather than a couple of near misses. In my view, this amendment is unnecessary as it's precisely in the bill on page 23 of the Financial Services Amendment in the nature of a substitute. The definition of a security under the securities laws already covers a stock and bond, and the definition of a digital commodity clearly excludes securities from the definition. And so I believe your amendment's unnecessary. It's already included in the bill. And happy to, talk further, but if you want to look at page 23, but that's my view. And I'll be happy to yield to you or let somebody point that out. The actual language is any security other than a note, investment contract, or certificate of interest or participation in any profit-sharing agreement. That's the definition of a security. And then which includes stocks and bonds, and then a digital commodity specifically excludes and clearly excludes securities from the definition.
May have drafted this amendment before I saw.
That's well, that's 100% possible. It is.
In nature and a substitute.
Would the gentleman like to withdraw his amendment?
I will withdraw my amendment.
The gentleman withdraws his amendment. I thank the gentleman from Tennessee for the time, and I yield back to him.
Mr. Chairman, I yield back.
The gentleman yields back to the chair. Thank you very much. Is there further amendment?
Sorry.
We now recognize the gentlewoman, and she has an amendment at the desk. Let's pause for its distribution.
053, please.
And do you have the number? What's your number, please, ma'am?
053.
053.
Amendment at the desk, yeah. Thank you.
Mr. Chairman, I'd
Gentleman from Tennessee.
I'd like to reserve a point of order.
The gentleman reserves a point of order.
Thank you.
The clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Ms. Talib of Michigan, designated as Talib 53.
Without objection, the amendment is considered read, and the gentlewoman from Michigan is recognized to describe her amendment.
Thank you, Mr. Chairman. This is about conflict of interest that we already know has occurred or will reoccur in the future unless we prevent them. We already have seen many conflicts of interest that can arise when crypto exchanges are allowed to affiliate with private funds. Before imploding, we all know that FTX, Alameda Research were rife with conflict of interest. To name just a few, I believe FTX lent their customers' assets to Alameda Research, and FTX delayed its margin calls for Alameda and likely charged it a lower trading fees. And so, Mr. Chairman, again, we can see right here that they profited from that conflict of interest, and of course, when the customers are the ones who lost money there. The conflict of interest here, what we're trying to prevent, is between private funds and exchanges that exchanges have not gone away. Of course, we know this, but that's what we're trying to prevent here. I want to look at Coinbase and its capital arm, Coinbase Ventures funds, crypto startups, who can issue and trade assets on the Coinbase exchange. This means the exchange is incentivized to increase demands for startups funded by Coinbase Ventures. And so Coinbase Ventures is incentivized to fund more and more projects that can be traded on the exchange, so it makes the transaction fees. So the most basic transparency has already proved challenging. So Coinbase has already listed at least 8 crypto tokens on its exchange without disclosing that it had financial interest in such products through its investment arm. So these are not isolated cases, Mr. Chair, and such conflicts of interest will happen again, but we can prevent it with this amendment. This prevents digital assets from being traded on any exchange or platform that controls or is controlled by a private fund. We don't have to repeat this mistake, of course, of the past, and we can and must establish better investment protections. These are blatant conflict of interest. That's all we're trying to prevent here. So I really ask my colleagues to support this amendment, and I yield the balance of my time to the Ranking Member Waters.
Gentlewoman is yielded to you.
Thank you very much. I commend my colleague, Ms. Talib, for offering this amendment, which would prevent digital assets from being traded on any exchange or similar platform controlled by a private fund, such as a hedge fund. As Ms. Talib so aptly noted, there have been several examples of conflicts of interest between hedge funds and crypto exchanges in the past few years, most notably with FTX's exchange and its affiliated hedge fund, Alameda Research. In that case, as you may recall, Sam Bankman-Fried used his customers' crypto on the FTX exchange as his own personal piggy bank to make risky bets at Alameda. FTX users ended up losing $8 billion. This amendment prevents future bad actors from trying to fleece exchange users in the same way again. In addition to conflicts, hedge funds, if allowed to own crypto exchanges, could gain privileged access to fund data and therefore a distinct advantage over other market participants. Today, hedge funds cannot control exchanges and certainly can't get privileged access to an exchange. But nothing in this bill would prohibit a hedge fund from getting such access if it owns a crypto exchange. Moreover, the hedge fund would also have access to the volume and direction of trades on an exchange and be able to use that information to trade ahead of other investors. So I applaud Ms. Talib for offering this amendment, which attempts to close what is very, very clearly a huge conflict of interest and loophole. I urge members to support this amendment, and I yield back.
Gentlewoman yields back to Ms. Talib. Ms. Talib yields back to the chair. Does the gentleman from Tennessee insist on your point of order? Gentleman from Tennessee withdraws the point of order. Who seeks recognition? Mr. Stile, you're recognized to strike the last word.
Thank you, Mr. Chairman. The underlying amendment here is unnecessary. Why? The Clarity Act already covers trading platforms at their appropriate market regulator. The CFTC already oversees entities for conflict of interest. These entities have obligations under the law and have to fulfill them. For example, they have the obligation to protect consumers and to make sure that the facilities and services they offer are provided in a fair and open manner. The SEC, the Commission's rulemaking would apply to relevant platforms, including rules prohibiting fraud and manipulation and any unfair discrimination against market participants. Because this amendment's unnecessary, I'd recommend a vote against it. I may suggest, based on the concerns as raised in the amendment, those that share these concerns actually may find reasons to vote for the underlying text of the Clarity Act, which actually puts in place a regulatory framework that is clear, that operates, and would actually, I think, address some of the concerns raised by the gentlewoman who brought forward this amendment. So I'd recommend a no vote on the amendment, but a yes vote on the underlying bill, the Clarity Act. I yield back.
Is there further debate? Hearing none, there's question occurs on the Tlaib amendment. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Nay. In the opinion, sure, the nays have it. The nays have it. The amendment is not adopted. Is there further debate on the are there further amendments?
All right.
Further amendments?
Yep, and it's, I have an amendment at the desk labeled T09.
Ms. Tlaib has an amendment at the desk labeled T09. Is that T09? Do we have that? We'll pause while we find that amendment.
Oh, can I request a recorded vote, or is it too late?
It's too late.
Really? You let me?
Mr. Stiles reserves a point of order. Understand. I'm sorry about that. Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Ms. Tlaib of Michigan, designated as H.R. 3633 T09.
Without objection, the amendment will be considered read, and the gentlewoman from Michigan is now recognized to discuss her amendment.
Thank you, Mr. Chair. So this amendment would prohibit any digital asset issued by a company owned, affiliated, or controlled by the President of the United States or their family members from being required to be used in transactions with the government. Now, if you have to pretend the current president is not the president to understand, we don't want to set a dangerous precedent, because again, if it's a different president that maybe you don't like, again, we don't want to have this as in place to allow it to happen. Again, on January 17th, we already know in 2025, 3 days before the president, the current president was inaugurated, he launched his own meme coin. Then in March, World Liberty Financial launched its own stablecoin conveniently named USD1. USD1 was launched a week before we marked up stablecoin legislation. President Trump has already increased his net worth by $2.9 billion through corrupt crypto schemes. Companies are flat out saying that they are purchasing digital assets associated with the president to buy influence and access. I'm not saying this. They're saying this publicly. It's bad enough that shady business owners, corporations, or foreign actors can pour millions of dollars into ventures financially benefiting the president. Now DOJ has floated around offering HUD grants on blockchain. RFK said he wants to put the government on blockchain, as has Elon Musk. Many are worried, again, the President Trump's executive order on so-called modernizing the payment system could open the door to paying taxes in stablecoins like President's USD1. Now, if my Republican colleagues, and I'm saying this sincerely, are tired of hearing us point this out, then you should do something to address the problem. President Trump could require the Americans pay their taxes with his stable coin. It's not that far-fetched. It could be easily done. He could require that housing grants are dispersed through his stable coin. Americans are already struggling to make their mortgage payments. They're struggling to pay for groceries. Requiring them to make payments in currency they don't even use will not help working class Americans. It will hurt them. Again, officials in Trump's administration want to, quote, this is them saying this, put the government on blockchain, end of quote. They've said this. This is a bad idea, and it would allow the president to continue to profit off of the presidency. We as House Financial Services Committee must be clear that this is absolutely unacceptable. And Mr. Chair, again, if it requires us to understand we cannot set a dangerous precedent here, pretend he is not the president currently, and maybe you can understand that we don't want current or future presidents to be able to do this. And so again, I hope my colleagues will please have the courage to stand with us to make sure that we have this protection for the American people. With that, I yield the balance of my time to Ranking Member Waters.
Yes. Thank you, Ms. Tlaib, for offering this necessary amendment, which would restrict any crypto issued by a company owned, affiliated, or controlled by the president or their family members from being required to be used to conduct transactions with the government. We have already seen very concerning reports that the Department of Housing and Urban Development is looking into stablecoins for their grants. Some experts have cautioned that Trump executive orders would direct or could direct stablecoins, possibly even Trump's stablecoin, to be used for paying taxes and receiving Social Security payments. If you're just tuning in, the President of the United States now has his own stablecoin through his World Liberty Financial Project. And when people or countries like Abu Dhabi purchase his stablecoin, he makes money on the interest. It's not hard to see where this is headed. The entire country may be required to use Trump's coin, which will mean every one of us will be helping line the pockets of the president. My constituents don't want their hard-earned dollars going into Trump's pockets, and neither should you. So we must pass this amendment in order to stop this from becoming a reality. I urge members to support this amendment, and I yield back.
And thank you so much, Ranking Member. And Mr. Chair, where in the bill does it even prevent conflict of interest? Like anywhere in the provision that would prevent or at least require some sort of study of potential conflict of interest that might arise? Again, he's made $2.9 billion alone already. And I'm just, like, where in the bill does it even address conflict of interest?
The gentlewoman's time has expired. Does the gentleman from Wisconsin?
I do not. I withdraw my point of order.
Gentleman from Wisconsin withdraws his point of order. Who seeks recognition? Gentleman from Wisconsin.
Move to strike the last word.
Yeah, the gentleman's recognized to strike the last word.
Mr. Chairman, we have yet another amendment that is unnecessary. It's starting to feel like the Model UN in here. It's like we need an amendment to make sure you're allowed to breathe air. Oh no, the bill doesn't say you're allowed to breathe air. You can breathe air. And so as we're looking at the amendment, let's just kind of dive in to why it's unnecessary. There's nothing in the underlying Clarity Act to suggest that without this language, the government would require the use of a digital asset to enter into any transaction with the government. In addition, the laws of the committee is considering for both payment stablecoin and digital commodities that would provide broadly and universally applicable rules to any issuer regardless of who they are. The best way to ensure Americans have diverse financial and payment options available is to support stablecoin legislation and digital asset market structure legislation. The underlying amendments unnecessary. I recommend a no vote. I'll yield back.
Gentleman yields back. Who seeks recognition? Mr. Lynch of Massachusetts.
Thank you very
Recognized to
much.
strike the last word.
Thank you, Mr. Chairman. I happily and enthusiastically support the gentlelady from Michigan's amendment here. We know what's going on at the White House, right? All of us. It's not a secret. The president has just been blatantly just outrageous in his money-making ventures, you know, monetizing his office. You know, he used to call crypto a scam. It was a big scam. So what does that make him now? You know, he announced, you know, a crypto reserve, Bitcoin reserve, I guess. He's doing everything he can to push up the value of his crypto holdings. He's limited the oversight that the Department of Justice used to have over crypto. They're gone now. He disbanded that. So he's clearing the decks here to allow himself to make as much money as humanly possible while he's in office. He's cashing in. He knows this will be his last term. He's just taking every nickel he could possibly get. That's his game here. That's his game. And it breaks my heart that my dear friends on the other side, good people, are allowing this to happen. But I am proud that the gentlelady from Michigan is stepping up. She's not afraid of Donald Trump. She's not afraid. She speaks the truth. She's got a good amendment here that will stop the scam by the president and his family. She's fighting for the American taxpayer here. She's fighting for democracy and the rule of law. And we all should support her amendment. This is the right thing to do. Very plainly stated, and she's doing the right thing. And she should be applauded for her good work. And I certainly intend to vote yes on this, and I would yield additional time to any of my colleagues on this side. Oh, I'll yield to the gentlelady from Michigan. How about that?
No, thank you to my colleague for, I know maybe it's just not going to work, but I mean, this is a president took a plane from a foreign government. I mean, our residents don't have the ability to do that, to get him to work for them. Like, don't take me like what I'm saying here. I mean, companies are flat out saying very like publicly that they are purchasing digital assets associated with the president to buy influence and access. It's very clear. So, I mean, even if we put in there, again, it's not specifically about, but any president, right? That if there's a conflict of interest here, that we are not going to allow them to do it. And I mean, Mr. Chair, through you, I mean, it's really important to know these are not folks just, you know, on social media. These are actual Secretary Kennedy has said it publicly that they want to put government on blockchain. I just feel like it's really important that if there's any bipartisan support, it's saying no matter who it is, if there's conflict of interest, that we that we're going to prevent it, that we're going to protect the American people from it. So I just really urge to my colleagues to really take this seriously. The sitting president of the United States made $2.9 billion as our president. Again, sitting in the Oval Office, running his businesses, running this crypto scheme, and we should not be okay with it. It's like, it's not even hiding it. I don't care if it's the crypto scheme, the airplane for Qatar, I don't care what it is. It is very clear that, there are schemes going on, things that, again, that are really putting the American people at risk. No one should be able, again, to have this amount of, power and so forth without being checked. Again, Mr. Chair, with all due respect, let's just acknowledge that this is an issue and let's put it in the bill. And let's make sure that, again, we're protecting the American people in regards to these conflict of interests.
Thank you, reclaiming my time. So what the gentlelady from Michigan is targeting here is Liberty Financial. So this is a big scam. So it's a partnership scam. So you got Donald Trump, his son Donald, his son Eric, his son Barron. So they're half of the board. They control half. And then Steve Witkoff, get this, he's the special envoy to the Middle East. And his kids, you know, Johnny Witkoff, Harry Witkoff, they're partners too. So, and it gets better. Qatar, which is in the Middle East, where Witkoff is the special envoy to the Middle East for Trump.
Gentleman's time has expired.
No, it's not. I got 22 seconds left.
Go ahead, keep going.
No, you're going up. Going the wrong direction.
Oh, is it?
Yeah.
All right.
So
Yeah, I got 29 now.
so be nicer. We'll be back to you soon.
All right.
The gentleman's time has expired.
I'll fill in the
31
blanks later,
seconds
yeah.
ago.
I was at a problem.
Who seeks recognition?
Math was not my strong
Mr. Chair,
suit.
I move to strike the last word.
The gentlewoman from Texas.
Thank you, and I wholeheartedly support the amendment by Ms. Tlaib. I agree with her, 1,000%. You said earlier that this bill was not about any individual, and you're absolutely right. It's not just about any individual. It's about any individual today, tomorrow, and forever, because law is forever until it gets changed again. So when she talks about this, it's, we all know that you know who the individual is because you brought it up. You're the one who said individual, and I'm assuming you were thinking of the felon 47 in the White House. But the reality is this can happen with any future president, any future first family, any future envoy, and we need to put a stop to it now. And I really am just so disheartened to think that everybody on the other side of the aisle just thinks it's okay, that it's hunky-dory, and it's not. So I wholeheartedly support this amendment, and I give the remainder of my time to Mr. Lynch so that he can finish his arguments that he was making before his time ran out.
Thank you. So I was trying to draw the connections here, connect the dots between the Trump family and the Witkoff family and the $2 billion contribution. So Zach, it's not Harry, it's Zach Witkoff is the founder of World Liberty Financial, which is this crypto scam that the Trump family and the Witkoff family are using. And so at this conference in the Middle East, in Qatar, oh no, it might have been UAE in Abu Dhabi, Mr. Witkoff is the one. Young Zach, he's the one that announced, okay, the UAE is going to donate $2 billion, going to buy $2 billion, invest $2 billion in the Trump crypto scam. And his dad is the special envoy to the Middle East. So, talk about transparent. And we're the oversight committee, right? So what are we going to do about it? Exactly. But what the gentlelady from Michigan is doing is what we should be doing, is standing up, fighting for the American taxpayer, fighting for the American investor, fighting for the integrity of our financial system, and holding these people accountable who are absolutely selling off any credibility we have in the world to put a buck in their pocket. They're selling the White House. They're literally, everything's for sale. It's a fire sale. And it's shameful. And it's this committee's responsibility. We're the ones who should be stepping up and doing the right thing here and holding these people accountable. There are laws and there are opportunities for us to show the American people that we have their interests in heart. And I think the gentlelady from Michigan is showing that tonight. She should have more support than just the members on the Democratic side. I'm going to yield back to the gentlelady from Texas, and I thank her very much for her kindness and courtesy in allowing me this time. Thank you.
Thank you. And Mr. Chairman, I just want to close by just saying that I really don't know what argument we can make to get any support on this amendment from their side of the aisle, because to me, it is just so crystal clear, the corruption, the self-dealing, the conflicts of interest, the dishonesty, the fraud, the cashing in. I mean, this administration is about corruption and cashing in, and then when it comes to immigration, cruelty. It's just baffling to me that some of the members of the other side of the aisle that I have a lot of respect for on so many other issues just don't see this or just refuse to see it. But the public can see it, and it is our responsibility to shine more light on it, and that's why I support Mr. Leib's amendment wholeheartedly. With that, I yield back.
Gentlewoman yields back. Is there further debate on the amendment? There's no further debate. The question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye. Aye. All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted.
Mr. Chair,
Ms. Tlaib.
I request a recorded roll call.
A recorded vote has been requested. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceeding on this amendment are postponed. We'll now move to the next amendment. Mr. Lynch.
Mr. Chairman, I believe I have an amendment at the desk, Lynch number 1.
Lynch number 1, we'll wait for it to be distributed. Mr. Stile. A point of order has been reserved. Somebody's
Thank you very much.
Thank you very much.
Will the clerk confirm that this is Lynch 036? It is confirmed. And Mr. Lynch, that's what you have, Lynch 036? Just want to make sure I have the right amendment.
Yes, it is, 306, that's right.
Very good. The clerk will report the amendment.
An amendment to the
Without
amendment.
objection, the amendment is go ahead. I'll let you read further.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Lynch of Massachusetts, designated as Lynch 036.
Without objection, the amendment is considered as read. The gentleman from Massachusetts is recognized on his amendment.
Thank you very much, Mr. Chairman. Mr. Chairman, to begin with, I'm referring to, this is a New York Times report. It's about 17 pages. The title is Secret Deals, Foreign Investments, Presidential Policy Changes, The Rise of Trump's Crypto Firm. And then the subhead says, World Liberty Financial has eviscerated the boundary between private enterprise and government policies in ways without precedent in modern American history, period. And it is by Eric Lipton, David Yaffe Bellany, and Ben Protest, and I ask unanimous consent to enter this into the record.
Without objection.
Thank you, Mr. Chairman. First and foremost, I want to go on record to say that, like Ms. Garcia said earlier in this hearing, we don't think that any president of the United States should be issuing, endorsing, or profiting from cryptocurrency while in office. Unfortunately, that's exactly what President Trump is doing. And I am deeply disappointed that congressional Republicans are willing to allow this unprecedented case of blatant corruption. Since my Republican colleagues will not join with Democrats to build strong ethical guardrails that prevent the president from using cryptocurrency to sell the White House to the biggest digital wallet, maybe they would at least consider some transparency for presidents like the current one who profits from crypto corruption. This amendment would require the inspectors general of the Treasury and the SEC to conduct an annual report on any president's cryptocurrency holdings. The annual reports must include 3 critical pieces of information that will help prevent corruption and provide transparency for the American people. First, the Inspector General reports must expose which foreign interests have invested in a president's cryptocurrency. Next, including identify any quid pro quo or favorable treatment. Next, they must describe in detail the fraud or any financial losses to Americans associated with any presidential cryptocurrency holdings. And lastly, the IGs must show the ways individuals have influenced public decisions by owning or investing in presidential crypto businesses. Again, favorable treatment or security guarantees, whatever that foreign government is getting in return for investing in the president's cryptocurrency. While my Republican colleagues would prefer we bury our heads in the sand and ignore the obvious conflicts of interest between President Trump's crypto ventures and his actions to deregulate the crypto industry, I refuse to sit back and allow this corruption to continue. This Republican bill does nothing to prevent the president from furthering his corrupt enterprise, and if anything, it creates an easier pathway to do that. In recent weeks, actions taken by the president have been so outrageous and blatantly corrupt, it is evident he is no longer worried about concealing his conflict of interests. He knows that the Republicans on the Oversight Committee are afraid to do their jobs. Trump Media and Technology Group, the parent company of Truth Social, closed a $2.4 billion capital raise for a Bitcoin treasury. This move allows Trump Media to position itself as one of the largest Bitcoin holders among publicly traded U.S. companies, directly competing with other corporate Bitcoin treasuries. Additionally, the SEC dismissed its charges against Binance and its founder, CZ. Trump family members have engaged in talks to acquire a stake in Binance US, which is the American arm of Binance. And at a conference in Dubai, World Liberty Financial announced, and this was Zach Witkoff, announced that an Abu Dhabi-based investment firm would make a $2 billion investment in President Trump's crypto exchange, Binance, using Trump's stablecoins and making Trump's stablecoins one of the top 10 stablecoins in the world. A foreign government will be making a massive cash contribution to President Trump's crypto venture, which stands to make the Trump family hundreds of millions of dollars. This president does nothing unless there's a buck in it. He does nothing unless it furthers his own financial interests. And these recent moves will come at the expense of Americans and our financial system and our credibility. Already, 600,000 investors have lost $4 billion after investing in Trump's meme coin. This includes $117 billion in losses after Trump announced the infamous meme coin dinner at his luxury resort. As a legislative body, we should not be abdicating our responsibility to oversee the executive branch. Instead, we should be calling for investigations into President Trump's abuse of the presidency to line his pockets with billions of dollars. I urge my colleagues to support this amendment, and I yield back.
The gentleman's time has expired. As a reminder, members are directed to maintain and uphold decorum in this committee. Pursuant to Rule 17, members should not engage in personalities against the president.
I'm going to.
Excuse me, Madam Ranking Member?
I'm going to defy you.
You will not defy the committee, and we will all maintain decorum in this committee, including
Would the gentleman,
all members. No,
just so I can be clear,
it is the chair's time. The chair has reminded
I yield back.
The chair has reminded all members to maintain decorum and maintain the decorum of this committee. I withdraw my own point of order, and I recognize myself for 5 minutes to speak on the bill. We already have an Office of Government Ethics and Inspectors General across the agencies. If you think ethics laws aren't being enforced strongly enough, that isn't an issue with the digital asset market structure framework. This committee's job is to regulate digital assets with clear rules of the road. Some may wish this committee were the Oversight Committee. It's not. We should stay focused on the task before us. It's not often I quote Minority Leader Jeffries, but let me give it a shot here for a second. Minority Leader Jeffries noted the best path forward is, quote, a bipartisan solution in terms of legislation that is pending in the Congress, end quote. Minority Leader Jeffries actually stated that the minority should address their concerns with the president as a separate problem. Many of my colleagues in this committee voted on market structure legislation last Congress because the status quo is unacceptable. This amendment's unnecessary. The underlying legislation, the Clarity Act, is absolutely essential. I recommend a no vote on the amendment, and again, I will recommend a yes vote on the Clarity Act. I yield back. Is there further debate on the amendment? For what purposes, ranking member seek recognition?
I move to strike the last word.
The ranking member is recognized for 5 minutes.
I want to thank Mr. Lynch for offering this amendment. As it stands, the Calamity Act does nothing to limit President Trump's crypto corruption. While congressional Republicans are passing budget bills in the dead of night, cutting Medicaid, food stamps, and Medicare for working class Americans, President Trump is hosting meme coin dinners for foreign investors that pay millions to him to attend. Mr. Lynch's amendment would require that inspectors general at Treasury and the SEC investigate any digital asset holdings of the president, including any foreign interest relating to such holding. The inspectors general also must investigate any fraud or financial losses relating to those holdings that harm Americans and ways in which individuals may be gaining influence over public decisions by owning or investing in these digital assets. We've been over this many times, Mr. Chairman, but let's go through this again. President Trump launched his meme coin, then a captured SEC conveniently stated it would not regulate meme coins. President Trump launched his stablecoin, then we marked up stablecoin legislation that would allow the president to write the rules that benefit his coin. Donald Trump Jr., Eric Trump, launched his own Bitcoin mining company days after the SEC announced it would not regulate mining. We need to ensure that our agencies hold bad actors with political influence accountable. And so, I appreciate the work that Mr. Lynch is doing, trying to make sure that it is something in this legislation that would be able to prevent the President of the United States from gaining extraordinary wealth from the ownership of crypto. That's why I don't believe that the President of the United States, the cabinet members, the members of Congress, none of us should be able to own crypto. And so even though we don't seem to be getting through to the opposite side of the aisle, while it is so important for us to support the idea that the President of the United States and the cabinet and members of Congress should not own crypto, it is important that Mr. Lynch is saying, in essence, should he, if we are ignored, if we cannot prevail in what we would like to do, and as prevent the president, his family, the members of his cabinet, the members of Congress, et cetera, from owning crypto, perhaps he can, by some of the work that he's doing, prevent certain actions that the president could take, which amounts to the ownership, except it is described in a different way, in a number of ways, that he would be prevented from doing certain things. With that, I yield back the balance of my time.
The gentlewoman yields back. Is there further debate on the amendment? Is there further debate on the amendment?
Green from Texas, Mr. Chairman.
Mr. Green is recognized to strike the last word.
Thank you. I strike the last word and yield to Mr. Lynch.
thank the gentleman from Texas. Thank you, Mr. Green. Appreciate your courtesy. I just want to push back. I know the chairman said that nothing to worry about here. We've got inspectors general. We got people that look after this stuff. I just want to remind the chairman that when Donald Trump took office, he came in and fired all 17 inspectors general because he didn't like what they were doing. They were enforcing the law. They were providing oversight. Then, 24 hours later, the president gets sworn in on the 20th. 24 hours later, after President Trump's inauguration, the Department of Justice reassigns, his Department of Justice reassigns the whole senior leadership of the Cryptocurrency Crimes Unit, okay? So he reassigns them all. Then, 90 days later, the Department of Justice disbands the entire National Cryptocurrency Enforcement Team. So he has gutted that entire law enforcement framework that was overseeing, and investigating crypto crimes. He got rid of it. And that's part of his play here. That is part of his play. He's preventing the law from being applied here. He's thwarting the rule of law. And it is sickening for me to sit here and watch this go on and not hear a peep out of my Republican friends. This is a dark day in our country when good men and women do not stand up and fulfill their oath of obligation to make sure that the laws are applied here, and that we hold the president responsible for his violations of law and his exploitation of that office, that once noble office. It's shameful what has happened. With that, I just want to clear up, he has done away with the law enforcement around this. And there's no recourse. So it's not like, don't worry about it, somebody else is watching that. No, he's fired those people. He's fired, and he's put his own people in place. He likes people who do exactly what he says and who are afraid of him. You see, all the people around him are all afraid to differ with him on anything. And I want to thank the gentleman from Texas, Mr. Green, for affording me the courtesy, and I yield back my time to him.
I thank you, Mr. Lynch, for the amendment, which I shall support. I do believe that we have to have some guardrails, and I don't know that this is enough, but I do know that it's better than nothing. I yield back.
The gentleman yields back. Is there further debate on the amendment? Is there further debate on the amendment? If there's no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye. Those opposed will signify by saying nay. Nay. In the opinion of the chairs, the nays have it, and the amendment is not adopted. A recorded vote has been requested. All those in favor of a recorded vote, please raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. We'll now move on to the next amendment. Mr. Lynch?
Mr. Chairman, I believe I have an amendment at the desk. It is Lynch number 2.
The gentleman has an amendment at the desk. The clerk will please distribute the amendment. A point of order has been reserved by the gentleman from Tennessee, Mr. Ogles. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Lynch of Massachusetts, designated as H.R. 3633T07.
Without objection, the amendment is considered read. The gentleman from Massachusetts, Mr. Lynch, is recognized for 5 minutes on his amendment.
Thank you very much, Mr. Chairman. As I was describing in the earlier debate, the President of the United States, shortly after he was inaugurated, he announced a couple of things. He announced he was going to create a Bitcoin reserve, and he was going to be the biggest crypto president in history. And then he proceeded to fire the entire Department of Justice National Cryptocurrency Enforcement Team. This amendment would reconstitute that Department of Justice Crypto Enforcement Unit. This amendment would reconstitute the Department of Justice's National Cryptocurrency Enforcement Team with the Treasury Department and require the team to investigate President Trump's crypto business dealings and all presidents' crypto dealings. Less than 24 hours after the President Trump's inauguration, the Department of Justice reassigned senior leadership members who prosecuted cryptocurrency crimes. So literally getting rid of the cop on the beat. A few months later, the DOJ disbanded the entire National Cryptocurrency Enforcement Team. This team had previously brought cases against companies and individuals for cryptocurrency money laundering, including the case against Binance and its founder, Changpeng Zhao. It is noteworthy that just a few weeks ago, the SEC dismissed those charges against Binance and its founder. He goes by CZ. This comes after this comes after the Trump family members engaged in talks to acquire a stake in Binance, which is the American arm of Binance. The Department of Justice's Cryptocurrency Enforcement Team played a critical role in fighting against national security threats and crypto crime. It's been estimated that $40.9 billion was received by illicit cryptocurrency addresses in 2024. So this is huge. And $9.3 billion was lost through crypto cybercrime. And that group, that Department of Justice Cryptocurrency Enforcement Team, that unit is responsible for going after those crimes. So if we really are serious about maintaining the integrity of the White House and of our financial markets, we need to put this unit back in place. Just this week, federal prosecutors charged the founder of a US-based crypto firm with operating an international money laundering scheme that moved $500 million on behalf of sanctioned Russian banks. So this is unbelievable, and huge amounts of money. And meanwhile, we've taken out the cop on the beat to prevent this. We can expect this type of activity to continue and to grow if this bill were to become law. To further his wealth, the president is weakening protections against crypto crime, and Americans will pay the price. This committee should be working to increase protections against money laundering, illicit finance, and national security threats, but instead, this bill creates a framework that would legalize crypto crime and enable and abet crypto criminals and allow for increased money laundering. I urge my colleagues to ensure we have robust protections in place against crypto crime, and please support this amendment. Unless any of my colleagues needs a minute, I'm going to yield back the balance of my time. Thank you, Mr. Chairman.
The gentleman yields back. Is there further debate on the amendment? I'll recognize myself for 5 minutes. When it comes to entities named in the amendment, issuers, brokers, dealers, an alternative trading system, these already are regulated by the regulators described. The SEC and the CFTC is applicable based on the registrant. If you want to see regulation, oversight, and enforcement authority over digital asset intermediaries, there's a straightforward and clear way to do that. Vote for the Clarity Act. I oppose the amendment, and I yield back. Does the gentleman from Tennessee insist on his point of order? The point of order has been withdrawn. Is there further debate on the amendment? Is there further debate on the amendment? If there's no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye. All those opposed signify by saying no. In the opinion of the chairs, the nays have it, and the amendment is not adopted.
I request a roll call.
A recorded vote has been requested. All those in favor of a recorded vote shall raise your hand. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the Committee Rules. Further proceedings on the amendment are postponed. We'll now move on to the next amendment. Mr. Lynch has an amendment at the desk?
I believe I have an amendment at the desk. I
clerk
believe it's number 3, Lynch number 3.
The clerk will distribute the amendment Lynch number 3. The gentleman from Tennessee, Mr. Ogles, reserves a point of order. It appears everyone has a copy of the amendment. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Lynch of Massachusetts, designated as Lynch 35.
Confirming it is Lynch 35?
That's
Mr.
correct,
Lynch?
yep.
Very good. Without objection, the amendment is considered as read. The gentleman from Massachusetts, Mr. Lynch, is recognized for 5 minutes on his amendment.
Thank you, Mr. Chairman. Mr. Chairman, this amendment would amend Section 314B of the Patriot Act to include cyber-enabled financial crime and fraud to be covered under that section. This amends the Patriots Act, Section 314B, to include inquiries about cyber-enabled financial crime and fraud. So we're expanding the scope of the Patriot Act so that we can get at some of this cyber crime. This amendment would allow financial institutions with the ability to share information, as they do now on the traditional criminal financial activities, to better identify and report activity that may involve cybercrime. If this bill becomes law, crypto adoption will likely increase, and as a result, so will incidents of crypto crime. I've received numerous calls from constituents who have lost hundreds of thousands of dollars and their life savings after falling victim to an online crypto scam. Many of these constituents are older Americans who live off fixed income and retirement savings after serving 30-plus year careers as teachers or nurses. Unfortunately, this issue is not unique to my district. Incidents of crypto-related scams have skyrocketed in recent years. The FBI reported a 66% spike in crypto-related losses to consumers and investors, totaling $9.3 billion in 2024. More than half of all cybercrimes involve crypto. I want to repeat that. More than half of all cybercrimes involve crypto, with complaints more than doubling. Elderly Americans were particularly targeted, with individuals over the age of 60 filing over 33,000 complaints and losing a collective $2.8 billion. Given the anonymous nature and the speed of crypto transactions, it should come as no surprise as to why crypto products are uniquely suited for criminal activities. 98% of ransomware payments are demanded in the form of Bitcoin. The crypto industry's claims about the traceability of blockchain ignore the availability of mixers to hide illicit transactions. By the time an elderly person realizes they've been scammed and the scam is investigated, the money is long gone. That is what makes crypto products so attractive and useful to bad actors. Very little in this bill would stop any crypto-related cybercrime and fraud. And if anything, this bill would enable more scams to take place. While my Republican colleagues are determined to drive crypto adoption to satisfy the crypto industry, my Democratic colleagues and I are finding ways to protect vulnerable Americans from crypto cybercrime and ensure our financial markets remain safe. Mr. Chairman, I urge my colleagues to support this amendment and to ensure cybercrime and crypto crime is better detected and prevented. Thank you, and I yield back.
The gentleman yields back. Does the gentleman from Tennessee insist on his point of order? The point of order has been withdrawn. Is there further debate on the amendment? I recognize myself for 5 minutes. I appreciate the intention of my colleague, Mr. Lynch, as relates to the intent as described under this bill for the purposes of 324A. Does the mechanism for financial crime matter? I expand on my colleague's intent to expand 314A. Although I would encourage the sponsor, Mr. Lynch, to engage with National Security Subcommittee Chairman Davidson on separate legislation. Just looking at this amendment, I'm not sure what, quote, cyber-enabled financial crime activities, end quote, means, as it's not defined. In addition, it's not accurate to say this bill wouldn't do anything to address cyber-enabled, crypto-enabled cybercrime. It would subject intermediaries to BSA obligations as financial institutions. I appreciate the intent in which my colleague's amendment is offered. I do think there may be an opportunity to engage substantively on this, as there has been in the past some bipartisan support to work in this area. I think it's an opportunity possibly for the National Security Subcommittee between you and our chairman of the subcommittee, Mr. Davidson, to work forward on this. I don't think it's necessary in this legislation before us, and so I'd encourage my colleagues to vote no on the amendment, although I appreciate the intention in which it was offered. I will yield back. Is there further debate on the amendment? Ms. Presley is recognized to strike the last word.
Yes, move to strike the last word. I just wanted to thank Mr. Lynch for offering this common sense amendment. He's always championing our most vulnerable, especially our seniors. I do believe this amendment is, again, common sense, and it is germane to the legislation, and I urge all members to support it.
Does the gentlewoman yield back? The gentlewoman yields back. Is there further debate on the amendment? Is there further debate on the amendment? If there's no further debate, the question now occurs on the amendment. All those in favor signify by saying aye. All those opposed signify by saying nay. Nay. In the opinion of the chairs, the nays have it. The nays have it, and the amendment is not adopted.
Roll call.
The gentleman requests a recorded vote. A recorded vote is requested. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hands. A recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. We'll now move on to further amendments. Mr. Lynch has an amendment at the
Mr.
desk.
Chairman, I believe I have an amendment at the desk. That would be Lynch number 4.
The clerk will distribute the amendment. Lynch number 4. A point of order has been reserved by the gentleman from Tennessee, Mr. Ogles.
Thank you.
That's pretty fun. It's fun what people get excited about. It appears everyone has a copy of the amendment. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Lynch of Massachusetts, designated as H.R. 3633T08.
Without objection, the amendment is considered read. The gentleman from Massachusetts, Mr. Lynch, is recognized for 5 minutes to describe his amendment.
Thank you, Mr. Chairman. Mr. Chairman, my amendment would strike Section 502 of the bill, which sets a dangerous precedent and gives primacy to innovation above all else without consideration to other critical SEC mandates. Section 502 is unnecessary because the SEC's mission already fundamentally encompasses innovation. In fact, the SEC has a 3-part mission centered on investor protection, maintaining fair, orderly, and efficient markets, and facilitating capital formation. Innovation is not an end into itself. It is in the service to these three core goals. Furthermore, Section 502 opens the floodgates to weaponizing litigation. This innovation mandate will simply be manipulated and operated as a new legal avenue to challenge critical SEC rules. In line with its principles of innovation, this legislation also codifies the SEC's strategic hub for innovation and financial technology, also known as the FinHub. However, SEC Chair Paul Atkins has disbanded this same FinHub. This appears to be another example of the inconsistencies and contradictions we continue to see in the purported innovation goals of this legislation. Not only is this section unnecessary and risky, the purported innovation goals of this legislation are at odds with what we are seeing happen in the Trump administration. These kinds of inconsistencies and contradictions instead just cause confusion and raise more questions. To be clear, I believe innovation has the potential to improve our financial system and expand economic access. I've always supported policies that encourage safe and effective technology. However, innovation and investor protection do not need to be at odds. Utilizing a new technology to deliver the same products does not require a new regulatory structure. The crypto industry needs to stop using the guise of innovation to evade investor protection laws. I urge my colleagues to support this amendment, and I yield back.
The gentleman yields back. So the gentleman insists on his point of order. The gentleman from Tennessee withdraws his point of order. Is there further debate on the amendment? Is there further debate on the amendment? I'll recognize myself for 5 minutes. Appreciate my colleague's amendment. The section would not, though, as my colleagues say, place innovation above all else. Rather, would recognize it as part of the role of a financial markets regulator in the most dynamic economy on earth with the deepest, most liquid capital markets. This mandate is important because under the Gensler SEC, innovation was not only, it was not considered, but actively opposed to the detriment of the rest of the SEC's mission. I support the SEC considering innovation as part of its decision-making process. I'm also very pleased that Chairman Atkins has been prioritizing innovation through the agency to have a more forward-looking and agile regulator. And so I think it's important to maintain Section 502. I would not encourage my colleagues to vote yes. I'd encourage them to vote no on this amendment to not strike Section 502. I'll yield to the gentleman from Michigan, Mr. Hudson.
Thank you, Mr. Chairman. And I got to tell you, I have spent most of my 15 years on this committee dealing with capital markets issues. I chaired the Capital Markets Subcommittee. I was ranking member of the Capital Markets Subcommittee under various chairs, and your characterization of Chair Gensler is absolutely 100% correct. He absolutely stood in the way of innovation. He made that a reason for his existence, and it has cost us as a country. We are further behind, and it is time to rectify that. And I too am very glad to see that that the new Commissioner Atkins is taking a very different attitude. And with that, I just wanted to encourage my colleagues to vote no as well. I yield back.
The gentleman yields back.
Green
I
from
will
Texas.
yield back, but I will, if there's further debate, I'll now recognize Mr. Green to strike the last word for 5
I
minutes.
strike the last word and I yield to Mr. Lynch.
I appreciate the grounds of the objection. And I just want to say that Mr. Gensler, in my estimation, was one of the most decent and thoughtful and principled public servants that we have had in our government in a long, long time. I think his priority was, preserving investor protections, preserving the financial system as the envy of the world and as an engine of growth in this country. One of the most decent human beings I have met in my time here in Congress, and I don't think he had a hostile or inimical bone in his body in terms of what he was trying to do. He He was a principled and is a principled individual, and I'm happy to come to his defense based on his body of work as a public official. Thank you. And I yield back to Mr. Green, the gentleman from Texas.
I yield, Mr. Chairman.
The gentleman yields. Is there further debate on the amendment? Is there further debate on the amendment? If there's no further debate, the question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye. All those opposed signify by saying nay. Nay, in the opinion of the chairs, the nays have it. The nays have it, and the amendment is not adopted. The gentleman has requested a recorded vote. A recorded vote is requested. All those in favor of a recorded vote, please raise your hand. A sufficient number having risen their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. We may now move into the next amendment. Mr. Himes of Connecticut has an amendment at the desk.
Thank you, Mr. Chairman. Yeah, I have an amendment to the desk.
The clerk will please distribute the amendment.
Gentleman reserves a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Himes of Connecticut, designated as Himes 15.
Without objection, the amendment is considered read, and the gentleman from Connecticut is recognized to explain his amendment.
Thank you, Mr. Chairman. I'm not happy to be offering this amendment. I was doing my thing, as I have on these crypto bills. My standard for supporting stablecoin and FIT21 was very simple, not necessarily shared by everyone on this committee, or at least on this side of the committee, which is, are we making the status quo better? And make no mistake, FIT21 and this bill introduces risk into the system. But we were making good progress in our negotiations. I have deep concerns about Section 202 because it provides an exemption for the offering of digital commodities that I think is dangerous, but we made good progress in terms of at least making it smaller. We had a lot of other wins, but I have been consistent in the last week in hearings, in page turns, in a meeting at Coinbase in New York, in saying we need to do no harm to existing securities legislation, regulation, and I think we're making some progress. And critically, we need platinum conflict of interest prohibitions here. And out of goodwill and good faith that I have for the chairman, I'm not going to add to the thousands of minutes of description of why conflict of interest prohibitions are so necessary, but to say that unlike during FIT21, we have all been treated to one of the most egregious, shocking abuses from the White House. I promise I will keep this very short because we've covered this ground and beaten this horse, imaginable. And my Republican colleagues know that if the Bidens had done this, we wouldn't get near this building. It would be white hot with impeachment. So all I'm asking for in this amendment and I'm interested to see what the substantive arguments are against it, is that any elected official who is tasked with regulating this instrument that we're breathing life into, the digital commodity, not be able to issue a digital commodity. Now, the ranking member says she doesn't believe that we should be allowed to hold cryptocurrency. There's an active debate in this House over whether we should be able to hold individual stocks. I don't know what the right answer is there, but I do know that it is madness that we should be allowed to issue a meme coin or a digital asset or a digital commodity because it's just a vehicle for a bribe. And that should be as true of the freshman member on this committee as it is to the President of the United States, who is accruing increasing authority, thanks to the Supreme Court, over the independent regulatory agencies. So again, out of respect, I'm not going to pound the dead horse of why we're doing this, but to say that it's unimaginable to me that we would breathe life into a new concept, a digital commodity, give it the sheen of regulated prudence, and not say that if you have a role in regulating, you can't issue a digital commodity. I remain open to negotiation on this, but we need to do that. And it's not a novel concept, right? We are prohibited by law, a law that was put together in this committee, the Stock Act, from investing in IPOs. We can't do that. We are prohibited from having outside income in excess of $31,815. This is not a novel or exotic concept. And I think, unlike everything else in the bill, it's really simple and straightforward. And I think we're going to have no problem explaining this conflict of interest issue to our exuberant agriculture Democrats, because they may not have noticed that Section 208 of Title 18 imposes ethics obligations on everyone except the president and the vice president. So again, Chairman, I take no pleasure in this, but this is a gating item. We need this conflict of interest prohibition. So this amendment does that, and I hope that we can either pass this amendment or come to some agreement whereby nobody who is in charge of regulating this new instrument gets to issue one. I will yield back.
Gentleman yields back. Does the gentleman from Tennessee insist on his point of order? Gentleman withdraws his point of order, who seeks recognition. Ranking member of the full committee, Ms. Waters.
I move to strike the last word.
Gentlewoman is recognized for 5 minutes.
I sincerely want to thank Mr. Himes for his important work on this amendment. This amendment would prohibit federally elected officials from issuing or holding a financial interest in a digital asset. Importantly, this amendment provides that the Attorney General can bring a civil action to enforce this provision. Congressional Republicans have not addressed this pressing issue, President Trump's involvement in cryptocurrency. The environment we're in right now is very different from the one we were in a year ago. We have a captured SEC and a president that has a financial interest in an industry that Congress is currently trying to regulate. I'd like to point out that the launch of his cryptocurrency ventures have happened very brazenly, immediately after or before some type of regulatory or legislative decision was made. The president has made about $2.9 billion in his crypto ventures, according to reports, lifting his net worth to an estimated $5.6 billion. Members, this is ridiculous. Meanwhile, Republicans are cutting Medicaid, SNAP, and Social Security, all to make way for tax cuts for billionaires. This is unacceptable. I'm deeply concerned by the response from my colleagues on the other side of the aisle to this issue throughout his markup. Let me just say, even though it will not make a bit of difference to anybody, I don't know why any of us want to serve in the Congress of the United States if we cannot handle this. I don't know why any of us can hold our heads up high and say that we're legislating on behalf of our constituents. We're concerned about investors. We're concerned about consumers, that we don't blatantly look at and see conflict and pretend that it's not there, and we do nothing about it. Whether it was what was just alluded to by Mr. Himes, or whether it's just, not being able to, participate in an IPO, or whether it is insider training, that's the kind of stuff that we should be doing. But to sit here and not use the power that has been invested in us by the people that we represent and see this brazen corruption and not do anything about it just is startling. It is absolutely heartbreaking. It is something that I never envisioned would happen in the United States Congress. And I yield back to Mr. Himes if he wishes to close on what he has shared with us just moments ago.
Gentlewoman yields back. Yes. Gentleman yields back. Who seeks recognition?
Green from Texas.
Mr. Green of Texas is recognized to strike the last word.
Thank you, Mr. Chairman. Mr. Himes, this is a good piece of legislation. It is very straightforward. The language is easily understood. The relevant language reads, in general, a federal elected official may not, NOT, issue a digital asset or hold a financial interest directly or indirectly in an issuer of a digital asset. Now that gets right to the heart of it. And by the way, he includes members of Congress, if you'll read it in its entirety. This really is the means by which we can prevent persons from lawfully now, if we don't have this or something comparable to it, people will be able to lawfully purchase a digital asset lawfully, but in the process of doing it, they're actually providing some sort of emolument to a member of Congress or the president if we happen to be persons who can issue these digital assets. I don't know that it can get any clearer than this one, Mr. Himes. I think you really nailed it. And I absolutely will support this. This makes a lot of common sense, good sense. And I assure you, if we don't have something comparable to this, there will be many who will regret not having voted for this. I yield back.
Gentleman yields back, seeks recognition. Dr. Foster, recognized to strike the last word.
Thank you. Just a quick question. Is this intended to cover, collectibles and meme coins and so on?
It's not. And to be very clear, my objective here, because I know there's many people, including me, who would like to force the president to get rid of his meme coin. My ambition here is very narrow, which is simply to not allow issuance or meaningful ownership in an issuer of what we're working on here, a defined digital asset. I'll leave it to others to go after the memes and the collectibles. This is really not that ambitious. It's just to stop issuing conflict of interests in the asset that we're breathing some life into here.
And have you considered any de minimis exception to this?
The amendment doesn't contemplate a de minimis exception, but again,
I guess there must be some discretion on the part of the Attorney General to not go after small holdings, but it might be a useful addition. Anyway, this is a great amendment, and I intend to support it. And yield back.
Gentleman yield back. Gentleman yields back. Seeks recognition. There's no further debate. I recognize myself for 5 minutes. So the purpose of what we've been doing since 2023 is to try to find bipartisan consensus to create a market structure bill to capture a market that is utterly unregulated or confusingly regulated or asserted that we have just come in and register. And yet that's been litigated in the federal courts. We've had 3 years of litigation. We've had 3 years of our innovators going offshore, all because we have a highly unregulated market that has ambiguity in it, and this Congress, working together on a bipartisan basis, have worked to bring clarity to that market and rules of the road so that we can return investment to the U.S., we can reward innovation, we can protect consumers, we can offer opportunities to investors. And this was effectively made worse during the 4 years of the Biden administration that left it unregulated and attempted to rule by enforcement with no clarity whatsoever. So here we have it. No rules or vague rules, unenforced rules, rules people don't understand. And today I've heard extensive concerns about people who have issued meme coins. Are they covered by the bill? Are they regulated? Is there disclosure around meme coins? Are there rules around meme coins? Dr. Foster just referenced that. People suggest that people that offer wallets are somehow not regulated. People have offered that foreign investors are investing in crypto companies in the United States and that they are doing that without any oversight or regulation by the federal government. People have asserted that there's fraud being committed or manipulation of the markets or rug pulls or even charges of bribery, I've heard mentioned tonight, which is an impeachable offense. So all these things are being charged and levied, and yet every one of them is addressed precisely by the bills that this Congress has been debating. Both the Stablecoin Act and all the rules and ramifications of the design we had in Mr. Stiles' Stable Act, and each of these things is addressed in the Clarity Act. So when people say, I want this conflict removed, and they name a subject, that subject is addressed in this bill. So I want to thank my friend, Mr. Himes. No one has worked harder to get this legislation right on the structure and for the market structure bill or for our dollar-backed stablecoin bill. And I thank him for his hours and years of work and that of his staff. So first, let me thank him. Secondly, he offered at the top of his remarks that Section 202 has some opportunities for clarification, and we've been working with him today on that, and that is correct. I think we can find a very constructive spot there. But that's why we're all here today, is to create a fair, functional, forward-looking regulatory framework that captures everyone participating in it. The Clarity Act increases the protections for these markets and addresses all the issues I've heard my colleagues charge or concerns to them that weaken the market, that they have fear of, that consumers could be hurt, investors could lose money, and that people could defraud people. So these clear definitions, these lines of agency authority, the rules of the road for exchanges, brokers, dealers, other intermediaries are established in this bill, and they're established in a clear way. Everyone requires registration of the commodities and anyone using this digital asset market space. So everyone, regardless of their last name, is subject to the same oversight and enforcement under the requirements of this bill before us. And because of that, and the comprehensive nature that I think addresses every potential concern that people have in this bill about transparency and regulation, I oppose this amendment, and I urge people to support the underlying bill.
Will the gentleman
I yield back
yield?
the balance of my
Will the
time.
gentleman yield?
I've yielded back. Is there further debate? If not, the question now occurs on the amendment. All those in favor of the amendment shall be signified by saying aye. All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. I'm sorry? Mr. Himes has requested a recorded vote. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. We'll now move on to the next amendment. Who seeks recognition? Mr. Himes.
Yep.
Mr. Himes has an amendment at the desk. You know what the number is, Mr. Himes?
It's 17.
Himes 17, if we could pause for that to be distributed. Mr. Stile? Mr. Style reserves a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Himes of Connecticut, designated as Himes 17.
Will be considered as read, and the gentleman from Connecticut is now recognized for 5 minutes to describe his amendment.
Thank you, Mr. Chairman. And this is an area in which I think we made good progress. I still don't like Section 202 because it creates an exemption for issuance of digital commodities. But we had reached, I think, a pretty good agreement on this, making it small. But if I can refer back to the previous amendment, which I think is unfinished business, I heard the chairman say that everyone by name is prohibited from doing what I'm trying to do here, which is to issue a digital commodity. And I don't think the chairman is right about that. I think that because of the limitations of Section 208 of Title 18, the president and the vice president could still issue a digital commodity. So my offer to the chairman is, if the chairman will get us to a place where we can close that loophole, I will not go on about Section 202. Otherwise, I will explain why I think we should strike the section. And I'll yield.
Well, I invite the gentleman to offer his amendment.
Okay. So the idea here behind Section 202 is to create an exemption, which is not an unheard of concept in securities law. There are analogies, Regulation A, Regulation D, 144 and 144A, that provide for a lighter disclosure and regulatory and liability burden than full public registration. It's odd to create an exemption to registration standards for a completely immature and frankly non-existent market. Prudence would dictate that you create these exemptions once you have a history of trading so that you could look at how you might modify your disclosure and other liability regimes. Putting it in the initial regulatory legislation is an imprudent idea. I heard a Cravath lawyer in the hearing, I guess, say that the liability standards and other standards were consistent with Regulation A. That's not true. Regulation A requires audited financials to be provided. This exemption under 202 does not. Regulation A requires pre-clearance by the Securities and Exchange Commission. This does not. Regulation A requires disclosure, ongoing disclosure. This exception would require disclosure simply for 4 years. And this exemption is also very unclear about whether state regulators, as they are empowered to do under Regulation A, can maintain their usual anti-fraud surveillance and actions. Regulation A also limits, and this is the consumer protection part of it, the investment amount that an individual can make to 10% of their annual income. That's designed to keep people from hurting themselves too much. This exemption provides no limits to what somebody can invest in these immature tokens in an immature market. In FIT 21, which I supported, we put a limit on the amount that an individual can invest of 10% of income. So for all these reasons, I believe that we should strike this section. If we can get there on conflicts of interest, if we can get there, let's establish the market. Let's develop some history and data, and then start thinking about exemptions. That's the reason that this amendment seeks to strike Section 202. With that, I yield back.
Does the gentleman from Wisconsin insist on his point of order? Gentleman withdraws. Who seeks recognition? Gentlewoman from California.
Thank you very much. I move to strike the last word. This amendment strikes Section 202 and the deeply concerning exemptions that it contains. As drafted, Section 202 would enable token issuers to raise capital if they, quote, intend, end quote, to build a mature blockchain. These crypto companies would then raise $75 million per year for 4 years from the public. Additionally, 4 years is an incredibly long time during which anyone can claim they intend to become a mature blockchain while doing little towards that goal. This approach is overly permissive compared to other exempt offerings like Regulation A. To make matters worse, this bill does not place any restrictions on general solicitation or accredited investor status, or concentration limits on individual ownership. What is most concerning is that we would enable any issuer to raise capital from retail investors without requiring that any of the funds actually go to building the blockchain. You could buy a house in Cancun or use the funds to boost your own coin. It's not surprising that this provision also doesn't require audited financials. Mr. Himes is right to strike Section 02. I yield back.
Gentlewoman yields back, seeks recognition. Seeing no other speakers, I recognize myself for 5 minutes. Well, as the gentleman from Connecticut certainly knows, I'm very eager to continue to work with him on Section 202 and the exemption matter. I would argue we did that very successfully working together in 2023 and 2024 when we crafted an exemption in our previous bill, FIT 21, that was acceptable to the gentleman and both to the majority and the minority, as it attracted some 71 Democratic votes on the House floor. This exemption in Section 202 of the bill that you're proposing to strike is actually narrower than the one that was included in FIT 21. It does not undermine but strengthens our capital market laws by recognizing investment contracts involved in digital commodities should be subject to regulation by the SEC, including robust disclosures to address information asymmetries between issuers and purchasers, insiders, and the average purchaser. Section 202 addresses the specific risks of owning digital commodities and requires those to be described in disclosures. And there are financial disclosures as well required in the disclosures for the proposed exemption as well. The bill provides the SEC full authority if there are any violations of these requirements. And as I noted at the beginning, more than happy to work with you and other colleagues on both sides of the aisle to reflect changes to address any additional concerns you have, like the ones you referenced about investor size, exemption offering size, or the qualifications of an investor. So I look forward to working with you on that. And because I'm willing to work with you on refining Section 202 and making it as strong as we successfully did in FIT 21, I actually would urge an amendment I would urge a rejection of this amendment, striking the entire section, and I yield back the balance of my time. Is there further debate? If there's no further debate, the question now occurs on the Himes amendment. All those in favor of the amendment shall say by signifying aye. All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have the amendment is not adopted. Mr. Himes has requested a recorded vote. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5, Rule 3 of the committee rules, further proceedings on the amendment are postponed. We'll now move to the next amendment.
I have an amendment to this.
Mr. Himes has an amendment to the desk. Do you know the number, sir?
Do we have a number on this?
For left-hand corner of the paper, maybe, or?
20, I believe, Mr. Chairman.
See if you have Himes 20. We'll pause while that amendment is distributed. Does the gentleman from Wisconsin reserve a point of order? Gentleman reserves. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Himes of Connecticut, designated as H.R. 3633 T20.
Without objection, the amendment is considered read, and the gentleman from Connecticut is recognized on his amendment.
Thank you, Mr. Chairman. Mr. Chairman, a couple of the challenges in this bill, and I will continue to say challenges, is the fuzziness associated with some of the key concepts. So in Section 202, which we just disposed of, there is this concept of intent. The intent of the issuer matters a lot to whether they can take advantage of the exception. The maturity of the blockchain is also a novel concept here, which is ambiguous. And one of the key hooks our committee has with digital assets under this bill is the SEC's ability to determine whether a blockchain is in fact mature. This is basically the last opportunity the Securities and Exchange Commission would have to review the characteristics of tokens in the blockchain upon which those tokens were issued. Once a blockchain is deemed mature, assets that are either tied to that blockchain or trade on that blockchain would no longer be regulated by the SEC, but would transfer to the much smaller CFTC. The Clarity Act, Section 205, creates a mechanism at the SEC to assess the maturity of a blockchain. And to be fair, the bill does have some requirements placed on digital commodity issuer, related person, affiliated person, and other things to help the SEC make that determination. However, once an organizer of the blockchain submits the limited set of information, the SEC has only 60 days to overcome a built-in presumption of maturity. If the SEC fails or doesn't have enough information or time to overcome that built-in presumption, the bill then says the blockchain is mature and any assets issued on it no longer under the SEC's regulatory remit. But that leaves all kinds of lingering questions. What resources would the SEC require to adequately review the potentially large volume of self-certifications for mature blockchain systems within the proposed 60-day timeframe? Could the SEC make the determination if there is no way for the SEC to confirm whether the details included in the self-certification are true? Would the significant attrition of SEC staff over the past few months exacerbate this issue, and what staffing resources would be needed to adequately comply with this 60-day clock? Section 205 states that a condition for a system being deemed mature is that, quote, no digital commodity issuer, digital commodity related person, or digital commodity affiliated person beneficially owns in the aggregate 20% or more of the total amount of units of the digital commodity. How would the SEC verify such ownership thresholds for globally distributed digital assets that may be spread across anonymous addresses? It would have helped to have the SEC here to ask them whether they have enough information from Congress to implement this requirement, but alas, this bill is moving very fast. The questions I just raised tell one central point. The SEC needs real authority to require information and would need far more time to determine the maturity of the blockchain. Again, a novel concept. The SEC should not be forced to default into a decision that may be contrary to the interest of crypto investors or blockchain innovators. So my amendment strikes the unworkable presumption mechanism and instead, as is traditional, authorizes the SEC to require whatever information it needs to make a determination that satisfies the Commission's statutorily set mission. I ask members to support this amendment, and I yield back.
Gentleman yields back. Does the gentleman from Wisconsin still insist on his point of order? Gentleman withdraws. The ranking member of the full committee, Ms. Waters, you're recognized. Strike the last word.
I move to strike the last word. Thank you, Mr. Chairman. I strongly support Mr. Himes' amendment. He is absolutely right. If this bill does not get the so-called maturity determination right by the SEC right, our committee, through the SEC, would essentially lose all our ability to oversee the crypto markets. As you know, I have requested the SEC's views on your bill, and my staff has repeatedly requested fulsome technical and impact analysis from them, and they have not provided that help. A week ago, I sent a letter to SEC Chairman Atkins asking him to provide a written technical and impact analysis of the bill. He has not replied. Mr. Chairman, I ask unanimous consent to enter that letter into the hearing record.
Without objection.
The Commission's expert analysis of the Clarity Act and fulsome answers to the questions I raised in that letter are necessary for the American people, through their representatives in Congress, to determine whether this legislative proposal addresses the unique risk related to crypto and our securities markets, and whether this bill would facilitate the most conducive environment for responsive innovation. The U.S. Securities and Exchange Commission has played an indispensable role in setting and strengthening investor confidence, which has been the essential ingredient of capital formation and economic growth. The reason I bring up this letter is because in that letter to the SEC, I raised the very issue related to mature blockchains. It is my view that the mechanism available under the bill favors large crypto players and disfavors crypto investors. This is why Mr. Himes' amendment is needed. It strikes the impossible process under the bill and instead fully authorizes the SEC to decide whether a blockchain is mature. I support this amendment, and I yield back.
Gentlewoman yields back. Who seeks recognition? The gentleman from Wisconsin.
Thank you very much, Mr. Chair. I appreciate my colleagues' serious engagement in the details of the text. Mr. Himes has been a strong partner in trying to reach resolution in a number of these areas, and we've had really constructive dialogues with him, as well as a number of other members across the aisle. Nonetheless, I believe the proposed amendment to Section 205 as written would undermine the clarity our framework is working to provide. The rebuttal presumption in the process for submitting a certification to the SEC, the amendment would strike, is the same process that received bipartisan support in FIT 21 and includes a stay option where the SEC needs more time and information. I even believe my colleague was the one to possibly recommend the 60-day timer in FIT 21, if my memory serves correctly. In addition, the deemed maturity test is not an exclusive means of certifying maturity. Maturity is defined in statute. A blockchain is not controlled by a person or a group of persons under common control. The SEC, under Clarity, would issue rules on how to demonstrate maturity. We codify, there might be a live mic there up at the desk. But, Mr. Chairman, we codify one pathway to demonstrate maturity, which provides a high bar for demonstrating that principle, a bar that borrows from key concepts related to decentralization in FIT 21. In addition, I'd like to address a possible misunderstanding. The maturity test is not about separating a digital commodity from a security, but about which disclosures by the digital commodity issuer are appropriate and what restrictions apply to insider sales. This section would, in summary, I appreciate the intent of my colleagues' engagement on this, but for the reasons as stated, I would recommend.
Would the gentleman yield?
I will. I yield to the chair.
Hey, thank you for yielding, and I want to thank again Congressman Himes for bringing up another issue that was something that he and I worked on with Mr. McHenry and others in FIT 21. And I agree with the gentleman from Wisconsin's memory. I believe it was the gentleman from Connecticut's efforts to select 60 days as the SEC review time in FIT. Under FIT, we proposed that the commission had the ability just to ascertain whether the blockchain was decentralized, fully functioning, or not. And here, it's a more sophisticated approach, but I think it clearly accomplishes the same mission, which is we offer a statutory set of definitions of what a mature blockchain is. We allow the commission to write the rules around that. We allow the commission to offer other considerations to determine whether or not a blockchain is mature or not. And we lay that out, and we use the gentleman's same time frame of decision-making of 60 days. We also, in this section, that's for the most part Section 205. Section 204, we talk about another issue that's connected, which is insider or related party sales and how we structured that. Again, keeping with the corporate finance approach, I would say that Mr. Himes and I and others took in FIT 21. So I appreciate the gentleman's amendment. I would recommend a no vote on the amendment, but I recommend that Stile, Hill, and Himes continue to work on Section 204 and 205 and look for any other ideas that he has to make the bill stronger as we proceed.
Will the gentleman briefly yield?
I will yield.
Thank you, Mr. Stile. You're both making the point that you're looking back at FIT 21. Fair point. Fair point. But it is also true that the facts have changed pretty dramatically. And I promise not to dwell on what has caused thousands of minutes to be expended here, so I'm just going to use an analogy. In 1992, Hurricane Andrew hit Miami. So we thought about insurance and other safety protocols differently in 1993 than we did in 1991. I yield back, or I yield to Mr. Stile.
I yield back.
I'm from Wisconsin, yields back. I thank the gentleman. Is there further debate on, Dr. Foster, you're recognized to strike the last word.
Yeah, I'd like to just quickly focus on something that Representative Himes raised but skipped over rapidly, which is that any limitation on a concentration of ownership or concentration of control is fundamentally incompatible with anonymous self-hosted wallets. This is an issue that I have been raising for years. I have gotten no answer in any of the proposed legislation on this. It's fundamental, and it is just another example of a situation where there really is not an alternative, if you want well-regulated and well-functioning markets, to have some regulator somewhere that sees the true identity, that is capable of seeing the true identity between all market participants. Simple point, no answer for years here. I yield back.
Gentleman yields back. Is there further debate on Mr. Himes' amendment? If there's no further debate, the question now occurs on the Himes amendment. All those in favor of the amendment shall signify by saying aye. Aye. All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. Gentleman from Connecticut requests a recorded vote. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. We'll now move to the next amendment. Someone seek recognition? Mr. Foster? Mr. Foster has an amendment at the desk. We'll wait for that to be distributed. Mr. Stile? Gentleman reserves a point of order. I sure will.
Yeah, it's number 38.
Foster 38 is what we're looking for. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Foster of Illinois, designated as Foster 38.
Without objection, the amendment is considered read, and the gentleman from Illinois is recognized for 5 minutes on his amendment.
Thank you, Mr. Chairman. And as you pointed out, Section 505 of this bill directs a study of the risks of DeFi, and this amendment directs a study of the solutions, not only for DeFi, but for blockchain assets generally. So it directs the SEC, CFTC, FinCEN, and other relevant regulators to conduct a study of using what the legislation calls digital identity passports to generate the sort of controlled anonymity that history and common sense have proved essential for well-regulated markets and to prevent illicit activity. The increasing use of digital assets across the economy has led to both opportunities and risks for consumers, and I believe Congress should respond to these innovative technologies and modernize the regulatory framework. This includes not only responding to the offering and sale of new financial products, but also taking advantage of new technologies to improve consumer protections and streamline regulatory compliance. I believe that one way to achieve these goals is through application of state-of-the-art and privacy-preserving digital identity technologies. Not only can advancements in identity verification streamline regulatory compliance for KYC and investor accreditation checks, they can also improve fraud protection and reduce friction for consumers that are trying to access innovative financial tools. This amendment would require the CFTC, SEC, FinCEN, and other financial regulators to conduct a study on blockchain applications of digital identity passports. Digital identity passports could be attached or embedded within digital asset wallets at the request of the user. While a user's identity would not be visible on the blockchain, digital identity passports indicate that the necessary KYC and other regulatory checks have taken place, simplifying future compliance obligations and allowing for accountability of bad actors. This amendment would require agencies to study potential applications of identity passport technology in the digital asset ecosystem and their suitability for use in regulatory compliance. Regulators will report on the necessary cybersecurity, privacy, and interoperability requirements, as well as ways to prevent the theft or to track down the thieves following unauthorized use of digital assets. Lots of users, I believe, will want this. And I believe there'll be a real market for digital assets where if you get hacked or defrauded, that you have some hope of getting your asset back. In fact, I don't see any way to resurrect, for example, the collapsed markets in NFTs or any other thinly traded digital asset unless market participants can get some assurance that the trades that they can see on the blockchain are anything but an open sewer of wash trades, front running, and other abusive activities. The amendment here also tasks the agencies with considering the potential obligations for issuers of such credentials and with developing recommendations on whether and how to utilize identity passport technology within the digital asset framework and potential safeguards that are needed to promote privacy, national security, and the integrity of digital asset markets. This technology offers solutions to many of the illicit finance and market integrity concerns that have been raised by members of this committee, and I believe this study will shed light on specific potential solutions within the digital asset ecosystem. So I encourage my colleagues to support this amendment, and I yield back.
The gentleman yields back. Does Mr. Stahl insist on his point of order? He withdraws his point of order. The gentlewoman from Texas, Ms. Garcia, is recognized to strike the last word.
No confusion. Thank you so much. And I move to strike the last word.
Recognized for 5 minutes.
I appreciate Representative Foster's amendment on digital assets and digital identity technologies. He has been the numero uno, congressional thought leader on the issue, working with technologists, industry participants, regulators, and others to consider how identity can be developed to enhance and secure financial services and national security while protecting the privacy and cybersecurity of individuals and their transactions. His amendment asks Treasury to lead a study on the issue, working with stakeholders in reviewing the technology options, like zero-knowledge proofs that are being developed now, especially for digital asset activities. With this input, Treasury would tell Congress what it needs to facilitate the incorporation of these important technologies. This is an appropriate addition to this bill, and I urge my colleagues to support it. With that, I yield back unless Mr. Foster needs some additional time. He does not. We yield back.
The gentleman yields back. The gentleman from Wisconsin is recognized to strike the last word.
Thank you very much, Mr. Chairman, and I appreciate the spirit in which the amendment was offered. Mr. Foster and I have had some interesting conversations broadly on this topic before, but including the recognition of Americans' privacy is important. I do think the study places sufficient emphasis on necessary. It doesn't place sufficient emphasis on necessary privacy protections. And so if we're thinking down the road, if we create the conditions that will enable regulators to make it prohibitively difficult or impossible for consumers to transfer their own digital assets to self-hosted wallets without installing surveillance tools, we effectively force them into third-party custody arrangements, exposing them to additional risk without offering a choice. It would undermine the fundamental promise of blockchain technology and would threaten America's property rights. So if we step back under the Clarity Act, in existing law, money laundering is illegal, and the Clarity Act will introduce a more robust compliance with BSA requirements. While I respect the intentions and spirit in which this study is offered, I have concerns regarding the implementation of the study and the insufficient emphasis placed on minimizing intrusions on the privacy of law-abiding users. And so I will recommend a no vote on the amendment. Mr. Chair, I yield back.
Gentleman yields back. Is there further comment on Mr. Foster's amendment? There's no further debate. The question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Opinion of the chair, the nays have it. Nays have it. The amendment is not adopted.
Request a recorded vote.
Gentleman from Illinois requests a recorded vote. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. We'll now move to the next amendment.
I have an amendment at the desk.
The gentleman from Illinois, could we have, do you see the number?
T10.
T10, Foster T10. We'll pause while that amendment is distributed. The gentleman from Wisconsin does reserve a point of order. Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Foster of Illinois, designated as H.R. 3633 T10.
Without objection, the amendment is considered read, and the gentleman from Illinois is recognized for 5 minutes to discuss his amendment.
Thank you, Mr. Chairman. As a member of this committee, I've been proud to support several pieces of legislation over the years to address financial scams and exploitation, particularly those targeting elderly Americans. Romance and investment scams, impersonations of loved ones, and other deeply intricate tricks are used with great success to con Americans out of tens of billions of dollars every year, with significant amount of those losses being driven by foreign criminal organizations. A growing proportion of those funds stolen by these groups are taken with the help of Bitcoin ATMs. According to the FTC, fraud losses at Bitcoin ATMs increased tenfold from 2020 to 2023, topped more than $65 million in the first half of 2024 alone. While some Bitcoin ATMs provide a degree of protection against this sort of abuse, dedicated scammers go to great lengths to circumvent those protections, with some spending significant time coaching their victims on ways to avoid raising the suspicions of their banks or retirement companies. Far too often, these scams target hard-earned retirement savings of senior citizens. The FTC found that people over 60 were more than 3 times as likely as younger adults to report a loss using a Bitcoin ATM. Bitcoin ATMs allow victims, often with the step-by-step instructions of the scammer, to purchase and deposit cryptocurrency that is then deposited directly into the scammer's wallet. Many times, the victim will visit multiple machines over several days or weeks, depositing thousands of dollars, believing that doing so will help them to achieve the scammer's fabricated goal. You know, I know of a bar owner in Illinois who was happy to be paid a couple $100 a week to have host a Bitcoin ATM at his bar until he saw the stream of elderly scam victims, often crying as they poured their life savings into the scammer's crypto wallets. The anonymous, irreversible, and untraceable nature of digital asset transactions means that the funds are stolen. The funds that are stolen can be sent anywhere in the world almost instantaneously, funneled through mixers to evade law enforcement, and ultimately cleaned to support the criminal networks that often perform these scams on a mass scale. This can't be done with cash, and that makes all the difference. As we consider this legislation, I believe that we can and should do more to protect older Americans from those risks by providing them with more information and resources about these crimes. My amendment would first require the SEC and CFTC to establish a senior scam hotline to provide assistance to older Americans who believe they may have been victim of fraud, scams, or other abuses related to digital assets. And secondly, it would require that Bitcoin ATMs display information about that hotline clearly on all of their machines. By placing the information and resources in plain sight at the last point before their money can be stolen, we may be able to encourage more victims to pause and reconsider that they are potentially being manipulated, while at the same time giving them an option to ask for help. While I don't believe this amendment will eliminate all risks of financial scams, this is a growing area of concern, enabled by crypto, and I believe that this amendment would be a reasonable step to reduce the use of digital assets by bad actors. Thank you, Mr. Chairman. I yield back.
The gentleman yields back.
I remove my point of order.
I thank the gentleman. Ms. Garcia of Texas, you strike the last word.
Thank you, Mr. Chairman. Earlier this year, in committee testimony, we heard that, quote, in 2024, over 80% of total crypto scam profits can be attributed to pig butchering and high-yield investment scams. Pig butchering, also referred to as investment, confidence, or romance scams, target and build relationships with individuals. This subclass of scam activity grew over 40% in 2024 based on total crypto funds received by wallets identified as belonging to entities operating pig butchering schemes, end quote. These schemes almost always involve digital assets, and the victims tend to be older Americans, isolated and finding friendship or even love online and via text, groomed and lured into a trusting relationship that ends with one or more pushes to send significant amounts of funds to the scammers. Cryptocurrency, automated teller machines, ATMs, are essential to many of these crimes. After victims are talked into withdrawing their funds, they're directed to these ATMs where they may stand for literally hours with the scammers on the phone, pushing their funds into machines that will convert their dollars into digital assets. This amendment would add labels to these ATMs to warn of this type of fraud. The labels would also provide the number to an elder fraud hotline to assist victims. Hopefully, this will help potential victims see through the schemes that are stealing their life savings. I urge members to support this amendment, and I yield back the balance of my time.
Gentlewoman yields back. Gentleman from Wisconsin is recognized to strike the last word.
Thank you very much, Mr. Chairman. Frauds and scams are a broad problem spanning multiple industries. I appreciate maybe the intent of the amendment, but I feel like we're now entering a phase here where amendments are being tossed onto the bill rather than looking at the substance. And so I appreciate the nature broadly of looking at scams, but what we're looking at here is legislative text that goes beyond what's necessary in the bill. The author is correct. Often scammers are using manipulative techniques, romance scams, attempts to deceive their target. Absolutely, we need to better educate all Americans about how to avoid scams and better coordination across industries, including telecoms, social media platforms. In other words, it's absolutely an area worthy of this broad committee to look to work on. While I think there's broad agreement in the room that scamming and defrauding, in particular senior citizens or any medium and in any context, is not only illegal but wrong, I think it's a bit unusual to single out specific technology like Bitcoin ATMs in the way that the amendment seeks to do. Notably, I think in the Clarity Act, the actual underlying bill here, we broadly target fraud and do so through two regulators, the SEC and the CFTC. And so the underlying bill makes great strides in addressing fraud, and I would encourage all members to vote for the underlying bill, the Clarity Act. I don't think this amendment is necessary in the bill, but I do think it's a worthy area for this committee to continue to explore about how we prevent people from being victims of financial fraud. Mr. Chairman, I will yield to you.
Yeah, if you would. I want to thank my friend from Illinois for the topic. I share the gentleman from Wisconsin's concern about singling out the technology as it relates to Bitcoin ATMs. And I think it could be constructive for the gentleman to work on just general senior advice in the category, because we have this across all financial services, as the gentleman knows. Very, very specific rules about seniors and under FINRA and under the banking rules. So look forward to working with the gentleman on that, but I'd recommend a no vote on the amendment as is. And I yield back to the gentleman.
And I yield back.
Is there further discussion or debate on the amendment? If no further debate, the question now occurs on the amendment from Dr. Foster. All those in favor of the amendment shall signify by saying aye.
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 All those opposed signify by saying nay. Nay. Depending on share, the nays have it. The nays have it. The amendment is not adopted.
Request a recorded vote.
The gentleman from Illinois requests a recorded vote. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. We now move to the next amendment.
I have an amendment at the desk.
Mr. Foster has an amendment at the desk. We'll pause for it to be distributed. You know the number, sir?
Foster 036.
36. We'll pause. Gentleman from Wisconsin reserves a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 3633, offered by Mr. Foster of Illinois, designated as Foster 36.
Without objection, the amendment is considered read. The gentleman from Illinois is recognized for 5 minutes to discuss his amendment.
Thank you, Mr. Chairman. In recent years, we've seen an explosion in the number of young people engaging in financial markets of all kinds. Last year, J.P. Morgan Chase found that the monthly share of individuals under age 40 transferring funds into investments has more than tripled over the last decade, far exceeding the number of older individuals making similar contributions. The World Economic Forum found that Gen Z is investing earlier than their predecessors, making investments in early adulthood at twice the rate of millennials, and triple the rate of Gen X and nearly 5 times the rate of baby boomers. This growth in retail participation in markets has been accompanied by an increase in the number of people, sometimes called financial influencers, providing investment advice on social media. Keith Gill, screen name Roaring Kitty, inspired investors on Reddit to pile into GameStop, one of the most, I guess, spectacular misallocations of capital in human history. Other Kim Kardashian, Lindsay Lohan, Jake Paul, and other celebrities that I know even less about have been sued for promoting digital assets without telling investors that they were being paid to do that promoting. And thousands of other financial influencers put out financial advice on social media that may lack transparency about conflicts of interest. These influencers are getting attention too. In March, the Federal Reserve Bank of Philadelphia published a survey that found nearly 40% of Americans between the ages of 18 and 25 said they use social media for financial advice. Last December, the SEC's Investor Advisory Committee met to discuss recommendations for the protection of investors and in their interactions with financial influencers. My amendment incorporates several recommendations approved by the IAC to establish a financial influencer task force. This amendment requires the SEC and CFTC to jointly establish this task force, and in consultation with the FTC and relevant state regulatory bodies, this task force will aim to gather data and provide guidance to investors, financial influencers, and social media companies about sharing of investment advice online. This task force will gather and publish data on complaints, provide guidance, and engage with financial influencers on relevant securities and commodities laws, which we're in the process of changing here, encouraging market intermediaries to provide training and oversight of affiliated influencers, educate investors on the risks of relying on social media for financial advice, evaluate the effectiveness of relevant federal laws, and engage with social media companies on controls for financial advice on their platforms. The Financial Influencer Task Force will also engage with regulatory bodies in foreign jurisdictions with respect to baseline standards for the provision of financial advice on social media. This amendment also includes a 5-year sunset provision. I believe this amendment will improve public-private coordination of efforts to protect investors from scams and help better inform market participants about potential risks from seeking financial advice online. So I encourage my colleagues to support this amendment, and I yield back.
Gentleman from Illinois yields back, who seeks recognition.
I would draw my.
Does the gentleman insist on your point
of order?
The gentleman from Wisconsin withdraws the point of order. The gentlewoman from Texas is recognized.
I move to strike the last word.
You're recognized for 5 minutes.
Thank you, Mr. Foster, for raising this important and long overdue amendment that establishes strong oversight and takes necessary steps to address potentially harmful market conduct arising from influencers who promote risky assets. Specifically, this amendment directs the SEC and the CFTC, along with the FTC and state regulators, to establish a financial influencer task force. Under the Biden administration, we saw the SEC crack down on cases where influencers and high-profile celebrities failed to disclose payments they received for promoting crypto products, misleading investors into believing their endorsements were independent and impartial. I think we all saw some of the ads, and I remember seeing even some billboards at airports. I want to thank Mr. Foster for addressing these concerns with his amendment, and I urge all my members to support this amendment, and I yield back.
The gentlewoman yields back. The gentleman from Wisconsin is recognized.
Thank you, Mr. Chairman. Similar to the last amendment, while I think there may be some good intentions here on concerns underlying this proposal, the topic is at most ancillary consideration when it comes to what we're here to debate today, clear rules of the road for digital asset market structure. Moreover, I have some specific concerns about the mechanisms and obligations under this amendment. It's not immediately clear what role brokers, dealers, investment advisors would or should have in policing activity on behalf of the task force. But in large part, I don't think this is focused on the true underlying nature of the bill. It may have some merit for